Caris Life Sciences ringing the opening bell. Bring your daughter to work day. I love to see that. In terms of the stocks to watch, there is a lot going on under the hood, so to speak. So it's not just about the indexes. Katie Greifeld, what are you looking at? Specifically,
I'm looking at the chip stocks. You're going to find a lot of action when you take a look at Marvell. You're also seeing some movement to the upside as well in Broadcom and Advanced Micro Devices, AMD. Marvell moving higher after a whole wave of analyst upgrades. It had an AI event. The sell side really seemed to like that. Broadcom and Marvell, or AMD rather, continuing to build on the rally that we've seen over the last few days. So keep an eye on those chips here, Matt.
All right, we will keep an eye on those chip stocks. Don't ever want to get too far away from them. I have wanted in the last 10 years to get as far away from stablecoins as possible, but you can't look away from this because Circle is up, what, 350% since its IPO, which was less than 14 days ago, less than 2 weeks ago. So amazing run up there. As I've said, Katie, they raised $1.1 billion in their IPO.
I know.
And if they'd only waited 2 weeks,
they should have had you.
They could have made that 4. They left so much money on the table, is my point.
They should have had you consulting on this IPO, but it is amazing to see this post-IPO pop. It's beyond that even now. It's going to be interesting to see if it cracks open the window even wider for IPOs, but specifically for crypto IPOs. But Circle shares, man, just have been stunning.
It's just, to me, it's a philosophical question, right?
You have a lot of those.
We celebrate these massive gains after an IPO, but it's money that they could have to invest. All right, let's get back to John Stoltzfus, Oppenheimer, chief market strategist, here on the set with us. He is bullish, and on a day when the Fed is expected to do nothing and maybe even show a dot plot with only one cut, how much does that matter to your forecast?
Not a heck of a lot. We really, I think I'm one of the few strategists on the street for a long time now has been a fan of the Fed. I think Jerome Powell has been doing the right thing. Once he got away from being behind in terms of where inflation was going and that whole transitory business, when you consider 11 hikes, and then 9 pauses after that with 3 cuts so far and no recession. It's been remarkable. He's really been able to deliver the goal of the Fed, whether it's providing an economy that grows at a sustainable pace without producing untoward levels of inflation. And the other side of it is essentially not disrupting the job market so that you have full employment, somewhere between 3 and 4.2% unemployment.
Yeah, the way that I've been thinking about the Fed, it feels like almost a neutral force on this rally, not doing too much in the way to stoke it, not doing too much to get in the way either. Does that argument hold water with you, or are there any nuances that you would add?
Well, I would say, we're looking for 2 cuts this year, and we don't think we're going to get anything, today, but we think that probably in September, there's a good chance, another what we call a down payment by the Fed to show the market, in effect, that indeed they are looking to cut that benchmark rate somewhat. But I think we're closer to really interest rate normalization. I don't think we're going back to free money unless we have some kind of a crisis occurring.
Right.
And it doesn't appear to be. The economic data, whether it's related to the consumer or to business, overall looks like it's slowing, but it would be expected after all that's occurred and all that's out there. We're right about where we should be, is what we think when we look at it. And it doesn't look recessionary, but it looks like we kind of muddle along here, and gradually we get a sustainable pace in the economic recovery process from all that we've been through. That will likely see opportunity for stocks to move higher. But we want to keep our expectations right-sized in here. You don't want to be shooting for the moon.
By the way, I was thinking, yesterday I was listening to Mike McKee talk about President Trump has demanded that Powell cut by 200 basis points. And to be fair, President Trump knows more about interest rates than the Fed or Jay Powell or anyone else.
That's what he says.
According to himself.
That's what,
right.
But if Jay Powell were to capitulate and cut 200 today, would that be good for stocks? Would we see the 10-year yield actually come down on that? Is that how that works?
It would really depend upon the way the traders would react, and they might initially do it, and then so they might all of a sudden just boosts the price of stocks up and increase the price of bonds. And then I think they would probably pause and say, wait a minute, is this an Arthur Burns moment? You know, the predecessor of Paul Volcker, who failed to curb inflation. So I think that's what, you know, I think Powell is really looking here to preserve his, really to build his legacy as Fed chair. I don't think he's looking at another term. I don't think Trump is going to.
I
don't think so.
Yeah.
But it's the whole thing is, you know, it's people who are prone to leverage, and of course builders and realtors are prone to leverage, naturally want lower rates. But if you look at where we are today, I mean, we're just getting down to what the last inflation numbers that we saw last week, what were they? They were on the 2.6s, 2.8s is what they were looking at when they came in, and that's getting close to the 2, but 2% remains elusive, and I think that it will remain elusive for quite a while because it takes a while to wash out inflation. Remember what happened to Alan Greenspan? He fought inflation back and forth for almost 15 years for his term at the Fed. This time it should be a lot shorter just because information is disseminated much quicker, and I think the Fed has a better handle on it.
Well, I appreciate the reminder that President Trump is a New York real estate guy. Of course he wants lower rates. I want to talk a little bit about money market funds, though, because, you know, you talk about, okay, maybe we get 2 rate cuts this year. Maybe that kicks off in September. You think about the $7 trillion that's sitting in money market funds, earning 4%. Is 2 rate cuts enough to move that money out of these funds?
I think it's certainly going to move a good portion of it out because there's still people hiding out in the money markets. But I think overall, just what Eric Balchunas has said overall in that whole drawdown that we had earlier this year, the private investor keeps buying, and I think it's not so much that it's not an irrational exuberance. It's beyond. That kind of thinking. It's actually people are concerned that Social Security will not provide the same portion of retirement income that it once did. I don't think anybody thinks it's really going away. But with the end of, you know, over the last 30 years, you had the end of defined benefit pension plans.
Right.
And now you have
RIP.
Yeah, and with what we've got, it's people have to act more like their own pension plan. And as that, they really are you really see it when you speak to private investors. That's why so many people are, I think why the multiples are as high as they are in large cap stocks. Is not irrational exuberance. It's a supply and demand question. You know, Yardeni talks about the Wilshire 5000 not really having enough stocks that qualify to be in that index because private equity has taken so much out of the public markets.
Yeah, it's wild. Companies aren't going public.
It's demand. You know, it's not craziness. And if you look at the performance this year of the sectors, well, from the lows. It was predominantly tech, communications services, industrials, financials, and the industrials and the communication services, tech, and what the heck else?
Perhaps utilities.
Well, materials jumped too. But from the peak, the only 2 sectors that are up as of last Friday were industrials and utilities.
Right.
The Utes. I mean, you look at that. You got it's a bifurcated gain. You know, everything else is still negative from that peak.
Well, John, we have to leave it there, unfortunately. Really appreciate the time this morning. That is Oppenheimer's John Stolfus. And let's look at some of the bifurcation in this market right now. When you take a look at the S&P 500 here, that is the SXXP, not the S&P 500. But hopefully we can bring up the S&P 500 because you have something interesting happening under the surface right now. We're going to get that up. You can see that there's more gainers than losers right now. 300 names in the green. Up at the top, you have Tesla, the biggest weight to the upside on this market. Maybe the banks waking up to that reporting from our team at Bloomberg News that the Fed and other regulators are looking at easing SLR rules. You can see JP Morgan up 1.25%. Small moves overall, and it's a similar story when you take a look at the downside as well. NVIDIA, your biggest weight on this index. Microsoft trading spaces there. Eli Lilly and Zoetis. Zoetis hit with a downgrade this morning. Let's take a look at the sector level. It's pretty close to an even split, but you can see that it's actually moved in the minutes since I last checked. Energy up at the top here, up 0.5% or so. Consumer discretionary, the banks waking up once again. You take a look at what isn't doing too hot this day. You have technology and healthcare down at the bottom. NVIDIA and Eli Lilly are your weights there, Matt Miller.
All right, so we do have then some gains right now on the S&P and the Euro Stoxx 50. The Stoxx 600 we know has fallen and is currently down in the session. After a year and a half of back and forth, the president finally agreed to sell U.S. steel to the Japanese. The Nippon Steel takeover is finally done. Those companies announcing the acquisition earlier this hour, and if you type X equity DES, you can see that it's no longer trading. Bloomberg's metals and mining reporter Joe Doe has been following all the details. And Joe, this looked like an acquisition. It looked like the president wouldn't allow the sale of U.S. steel to the Japanese. Now he has. Why?
Yeah, I mean, listen, I had a text message right before we got on here from a source who has been on this for 18 months and said, what a ride. Ultimately, what happened was the president of the United States came in and struck a deal with Nippon Steel, making more and more demands, as we understood it through reporting since February, that ultimately came down to an additional $14 billion investment promise, in addition to the $14.1 billion tie-up. There's a point at which I think the president of the United States and his team looked at this and said, great, if they're going to continue to give us more and more in terms of investments, that's good for jobs, that's good for steel production in the United States. And one of the big ones here was the golden share, which we now have confirmation. The golden share does give a significant amount of power to the president of the United States. And it's not just Trump, it is in perpetuity. So we're going to see where that goes. I do think that opens up a whole new can of worms. Many people have been kind of questioning whether it would be an actual golden share. It's not an equity stake. But the fact that the president of the United States has a say in things like production cuts and capital investments and whether or not they can move the headquarters somewhere else is an interesting one that this steel industry in the United States is going to have to keep an eye on for the coming years.
All right, Joe, really appreciate your reporting. This deal that finally got done, closing a chapter there. That is Bloomberg's Joe Doe, who has been following it closely. Now, coming up, Slide Insurance making its NASDAQ debut after an upsized IPO. We speak to Bruce Lucas. He is the company's founder and CEO. Up next. This is Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
Do we
the
have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang. Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
For the fourth time in 2 months, an insurance company is hitting the market. Florida-based Slide Insurance is set to trade on the NASDAQ under the ticker SLDE. The company raising $408 million after pricing at the top of the marketed range. And joining us now on set on Bloomberg first is Bruce Lucas, Slide Insurance founder and chief executive officer. Bruce, great to have you on the program. And I will say congratulations on the IPO, but I'll ask, what if your stock goes up 350% in the next few weeks? Would you be unhappy that you didn't raise like $2.5 billion?
Yeah, it's one of those things where there's a trade-off to everything, and you want to see your stock perform well, you want to see your investors make money, but there's a balance between new investors making upside and old investors taking a discount at the IPO. So I think the term was champagne problem. I kind of agree with that. It's a champagne problem, but you know, I don't think I'd be upset to see it go up, but I'd have a little bit of regret that we didn't get the best price.
I'm so glad
I was talking
you're
about Circle,
here.
by the way.
Yeah, I think everyone got
Just
that.
for the viewer, you know, I was talking about Circle.
Very glad you're here since Matt has been banging this drum basically since Circle's IPO. I want to talk about your IPO in a little bit and the decision to go public now. You were telling us in the commercial break you founded the company 3-4 years ago, and you have this dynamic out there where companies really aren't going public anymore. They're staying private longer. So 3 to 4 years, that's a pretty quick path to the public markets. Talk us through that decision. Why now?
Well, this is my second rodeo. I took Heritage Insurance public over 10 years ago. And with our growth rate, I mean, this has been a rocket ship at Slide. We've gone from 0 to $1.4 billion in premium in 3 years. Insanely profitable, great ROEs. And we see a lot of runway ahead of us. Now's the time to make a big investment in the Florida market. And we're prepared to make a historic investment in Florida insurance. The IPO market's pretty robust for financials right now. I think investors are looking for trades that aren't tariff impacted. And when they see fast performing, high growth, high ROE companies, we were pretty successful in attracting a lot of demand.
Why is now the time to make an investment in the Florida market? I look at this one big, beautiful bill, and I think, man, those states that don't have an income tax are going to have one soon, because the federal government is going to pay for less and less of your medical care costs.
Yeah, that's absolutely true, but I think the underlying factor in Florida, especially in homeowners insurance, is tort reform. You know, we had a big problem in Florida. We had 9% of all homeowners claims in the country, 80% of all litigation because of litigation abuses. The legislature reformed everything at the end of 22. Markets are now stable. The fraud has disappeared. Prices are starting to come down. It's a tremendous time to be scaling in the Florida market, and I think we've got a pretty accretive backdrop on the reinsurance markets as well that's very favorable for additional growth.
So Matt thinks Florida, and you think no taxes. I think Florida, and I think hurricanes and all those other scary things that happen in Florida. I feel like that
happen more and more often.
Exactly. Weather is getting more and more extreme. I feel like to be in the Florida insurance market, you have to have a pretty strong stomach, and maybe that applies to investors as well.
Yeah, that's so true. No one watches the Weather Channel more than I do, let me tell you. It's been pretty busy. The last 3 years, we've had 6 landfall hurricanes. 6.
Wow.
That's a record. Last year, we had 3 Cat 3 or higher landfall hurricanes. So, yeah, it can be a little nerve-wracking, but what you have to do is prepare for the worst. And that's what we do. We buy more reinsurance than any of our peer companies. You try to maintain low retentions. You want to try to lock in as much profit as you can, but volatility can really hit you, and it's all about where these storms are hitting, and so far so good. We took a big blow in Tampa this year with Hurricane Milton. Cat 4, eye wall went right over the top of my house. Climate change is a real thing, and we try to factor that into the way we buy reinsurance. Just buying more and seeing model updates where they're increasing losses, it helps to mitigate some of that risk. But yeah, you're right. It's a tough market if you're not prepared to deal with the stress of hurricanes.
Well, Bruce, it's pretty fantastic to have somebody with your expertise and your experience. I hope we can get you back on the program, and congratulations again on the IPO. Bruce Lucas,
thank you.
There, the founder and CEO of Slide Insurance. Coming up, AI talent wars are attracting astronomical figures for talent. Would you take a $100 million bonus?
No.
More on that next. This is Open Interest.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
All right, so AI is killing some jobs, but it is blowing up salaries and signing bonuses for other. OpenAI founder Sam Altman says that Facebook, Mark Zuckerberg, Meta, is reportedly offering his superintelligence team potential hires $100 million signing bonuses. That's on top of massive pay packages. Listen to what he said on his brother's podcast.
They started making these like giant offers to, a lot of people on our team, like $100 million signing bonuses, more than that comp per year.
It's crazy.
And it is crazy. I'm really happy that at least so far, none of our best people have decided to take them up on that.
So far, Meta hasn't commented. We're joined for more by Bloomberg tech co-host Caroline Hyde. And I mean, this story already got my attention as soon as I woke up.
100 mil got your attention.
Yeah, I mean, that's an Eli Manning contract in one signing bonus for a nerd, right? Not a football quarterback. And at the same time, we have Amazon and Shopify and others saying, if you're not using AI, you're not going to have a job here anymore.
And so maybe the superintelligence team will be doing themselves out of a job in the future, because we know what generative AI is really good at.
Oh, hang on. I'm sorry. I got to jump in. The president is talking about interest rates. I want to listen in to President Trump. Can we get that feed?
Europe had 10 cuts, and we had none. And I guess he's a political guy. I don't know. He's a political guy who's not a smart person, but he's costing the country a fortune. So what I'm going to do is, you know, he gets out in about 9 months. He gets fortunately terminated. Biden, I would have never reappointed him. Biden reappointed him. I don't know why that is, but I guess maybe he was a Democrat. You know, I got great advice from Mnuchin on this one. Great advice. But he's done a poor job. So we have no inflation. We have only success. And I'd like to see interest rates get down. Now, Biden did a lot of very short-term debt. So we have short-term debt coming due. And because of this guy's rates, you know, if he'd lowered a point, I'd pay about a point less. Then if he'd lowered 2 points, I'd pay about 2 points less. And that's for 10 years, 12 years, 15 years, 5 years. It's hundreds of billions. It's even trillions of dollars that we're going to lose because of this too late. I call him Too Late Powell because he's always too late. I mean, if you look at him, every time I did this, I was right 100%. He was wrong. Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people. So anyway, we should be 2 points lower. It'd be nice to be 2.5 points lower. We'd be saving $800 billion, $700 billion. That's a lot of money, right? Think of it, for nothing, for absolutely nothing. We'd save $600, $700, $800 billion. We have, I think we're 38th now in interest. And we should be number one. We should be the lowest. But, and by the way, if he's worried about inflation, that's okay. I understand that. I don't think there's going to be any. So far, there hasn't. I mean, we have almost no inflation. We've done a great job. When I came in, we had a lot of inflation. We went through 4 years of the highest inflation in the history of our country with Sleepy Joe Biden. And Sleepy Joe. And he didn't know what the hell he was doing. And so we had the highest inflation we've ever had in the history of our country. And then it came down because when I got elected, it started dropping because people understood that I knew what I was doing. But now we have a man that just refuses to lower the Fed rate, just refuses to do it. And he's not a smart person. I don't even think he's that political. I think he hates me, but that's okay. You know, he should. He should. I call him every name in the book, trying to get him to do something. I've been nice to him. I do it always. I don't know how to sell. I've been so nice to him, fellas, you wouldn't believe. Let's have dinner. Too late? I'd call him too late. Come on, too late. Let's have dinner. I do it every way in the book. I'm nasty. I'm nice. Nothing works. He's like just a stupid person. But I don't expect anything. Maybe he does a little bit, but we should be 2.5 points. Remember, Europe had 10 cuts. We had none. We're paying more rate, more interest than a lot of European nations that can't carry our suitcase. I'm going to be nice. There's another expression. You know what the other expression, can't carry your, you know what it is. But I shouldn't use it in front of the fake news. So it's very sad to see it. And what I'm going to do is I'm going to go very short term, like 6 months, 7 months, 8 months. Wait till this guy gets out, get the rates way down, and then go long term. Because we have a tremendous appetite for our debt because our country is doing well. But think of it, I got a call from Congress 3 nights ago. Sir, we can't account for the money coming in. I said, that's a good problem. You know, the bad problem is we don't have any money. They can't account. There's so much more money than we thought is coming into the Treasury. We don't know where it's coming from, sir. I said, check out the tariffs. He calls back about a day later. Wow. I think you were right. Yeah, I was right. That's nothing. You haven't seen anything yet. More importantly than the money coming in, we have factories being built, AI, auto factories. 2 of them stopped yesterday in Mexico, you read, and they're coming here because they don't want to pay the tariffs. They can't pay the tariffs. It doesn't work. So I just want to wish you a lot of luck with the new flagpole. We have 2 of them, and we're going to do this one now, then we're going to do the other one, 11 o'clock or so. We're going to have a flag raising, which would be great. And I got to get these guys back to work. They're making a fortune. They're standing around making a fortune. But remember this, somewhere in this group is somebody that is going to captivate some movie producer, not Harvey Weinstein, but somebody else. Harvey's seen a better day. So it won't be Harvey, but it'll be somebody. And it'll say, that guy is perfect for a movie. And you're going to become a star, and your friends are going to call you, and you won't even return their phone call anymore, you know? Because you say, what do you do for a living? I put up flagpoles. I'm not even going to talk to you. I'm a big movie star. So somewhere you have that. Anyway, let's have a good, they call it a lifting. They also use another word, but I'm not going to use that word. You know what that is? The word, it starts with an E. You know what the word is? If I ever used it, I'd be run out of town by you people. All right, so enjoy it. Doug, you're going to get some good. He's going to win another Nobel Prize, I think, for this picture. So maybe the flag will be even more exciting, but this is pretty exciting. That's some equipment, I'll tell you what. Look at that crane. That's some beautiful equipment. It's there's nothing like America. Have a good time, everybody.
Have you been answered questions about whether you are moving closer, or you believe the U.S. is moving closer to striking Iranian nuclear facilities? Where's your mindset on that?
I can't say that, right? You don't seriously think I'm going to answer that question? Will you strike the Iranian nuclear component? And what time exactly, sir? Sir, would you strike it? Would you please inform us so we can be there and watch? I mean, you don't know that I'm going to even do it. You don't know. I may do it. I may not do it. I mean, nobody knows what I'm going to do. I can tell you this, that Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country. It's very sad to watch this. I mean, I've never seen anything like it. It's so, you know, everyone thought it was going to be the reverse. I didn't think so. And I was telling them, you gotta do something. You gotta negotiate. And at the end, last minute, they said, no, we're not going to do that, and they got hit. Remember 60 days, and then came the 60. 61 is going to become a very famous number. That was one hell of a hit. That first hit, that was one hell of a hit. Not sustainable, to be honest. That's where it ended. It ended on the first night. Yes.
Too late, though? Do you think it's too late to now?
Not really. Nothing's too late. The only thing too late is Powell. Powell's too late. Too late, Powell.
Have the Iranians reached out to you, Mr. President?
What?
Have the Iranians reached out to you?
Yes.
And what did they say?
I said it's very late. You know? I said it's very late to be talking.
Mr. President.
We may meet. It's. I don't know. There's a big difference between now and a week ago, right? Big difference.
President, you said you may just about said we may meet. Is this about Vance and Witkoff possibly going to talk about?
It's about anybody. They even suggested they come to the White House. It's a big difference. But they've suggested that they come to the White House. That's, you know, courageous, but, you know, it's like not easy for them to do. But they suggest, because I can't go now because of what's going on. I had to come back early from the G7, which was terrific, by the way, in Canada. Really terrific. Good people.
Is there a possibility of next week or sooner that you're...
Well, I don't know how much longer it's going to go on. I mean, they're totally defenseless. They have no air defense whatsoever. We've totally captured... You know, we've totally captured the air, Brian.
Mr. President, you've been fairly compassionate towards the Iranian people.
I have been. It's human. The human beings. I know a lot of people from Iran, from New York, from Washington, mostly from New York. They're incredible people. They're smart. They're energetic. They can be difficult, but so can you. You know, no, they're great people. They're smart people. And those people are getting the hell beat out of them now. And it's really a shame. It's so stupid. It's so stupid. It's another one, you know. Russia, Ukraine is so stupid. Would have never happened if I was president. You guys agree with that, right? Would have never happened if I was president. Putin would have never done it. And I spoke to him yesterday, and I said, you know, he actually offered to help mediate. I said, do me a favor. Mediate your own. Let's mediate Russia first, okay? I said, Vladimir, let's mediate Russia first. You can worry about this later. But I think that's going to work out too, but it's so many people have been killed. The big thing with that one is far more people are dead than have been reported in the Ukraine, Russia. Many, many more people.
Mr. President,
falls down, they say nobody was hurt. You know, so.
What does unconditional surrender mean?
Well, you know what it means. Unconditional
Can you explain it for those who don't?
Very simple words. Very simple. Unconditional surrender. That means I've had it. Okay, I've had it. I give up. No more. Then we go blow up all the, you know, all the nuclear stuff that's all over the place there. No, they had bad intentions. You know, for 40 years they've been saying death to America, death to Israel, death to anybody else that they didn't like. They were bullies. They were schoolyard bullies. And now they're not bullies anymore, but we'll see what happens. Look, nothing's finished until it's finished. You know, war is very complex. A lot of bad things can happen. A lot of turns are made. So I don't know. I wouldn't say that we won anything yet. I would say that we sure as hell made a lot of progress. And we'll see. The next week is going to be very big. Maybe less than a week. Maybe less. But is there anybody here that said it would be okay to have a hostile, very, zealots really, but to have a hostile country have a nuclear weapon that could destroy 25 miles, but much more than that, could destroy other nations just by the breeze blowing the dust. You know, that dust blows to other nations and they get decimated. This is just not a threat you can have. And we've been threatened by Iran for many years. You know, if you go back and look at my history, if you go back 15 years, I was saying we cannot let Iran get a nuclear weapon. I've been saying it for a long time. I mean it more now than I ever meant it. Yeah.
Mr. President, a question on deportations, Mr. President. You said last week that changes would be coming for farmers who have seen a lot of the workers they rely on taken away. But then DHS said this week that worksite enforcement would remain in place, that it's a cornerstone. So what's your message to farmers?
Everybody's right. Look, we got to get the bad people out of here first, and we're doing that. We're taking them out by the thousands. Murderers, drug dealers, people that are mentally insane from insane asylums. What they gave to us, fellas, they gave. Oh, do we have anybody in here that's a member of the? No, I don't think so. You've known all these people for a long time. Any illegal immigrants in here? If they were, they'll find out.
Right.
They'll be checking you. You won't believe it. Your whole life will be destroyed because of this press conference. Watch. They'll destroy these people. I didn't want to tell them that before this did happen. They'll end up being, oh, he's a so-and-so. This one is from you know where. Don't worry. I think you're going to be okay. I'll be right behind you. Far behind you. I'll be right behind you. Now look, we have to take care of our farmers. We have to take care of people that run leisure, hotels. I mean, we have to take care of them. But most importantly, we have to get the criminals out of our country. And Biden let in thousands and 11,888 murderers. Many of them murdered more than one person. Can you believe it? Many, almost 50% of them murdered more than one person. He let them into our country. They emptied out the jails of countries from all over the world, from the Congo, from Venezuela, from all over the place. They emptied out the jails, many of them. I would. If I were running one of the countries, I would have emptied out my prison population into the U.S., and many countries did. And we're getting them out, okay? We're getting them out. Thank you very much. Let's watch this. Brian, go ahead. Are you okay?
I'm just going to follow up on the immigration real quickly.
Yeah.
Can you comment on the impact of the Trump card and how much of that is?
Yeah, we have a thing called the Trump card. This has not been done before or thought of. And for $5 million, this is usually people that would either be working for companies like Apple, I think, is going to buy a lot of them, because they can't get people into the country. You know, if you come in through the southern border, you have no problem. You can be a criminal, you can be a drug dealer, and you have no problem. But if you go and graduate #1 in your class from a great school, you can't get a job because there's no access to getting it. You can't get a green card. So we're going to sell that to people, in some cases wealthy, in some cases not wealthy. They'll be paid for by universities. Look at Harvard. They got $53 billion. That whole thing is coming to an end. It's amazing what we found out. What a disgrace. They have $53 billion. We gave them 5, 6, and some people say it's as much as $9 billion over a short period of time. So that's very much coming to it. They want to make a deal more than, I would say Harvard wants to make a deal more than Iran wants to make a deal, and Iran wants to make a deal. I mean, a lot of things are happening on a lot of fronts, Brian. A lot of good things are happening. And frankly, you know, it's a little bit of a, as we used to say liberal, now they say progressive. I use the word liberal. Progressive's too nice a word because they're destroying the country. They're really destroying these liberal politicians are destroying our country. Look what they've done during Biden's 4 years. I mean, we're working on, so much of our effort goes to getting people out of the country that should have never been here in the first place. What he's done to this country, it's not him. He had no idea what was going on. Everybody knows that. It's other people. It's Lisa and this one and that, all these people, all this scum that was around the Oval, the Oval Office or around the beautiful Resolute desk telling this guy, here, do this, do that, and not even telling him. They just go over to the auto pen and sign whatever the hell they wanted to sign. Because say what you want about Biden, he wasn't for open borders. He wasn't for transgender for everybody. He wasn't for men playing in women's sports. But he has no idea what the hell, he has no idea. And they were very upset. They wanted Bernie Sanders. And after about a week of this guy, they said, wait a minute, we just hit gold. This guy has no clue. He'll do anything we tell him. And then they realized they don't even have to get permission. They just go up to the auto pen. That's a subversion. That's a takeover of our government. And you people ought to start looking at it. That's a takeover. Not only did they cheat, I guess you saw yesterday came out with China and the license plates. Tens of thousands of cards. They used those cards to vote on the second election, my second, the one 2020. Because as everybody here knows, I won that election by a lot. But the only good thing I can say is this is a much more historic term than I think I could have had as a second term. This is a much more historic election. And now we're going to put up a beautiful flagpole, and we're going to put up a flag. And I hope you enjoy it. And let's see how real people work. These are real people. You're not real people. Your job is too easy. Okay?
Last one around, Mr. President.
How tall is the flagpole?
Close to 100 feet.
Real quick on Pakistan, sir. You have a meeting today with the Pakistani Army Chief of Staff. What are you looking forward to achieving diplomatically?
Well, I stopped a war between Pakistan. I love Pakistan. I think Modi is a fantastic man. I spoke to him last night. We're going to make a trade deal with Modi of India. But I stopped the war between Pakistan and India. This man was extremely influential in stopping it from the Pakistan side, Modi from the India side, and others. And they were going at it, and they're both nuclear countries. I got it stopped. I don't think I had one story. Did I have one story written about it? I stopped a war between two major nations, major nuclear nations. I don't think I had a story written about it, but that's okay. You know why? The people know. The people know.
Mr. President.
Did anybody write that story about the war? Did anybody? Did you write it?
We wrote one.
We all wrote it.
Did you write it?
Yeah. Just one more on the
You
Iran,
wrote it.
President. When does your patience run out with? Adjustments that need to be made for Marine One departures and arrivals?
No, we put it so that Marine One is very far away. We did it in conjunction with the Air Force, with everybody, and everybody signed off on it. We have to have it far away. It's very far from Marine One's out there. It's out in the field. So you have to have a certain distance. We're about 3 times that distance. Okay? Thank you very much, everybody.
Thank you, Prime Minister Netanyahu.
That was President Trump in the south lawn of the White House. They are putting up 2 flagpoles there. So we got some comments from President Trump. He commented on the Federal Reserve, commented on Russia, Ukraine, the Middle East. So a wide-ranging Q&A session with the reporters out there. But that is on the south lawn of the White House. All right, Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. This is the Bloomberg Intelligence Program. We're going to get things started in earnest. We're going to kick it all off with John Tucker, and we're going to get a Bloomberg Business Flash, John.
All right, so we have stocks higher right now. This Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. You heard the president say Iran has reached out, so that's kind of bolstering speculation. The war with Israel is going to de-escalate, so that's leading right now to risk on. S&P 500 up 23 points. That's up 0.4%. 6,006 on the index. The Dow Jones Industrial Average up 150 points right now. The Nasdaq 190 points higher. That is up 0.4%. And ahead of the Fed decision, 2 p.m. Wall Street time, we'll carry that live. Labor market data showing jobless claims ticking down last week. While housing starts, they slid to a 5-year low. The Fed widely expected to leave rates unchanged for a 4th straight meeting. And the possibility, consumer discretionary right now, that is the best performing industry group in the S&P 500. Home to Tesla, that was up about 2.5%. And Nippon Steel closing its $14.1 billion takeover of United States Steel. Meantime, Cameron Dawson at New Edge Wealth says stocks will just kind of muddle through the coming months.
We do think that we are stuck in what we've been calling all year long the talking heads market of the road to nowhere. We sideways chop all through the year, which is how this has played out in the first half. And we think that continues into the second half because you could hit that valuation ceiling.
And Amazon seems to confirm workers' worst nightmare. Artificial intelligence coming for your job. The CEO, Andy Jassy, says he expects the company's workforce to decline in the next few years as they use AI to handle more tasks. By the way, Anthropic, they recently warned that AI could wipe out half of all entry-level white-collar jobs and cause unemployment to spike as high as 20% over the next 5 years. That's their prediction anyway. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. You can never replace these two with AI. Alex Steele and Paul Sweeney.
Just you wait. Just you wait. We do have some breaking news from the Supreme Court. The highest court in the land is upholding curbs on treatment for transgender minors. So this goes back to a Tennessee law which banned gender-affirming care for minors. And the question became, is that unconstitutional? Since 2021, so according to Axios, more than 24 states have now passed laws seeking to restrict youth access to this gender-affirming care, and it appears that the Supreme Court is upholding those curbs on treatment for transgender minors. We are also, of course, monitoring all the headlines out of Washington, D.C. President Trump saying that he has lost patience with Iran. He says he'll be on the NATO trip that comes next week. He thinks so. All right, let's get some stock movers right now. I'm Alex Steele alongside Paul Sweeney. We're joined now by Bloomberg's Denitsa Sakova. All right, you're looking first off at Marvell Technologies.
Yeah, it's up 9% today, which is a much-needed relief. The ticker is MRVL. The company was down about 30% before this rally. It had an event focused on AI, and we're seeing so many upgrades after this. We saw Melius Research raising their target. We saw Bank of America raising their target. We saw B. Riley raising their target. So there is a lot of optimism. And we remember just a few weeks ago when their earnings reports was out, there was a lot of disappointment. The report wasn't bad, but the expectations were so high about the company that there was a big slump after the first quarter earnings, which were pretty much in line with analyst expectations. That said, the event is bringing some optimism. One number that jumps is that their overall data center market is expected to grow to 94 billion by 2028, and that was something everyone was looking for in the earnings. So perhaps some of the optimism that's pouring today is coming on that. There is some other partnership with Empower Semiconductor. So overall, the event is definitely boosting the stock after a rough start of the year.
Interesting. All right, how about Circle Internet Group? What an IPO this has been.
That's a fascinating IPO indeed. As we remember, after the IPO, it jumped 168%, and that rally continues. So far, since the IPO, it's up 400%. And now we also have legislation. We have the U.S. Senate passing a stablecoin legislation. This is setting up the regulatory rules for the cryptocurrencies that are pegged to the dollar. This is a landmark legislation. Obviously, it's kind of paying off after the really big investments from the crypto industry that were supporting the electing campaign of Donald Trump. So this is kind of one major milestone. The rule is that dollar-pegged stablecoins would have to hold dollar-for-dollar reserves in short-term government debt. And yeah, the stock is soaring, and this is just another... Today gain is just 4%, which seems small after 400, but definitely more upside.
And let's go to Constellation Energy, one of my favorite stocks to talk about, making deals left and right with hyperscalers here.
Yes. That's definitely one of the movers. We're also looking at, for example, alcohol beverages today. They are
okay,
moving...
not my fault. Our producer said Constellation Energy instead of
but
brands.
That's another mover.
I'm totally selling him out. This was not my fault.
That's another mover. Alcohol beverages are moving on reports that the U.S. dietary guidelines are expected to eliminate the long-standing recommendation of 1-2 drinks per day. And now those guidelines are supposed to be a little bit vaguer, which is boost to those alcohol brands. For example, Constellation Brands is down 27% year to date. Today, the gain is really small, but perhaps this is bringing some optimism. Of course, this is developing story, so we don't know too much about the guidelines, but there is some optimism for all those alcohol brands that have been suffering year to date.
All right, thanks so much. We really appreciate it, Nisa Sakova. Also, Constellation Energy is up 0.2%.
Yeah,
If we
thank
wanted
you.
to
It was
just,
perfect.
expand that was great. Good pivot,
Yeah.
by the way. Denise Sakova of Bloomberg joining us. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So we just had President Trump outside the White House in the South Lawn. Several remarks underway when it comes to Iran. Some standouts is that he defines unconditional surrender. It means he's had it with Iran. He says that this week or next week will be big. He also says it's too late for Iran to be talking, and he says that Iran has got a lot of trouble and that Iran is now defenseless. So a lot of interesting comments coming out. Want to go now to Golnar Motivali, a Bloomberg Iran reporter, joining us. Golnar, how do you think, first of all, has Iran reached out to President Trump? Do we know that?
We don't know that. We have only heard various unconfirmed reports that there have been some efforts, we think, behind the scenes. And we had a story a couple of days ago from the Wall Street Journal saying that Iran has reached out, but the Iranians have denied. Iran has reached out for some kind of dialogue, for a cessation or a truce of some description, but those reports have been denied by the Iranians. And of course, we had these comments just a couple of hours ago from Supreme Leader Ayatollah Ali Khamenei, saying that Iran will never surrender or will not surrender. He was directing those comments squarely to the US, saying that Iran won't surrender and that it will not agree to an imposed peace, which is his way of also saying that Iran won't accept any efforts by the US or Israel to force it or coerce it into accepting some kind of ceasefire that it doesn't want to agree to.
Golnar, is there, from your reporting and your sources, is there surprise that Israel has been able to damage Iranian forces, installations, and leadership to the degree that they have so quickly? Because it doesn't appear like Iran has much of an ability to respond.
I think the biggest shock for most Iranians was that, first of all, the strike itself, the fact that Israel started to attack Iran, because if you remember, Iran and the US were actually scheduled to meet on Sunday in Oman to continue those active negotiations over Iran's nuclear program. Steve Witkoff, Trump's special envoy, and the Iranian foreign minister were planning to do that when Israel started these attacks. So I think that was the biggest shock. You know, I think people were probably thinking that now that we've got these negotiations going, that in themselves, those talks are a way of kind of staving off any risk or threat of conflict between the two. But once those strikes started, I think the thing that was most shocking to people was the way that Israel managed to kill the very top brass of Iran's military. So the chief of staff of the armed forces, the overall commander of the IRGC, the head of the IRGC's aerospace and air division. These are huge names in Iran's military. And that, I think, has been a big shock to people. But it's not the first time that Israel has shown that it can use assets on the ground very effectively in order to make these extremely precise and targeted strikes.
Golnar, thank you so much for your reporting. Really appreciate it. Golnar Motivali, Iran reporter for Bloomberg News in our London bureau. Let's get back to the Supreme Court decision. We've been waiting a number of rulings. We got one this morning. The Supreme Court upholds curbs on treatment for transgender minor. June Grasso joins us here. She's a legal analyst at Bloomberg News here. June, I know it's a big court case here. What did the court find?
So this is basically expected from what we heard during the oral arguments. And the court found that this Tennessee law that bans gender-affirming care for minors doesn't violate the Equal Protection Clause. And the key is the method of analyzing it. So it could be analyzed, these laws can be analyzed under a rational basis test or under a strict scrutiny test. The rational basis test is much easier. You just have to show that there's a rational connection between the government's interests and the law. And that's what the Fifth Circuit did in this case. And then they found that the law didn't violate the Equal Protection Clause. With the strict scrutiny test, which is what the trial court used, you have to show that there's a compelling government interest in having this law and that it's narrowly tailored. So here the Supreme Court said we don't have to use the strict scrutiny test, we're going to use the rational basis test, and under that law, under that kind of analysis, this law passes. And that's, as I said, the rational basis is a pretty easy test. Justice, during the oral arguments, there were a lot of questions, and a lot of the conservatives talked about how this was not a question for the court, this was a question for the lawmakers, and the lawmakers had decided this. And so the Chief Justice, in his opinion, in the last sentence, referred to that. He said, hold on, I'm looking for it. It's 118 pages. I don't know if I'll be able to find it at this point. He said that this case carries with it the weight of fierce scientific and policy debates about the safety, efficacy, and propriety of medical treatments. And so by the court's role is just to determine whether it violates the Equal Protection Clause. So we're leaving policy to the people, their elected representatives, and the democratic process. Justice Sotomayor wrote the dissent, and she was very heartfelt and concerned during the oral arguments about the fact that transgender people are about 1% of the population, and so the lawmakers who are making these laws, she said, are not considering them. They have no input, really.
They have no voice.
They have no voice.
So what law does this then leave in place?
So it leaves in place the Kentucky ban on gender-affirming care for minors, which other states have copied. And so...
But in reality, what does that mean? So if you're under 18, you are not allowed to take steps to change genders?
Right, exactly.
To transition, I should say?
It's a little bit of a complicated law, but under any kind of gender-affirming care or affirming care for gender dysphoria is not allowed if you're under 18. So that even includes if your parents are on board with it. So it eliminates a lot of the treatments that are out there.
What are we still waiting from the Supreme Court on, June?
So we're still waiting for the birthright citizenship case, which is, by the way, not going to rule on whether the birthright citizenship executive order that Trump put forth is legal or not. It's going to rule on another issue about nationwide injunctions. And we're waiting on the age verification for porn websites from Texas. And let me see. We're also waiting on, I have a list here of the TransCare. That was a big one that we were waiting for. The FCC's Universal Service Fund.
All right, so there's still a couple more things we're waiting for. All right, excellent stuff. June Grasso, thank you so much for joining us. June Grasso, on short notice on these Supreme Court cases, our legal analyst here for Bloomberg News. All right, let's get a reset here of these markets. We'll go to John Tucker for a Bloomberg Business Flash. John.
Yeah, the major averages are higher. This flash brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. So right now you have 9 of the 11 major industry groups in the S&P 500 higher. President Trump saying Iran has reached out, so that's led to speculation the conflict with Israel may de-escalate. That is giving the risk on sentiment right now. Of course, the Fed widely expect to leave rates unchanged for fourth straight meeting. We'll find out right around 2. Marvell Technology rising. Analysts positive on the chip maker following an event focused on artificial intelligence. S&P 500 33 points higher at 6,016. The NASDAQ 100 up 128 points. The Dow up 263 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well, plus all our streaming devices like Bloomberg Originals on Roku, as well as your smart TVs. It is also the Fed meeting today. Fed decides. Special coming up at 1:30 p.m. on radio and television. Dennis Lockhart is former Atlanta Fed president, and he joins us now. Oh, there is so much to get through here, but one part are 4 inflation readings that show weakness in prices, that prices are still falling. How do you think the Fed talks about that?
Well, I think the Fed will take those monthly numbers in the context of a view that they still have some work to do to get the inflation trend down to the 2% target. So they're encouraged by that, I think. They're certainly not seeing inflation run away. But the important point is that the tariff shoe hasn't fallen yet. And I think they're concerned that they will see at least a spike in prices, if not perhaps something even a little bit more persistent when the tariffs in early July or later actually begin to be felt in prices.
Dennis, we're going to get the dots today as well. DOTS Go is a function on your Bloomberg terminal to see that analysis. Do you expect that we learn anything there?
I have been thinking, Paul, that this is sort of a placeholder submission on the part of the participants on the Federal Open Market Committee, meaning there's so much uncertainty. They are certainly going to make a decision to hold. This is probably not a time to make any dramatic change in your dot submission, and therefore to look similar to March, which was almost evenly split between 2 cuts and 1 cut. So I think they'll probably preserve that picture of cuts later this year. It would not take much in the way of individual submission changes to have the median come out at 1 instead of 2. But I would caution your listeners, you can way overinterpret what the dots are telling you.
Yeah.
It's not a message of the committee.
No, that's what we do here. We're going to overinterpret every single word and every single dot. I asked earlier about the inflation decline, that cooling inflation. At the same time, the labor market has been cooling as well. Just take a look at the 4-week average now for initial jobless claims is at 245,000, the highest in September of last year. How do you think Powell talks about that without getting him into the, ooh, he's so dovish camp?
Well, that's a good question, but it does not appear to be dovish. But I think the committee and Powell will express satisfaction that the employment market continues to be pretty solid. The claims are sort of within a range that we've seen for some time, and they're, in a manner of speaking, normal. There's been no crack in the labor market that suggests that somehow things are deteriorating rapidly. So I think he'll basically say that they're satisfied that the labor market continues to operate in a way that keeps the unemployment rate in a range around 4.2, 4.3. And they'll wait and see to see how things develop.
How about the U.S. consumer here? The U.S. consumer, Dennis, seems to be, by and large, kind of hanging in there. Is that something that you think that, how does the Fed view kind of consumer data?
Well, first, I think consumer data are extremely important because the big driver of our economy is consumer activity. I would even say that obsession with the GDP numbers is, again, perhaps a little bit of an overinterpretation of a headline number. They're more interested in, or many at least on the committee are very interested in the final sales to domestic purchasers, which is a way of capturing consumer activity. The consumer does continue to spend. There appears to be some slowing going on, which I think is natural. There's a lot of uncertainty in the air, and I think the consumer is probably becoming a little bit more cautious. Also some trends in terms of credit card delinquencies and such that may be a little bit worrisome. But if you step back and ask, is the consumer still active in a way that's supporting the economy? The answer is clearly yes. So the consumer does seem to be hanging in there.
Before we go, we only have about 30 seconds, and then we're up against a break, Dennis. What's the data delay, you think? Like, when are we going to start to see the real impact from tariffs? How many months out?
Well, June was predicted to be the month in which we begin to see the influence of tariffs in some of the inflation numbers. So we'll see if in July the June numbers do show that. But it's been somewhat remarkable how this gets pushed off and pushed off. There could be some compensation or offsets within the pricing picture that make the inflation number look relatively mild, while there are goods that are really reflecting the tariff influence. But I think is it July 8th when the next tariff cliff occurs?
Dennis.
So I think we'll have to look to that.
Dennis, we got to go. Dennis Lockhart, thank you so much. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. The major stock averages are pushing higher right now, but the volumes are really low for this time of day. We're seeing crude oil lower after the president indicated that Iran wants to talk. That has energy, the worst performing major indice group in the S&P 500. Brent is down 1.7%, 75.13 a barrel there. J-Bill, the best performing individual stock in the S&P 500, right now up close to 5%. They reported results that beat expectations, raising the full year forecast as well. Well, with today's Fed decision, 2 Eastern, Andrew Hollenhorst at Citigroup Global Markets says, keep an eye on the so-called dot plot.
This is the meeting where the Fed will have fully incorporated tariffs into their forecast. So we should see the forecast for inflation coming up. We should see the forecast for the unemployment rate coming up.
Right now, the S&P 500, 31 points higher, up 0.5%, 6,013 on the index. The Dow, up 262 points. The NASDAQ 100 up 125 points. Oh, here's one for you. Nielsen, these are the people who measure television viewership, say for the first time watching TV through streaming has surpassed broadcast and cable combined.
That's big.
Now, but compare that to YouTube. Like, does that include YouTube?
Yes. All the streamers.
Ah,
all the
okay.
streamers
Interesting. Because YouTube is like crushing everybody, right?
Yep.
I don't think my kids
breaks
have ever
out.
seen a TV. It's always on their little screen.
On their screen. Dylan had no idea what a commercial was for like ever. She saw one for the first time like a few years ago when like Amazon Prime and stuff having started commercials. She's like, what is this? I was like, wow, okay.
Yeah.
But now she can sing all the jingles for insurance companies, but that's
the
aside
point.
Yeah.
We check the markets view all day long, right here on Bloomberg. I'm John Tucker, Alex and Paul.
All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We are also following what is happening around the world. President Donald Trump declining to say whether the U.S. plans to join Israel's military offensive on Iran, but had some pretty harsh words for Iran and what he thought unconditional surrender meant, which was he's had it. That's what he said. Quote, I've had it. Daniel Byman is director of the Warfare, Irregular Threats, and Terrorism program at the Center of Strategic and International Studies and a professor at Georgetown University. Professor, what do you take that to mean? Unconditional surrender means I've had it. What is that?
It's unclear exactly what President Trump is looking for when it comes to Iran. Obviously, he was trying negotiations and was frustrated by Iran's unwillingness to accept the U.S. offer. But what he actually hopes to accomplish through military threats or perhaps military action, he still has not made clear.
What do you think the options are for the U.S. in its role potentially in that part of the world today?
So the United States could continue variations of what it's doing right now, which is aid to Israel, but on the relatively light side. So the U.S. is already assisting with air defense. There are news reports the U.S. has assisted with intelligence on Iran and helping resupply Israel as it runs out of important munitions could be one role, basically continuing what the U.S. is doing. But it could also step up pressure in lots of ways. One of the ones being most discussed is using the U.S. ordnance that is massive and specifically designed to go after sites that are deeply buried. And Iran's key nuclear site, Fordo, is literally inside a mountain. So joining that and using the assets that really only the United States has to go after this, and in so doing, probably further devastating Iran's nuclear program. And it could be even more ambitious than that. Israel has attacked Iranian infrastructure and especially a range of military and energy targets. And if the United States joined in that, the goal might be to severely weaken the regime for several years and perhaps even try to lay the groundwork for regime change, although that's probably a bridge too far.
Yesterday on television, I was speaking with retired General Wesley Clark. He's a retired U.S. Army officer. He also was head of NATO, the Supreme Allied Leader of NATO for the West. And I wonder, and he was pointing out the three things that happen when you're in the Situation Room, sort of the means, the ends, and he said something else, the hows, I think it is, and it's how you do it, the means with which you do it, and then what the end goal is. What is your level of confidence that those three things are being given equal treatment right now?
So let me say two things that may seem to contradict, but I think they're both true. One is the U.S. has been preparing for this operation for decades. This is something that has been discussed over the years by different administrations, and there's tremendous knowledge in the military and intelligence community on how to target Iran. And so there's a lot of ability to kind of do this reasonably well from a tactical sense. But there are a lot of chaotic factors that are also in play here. And one of the biggest is simply what the United States is hoping to achieve from all this. Is it simply bandwagoning on what Israel is already doing? Does it have different goals? And it's unclear to me how the process is working in terms of who is giving the president advice, how serious those people are in terms of what they've thought through, and whether they've thought about some of the long-term consequences that are political as well as military.
Do we have any sense, Daniel, how the Iranians will respond if the Americans were to aid the Israelis with some offensive operations?
So it's possible that the Iranians will recognize the overwhelming might of American military forces and simply try to limit any retaliation, recognizing that they're going to receive a lot worse than they're going to give. And the best they can hope for is just to hunker down. But no country likes to, frankly, be bombed or take a beating and do nothing about it. And they'll have strong political reasons to try to respond. A lot could be in the Middle East. Iran has a strong presence in terms of paramilitary ties and proxy groups in Iraq in particular, but also other states. And they'll go after U.S. forces stationed there. They'll go after U.S. personnel there. In the past, Iran has also supported international terrorism, and it has attacked targets around the world. So these are definite possibilities. And then we have to accept that Iran is creative and might do things we don't anticipate, that there are things that may be in its playbook that we just don't know about.
This is an extremely unfair question. Is there a better way to go around this? Like, no one thinks that a nuclear Iran is good. Everyone doesn't want that, hands down. What is a better way if we're not going to get drawn into this on some military level and negotiations aren't working? Is there a third rail?
So when we have negotiations backed by the threat of a military force, they're more likely to succeed. And Iran was moving towards some degree of acceptance of negotiations. It's just a question of what level of success the United States was willing to have with negotiations. Having something similar to the Iran deal that President Obama signed, which basically froze Iran's program, that was definitely in the realm of the possible and I think could be in the future. But Iran was drawing the line in terms of having some nuclear program. It said we are not going to give it up completely, even if it's not a nuclear weapons program. Iran was also drawing the line when it comes to support like proxy groups. So it's really a question of whether the United States will accept limits on a deal, risk in other areas, or if it wants a much more absolute solution.
Daniel, real quickly, 30 seconds left. Does the U.S. have the military assets in place now, or do we need a few days and or weeks?
So we have some in place now that can do a lot of damage to Iran. We also have long-range strike capabilities. So we have aircraft that can fly from truly from thousands of miles away, refuel in flight, and do a lot of damage. But having another carrier in the area certainly would help.
Daniel, thank you so much for your time. Really appreciate it. Daniel Byman, Director of Warfare, Irregular Threats and Terrorism Program at the Center for Strategic and International Studies, laying out the options for the U.S. As we heard from President Trump earlier today on the South Lawn, as you said, as you quoted him, he's had it. So I'm not sure what that means, but it feels like a decision will be coming from the U.S. side, maybe sooner rather than later. That's kind of how the body language and the rhetoric sounded.
I mean, he said a week or less will be big. Again, we don't know what big means, if there are different layers to that, but that is what he mentioned. He did say that Iran is defenselessness, and he doesn't know how much longer it's going to go on. In the meantime, we still have a Fed meeting, no doubt. Jay Powell will get peppered with questions about this and will negate it at every turn. Michael McKee, Bloomberg National Economics and Policy Correspondent, will be joining us next for his take on what to look for, what he's going to be looking for in the press conference, and how he's going to ask the question that Jay Powell's not going to answer. Let's get into that. This is Bloomberg Intelligence. Happy Wednesday.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. We're obviously focused on D.C. and any sort of headlines or hints that we may get any U.S. involvement when it comes to Iran and Israel. We are also keeping our eyes on the Fed meeting. The Fed special here starts at 1:30 on radio and television. 2 o'clock, we get that decision, and then we wind up getting the press conference later on. Lots of questions that I'm sure Jay Powell will try very hard not to answer. Michael McKee, Bloomberg National Economics and Policy Correspondent, joins us now from D.C. So 2 things. You got a job market that's cooling and inflation that's cooling. How do you think that Jay Powell talks about these 2 things?
Well, the job market isn't cooling all that much. It looks like people aren't getting hired at this point, but we're not seeing a major rise in the number of people getting fired. And that's what the Fed is focused on in the shorter term. Inflation is going to rise, but it seems to be rising slowly, and a lot of it may be because companies are holding back since they don't know what the ultimate tariff rates are going to be. So we're all kind of in suspense right here, and the Fed will look at it as just more reason to do nothing.
So the dot plots, DOTS, go on the Bloomberg terminal. That's where you can track that stuff. Any reason to believe there'll be something unusual or newsworthy there?
I don't think there'll be a whole lot that's newsworthy. There's a debate among economists about whether they'll say 1 cut this year or 2 cuts this year. First of all, this year is sort of an arbitrary concept. I mean, the Fed doesn't look at the end of the calendar year and say we got to have X number of cuts by then. So does it really matter if you're talking one or two when you're basically admitting that you don't know what's going to happen and your views are going to change? Maybe Wall Street would be interested in what they say they might do in 2026 for two reasons. One, because by that time, whatever the president is going to do will be done, and because we'll have a new Fed chair in June. But up to this point, I don't think it's going to matter a whole lot.
So Edward Bolingbroke of Bloomberg had a piece out that said that there's some positioning in the market that shows that whoever's going to be the next Fed chair is going to be crazy dovish and just cut really aggressively, and that's just what the market is positioned for on one trade. Is that realistic, you think?
No, that's not realistic. But heck, people trade on the tails
less than that,
right
that's
and left.
Sure.
For less than that. There are 19 people on the Open Market Committee, 12 of whom voting at any time, and the chair is just one of those. The chair's job is really to try to develop consensus. And if Fed people who've been there much longer than whoever the chair is going to be are seeing inflation as a problem, they're not going to be saying we'll cut rates crazily. And even if they were thinking the economy needed a rate cut, they're not going to do 2.5 percentage points as the president wants at one time. So I think that's kind of a ridiculous trade. But if you want to put it on, it's your money.
Michael, as you well know, the leading news over the last 24 or so hours is just kind of ratchet up in the tensions in the Middle East with President Trump saying the U.S. is considering some action there. I suspect that's going to be put in front of Fed Chairman Jay Powell in the form of the question and answer period. What does the Fed typically say on just kind of geopolitical tensions generally?
Well, for geopolitical tensions, it generally means that energy prices are rising, and the Fed's had a lot of experience with that, and they've learned their lessons, and Jay Powell would probably say we will look through it because it is likely to be temporary. There are no instances where gasoline prices are really what's going to matter to the American people. Gasoline prices or oil prices have gone up and just stayed up and continued to go up. Without coming eventually down. The Fed can't do anything about that. Raising interest rates or cutting interest rates isn't going to change the price of gasoline or oil. So they'll watch that. But then the question becomes beyond that, does it affect the economy? In other words, do people stop spending because they're putting all their money into the gas tank? Those are questions the Fed will have to grapple with. But right now, we don't really know what's going to happen. We're all in suspense. And so this meeting, the Fed can't do much, and Jay Powell can't say much about energy and Iran and what's going on there.
Usually, yeah, I know. I wonder, how fast this presser will actually go, because he won't be able to answer literally probably any question that is thrown at him. Usually, what's the lag between, say, rising prices somewhere in a variable like food or gas or something, and then how long until consumers wind up spending less to compensate? That lag must be quite large, no?
It depends on the product, really, basically, Alex. When you have something that's perishable and moves fast, like food prices, they can change very quickly. We've seen beef prices go up quite a bit recently because of the screwworm infestation that's closed off cattle imports into the southern United States. But then long lead products, there's a column out today by Claudia Sahm pointing out that apparel products have not risen significantly in price, even with tariffs already on from China, in part because the long lead times involved in the ordering mean that people were getting in stuff before the tariffs were applied. So it does take some time there to follow through, and then it's got to go through the middlemen to the retailer before you even notice it. So it really is a kind of a process that you have to watch that will take some time to play out.
All right, Mike, thanks a lot. Really appreciate it. Looking forward to the question. Looking forward to the presser. Mike McKee, Bloomberg National Economics and Policy Correspondent. Okay, for our listeners in the U.S., here is a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now. When you take a look at the market, S&P's up.
Yep.
0.5%. Volume is like nowhere to be seen.
No, oil's down $1. 73.82 for West Texas Intermediate.
Just unbelievable when you see the headlines that are coming out. You have equities on the upside, a little bit of risk on there. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Wednesday, everybody. Shortened holiday trading week. The markets are closed on Thursday, then back for trading on Friday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're going to follow all the news for you within the next hour. Enda Curran is Bloomberg Global Economy reporter. He'll join us on the latest global trade tensions as President Trump flexes his security muscle when it comes to Iran and Israel. Kind of how does that then filter through to any trade situation? Mandeep Singh of Bloomberg Intelligence will join us on Metascale AI valuation, which is tremendous. And Danielle DiMartino Booth, as always, CEO and Chief Strategist for QI Research, will join us ahead of that Fed meeting and the Fed decision coming out at 2 p.m. today. But let's kick it all off for you right now with a Bloomberg Business Flash. And for that, we go to John Tucker.
All right, right now, a low volume day and ahead of the Fed decision at 2 p.m. The major stock average, right now they're pushing higher on hopes there's going to be some sort of resolution to the Iran-Israeli war. Some of the strongest moves we're seeing right now, again, in the oil market, crude oil prices are dropping. Let me do the international benchmark. That will be Brent, down 1.6%, still at 75.23 a barrel. Marvell Technology rising, analysts positive on the chip maker following an event focused on AI. That's one of the standouts. Those shares right now up over 8%. Meantime, Chuck Lieberman at Advisors Capital says investors may shrug off the latest turmoil.
The market did react with each development. We do see a market reaction, and typically to the downside, but then the market bounces back. So yes, the market is very resilient, but yes, it's very well aware of what's going on.
Right now, the S&P 500, 31 points higher, up 0.5%, 6,014 on the index. The Dow Jones Industrial Average up 254 points. The NASDAQ 100 up 127 points, and that is a rise of 0.6%. Put on your thinking cap. Friday, this coming Friday, the 50th anniversary of what?
Okay, can you give us multiple choice?
No, I'll give you a hint. Dun, 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 dun.
Jaws. This is why I don't swim. Go ahead.
You're right. When it launched in 409 theaters, June 20th, 1975, it grossed then a record, get this, $7.9 million in the first days. So Jaws kind of set the template for the blockbusters that would follow.
Yep, absolutely.
Based on Peter Benchley's book. So Peter Benchley was inspired by what events?
The shark going up some freshwater river in New Jersey.
Right, Matawan Creek. So if you're going down the Garden State Parkway, look over to the west, and there's a creek there in Matawan by 117. Bunch of kids on a hot summer day were swimming there. Sharks swam all the way from the ocean, the bay, through that river into the creek, and ate them. And that was the inspiration for the story in the movie, the shark attacks at the Jersey Shore.
And this is why thanks for that.
Peter Benchley,
no self-respecting shark. There's nothing to her. It's
No
like,
way.
you'd have
No
to have
way.
about 20 Alexes for a good meal.
Exactly.
That's a compliment.
I'm just the appetizer, man.
This is the appetizer. All right, John Tucker, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Alex Steele. And we're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at today?
Let's look at some of the travel companies. Let's look at Norwegian Cruise Line, which is actually up about 1%. The ticker is NCLH. But when we started looking at that, this company actually took a big downgrade today. We have Argus Research cutting the recommendation on the cruise line operator to hold, writing, given the company's highly leveraged position, we think the current share price adequately reflects the situation, which the current share price, Norwegian was down 30% year to date. So that's a pretty big statement. Obviously, those stocks have been volatile during the Israel-Iran conflict. Today, we're seeing some relief. So that's the reason the stock is up today. But definitely a lot of pressure. We're seeing analysts clearly downgrading and putting more pressure. And air travel stocks are also suffering of that. That said, Argus remains positive on the stock in the long term, citing prospects for resilient cruise demand over the next 5 years. So there is some optimism, but coming from deep sell-off.
All right. What about Netflix? That stock up 0.8%. Going to add some live TV channels from French broadcaster?
That's really fascinating, right?
Yeah.
And it's also, I saw that comes one day after a report reveals that the total market share of streaming had surpassed broadcasting cable. And now Netflix is going after cable, clearly. The ticker is NFLX. It's seeing a little spike today, but it's interesting because it comes after comments from Netflix co-CEO. We obviously have this split from Warner Brothers and Discovery, and he said that this is part of a broader shakeout. So clearly, maybe they're looking to get more into that TV. Of course, this is just a kind of a smaller market. It's adding live television channels and show from French broadcaster TF1, but it's part of a bigger growth effort. Netflix is up 38% year to date. It's been adding National Football League games, wrestling matches. It's been growing internationally very aggressively, and so far investors have been rewarding this pretty good.
Amazing. That's the tipping point when you saw streamers take a bigger share than everything else. It's never going back. All right.
Definitely not.
What's the last one you got for us?
Let's take another look at Serco because it's up 12%. The stock is really soaring year to date. It's a stretch because it recently IPO'd, but the stock is up 400%. Really one of the splashiest debuts we've had in years. But of course, the boost today is coming off legislation. The U.S. Senate passed stablecoin legislation. That is obviously one big tangible return after the crypto industry supported President Trump and invested really a lot of money in his re-election campaign. The Senate bill is saying that dollar-pegged stable coins would have to hold dollar-for-dollar reserves in short term. So we're yet to see if there is more optimism for that stock, but just incredible rally.
Yeah, talking about a proxy on that. All right, Denitsa, thanks a lot. Bloomberg's Denitsa Sakova joining us. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So something is confirmed when it comes to Nippon Steel and U.S. Steel. I'm still trying to understand if it's a takeover, if it's a partnership, if it's a golden relationship. I really couldn't tell you, but you know who can? Joe Doe. He's an economic statecraft reporter. He's also covered the steel industry for many, many years. Joe, what kind of deal is this?
Well, I mean, this is a takeover.
It's a straight-up takeover.
So the decks just hit, and I had a chance to look through them right before I got here. It's a $14.1 billion deal, which is what was agreed to in December of 2023, and an additional $11 billion in investments across the footprint of U.S. Steel. Now, here's the key thing. There's a golden share, and what is now confirmed that I think could be considered by some troubling, but also a hurdle for many who are investors in Nippon Steel. The golden share gives the President of the United States in perpetuity decision-making abilities over a number of company-specific decisions that every company on planet Earth has to make over periods of time. Capital investments, decisions to lay off workers, decisions to cut capacity. And then there's some basic ones like a decision whether or not they want to move the headquarters and change the name.
I've never heard of a golden share type of mechanism. Have they been used? Has this been used before?
Golden shares are not unusual outside of the United States. We see this in Europe. We do see this across Asia. But the United States takes a bit of pride in the fact that it doesn't do golden shares. Now, initially, Josh Wingrove and I, one of our White House reporters, had been reporting on this golden share, and the initial reporting we were getting was that, well, the golden share isn't exactly a golden share, it's more just some veto powers. But what has become clear is the golden share gives specific power to the President of the United States. There's all sorts of questions that I have there that I don't know if we can get into right now, but I do think these are the questions that investors in Nippon Steel are going to have to be asking themselves.
Okay, here's the dumb one. Why did Nippon Steel go for this? Like, why spend $14 billion to have your investment in the U.S. run by the President of the United States?
I think it shows how much Nippon Steel needed this expansion. The idea was if Nippon Steel didn't close the U.S. Steel deal, they would have to pivot. And the pivot discussions among investors and analysts who've covered this company for years said, well, maybe they're going to build out more steel capacity in India. India is actually their biggest footprint in terms of production, not Japan. But it still left them without a foothold in the United States and North America. And mind you, that is arguably the most important steel market in the world. The automotive market in the United States is unbelievably important for steelmakers. It is a crown jewel. If you are ArcelorMittal, if you are any Chinese company, you wish you could be selling steel into the automotive industry. The margins on that steel are incredible, and the customers are solid gold. You know that they're going to be taking shipments year in and year out. The deals that they make with these guys are 3-year contracts. It's not just ad hoc. So Nippon Steel now, they spent a lot. They put a lot into it, but I think it said how much the executives at Nippon Steel believed that the future of Nippon Steel relied on getting this deal.
Was this deal subject to shareholder approval?
Yeah, absolutely.
So the Nippon shareholders...
Okay. The merger agreement was signed and agreed to back in April of 2024 by all the shareholders. The national security agreement that was signed with the $11 billion investment before 2028 was not subject to that same shareholder approval.
So this golden share did not come up for shareholder vote.
Right. Not a direct vote.
Interesting.
And there's a lot to unpack around that. I mean, to some, this deal's done. The Arbs are probably going to be celebrating having a few beers or enjoying their wife and kids for the first time in a year and a half.
Yeah.
But for those of us who are in the steel market and follow the steel market, it is going to be interesting how the landscape morphs around all of these decisions.
Right. So what is the biggest thing then that you're watching for the trickle down of this kind of deal?
I want to see how Nippon Steel jumps into the market. Are they going to start selling at below market prices to gain market share? There is an argument to be made that the doubling of steel tariffs that we saw President of the United States announce in Pittsburgh 3 weeks ago when he announced the deal is actually because the administration understands that by Nippon Steel getting this deal closed, they are a formidable opponent to Nucor Corporation, which is the largest U.S. steelmaker, and Steel Dynamics and Cliffs. But that also means you're bringing in a very viable opponent who can continue to produce and increase their production in their capacity. That would hurt prices technically. By putting in a higher tariff, this 50% tariff, you are on some level closing out most foreign imports, and therefore you're putting a floor on prices. That will be interesting to see how it plays out. We're already in a tough situation in the steel market right now. It's a cyclical moment. Obviously, the entire trade tariff situation going on is problematic even in the steel industry. I think that's the first thing we're really going to have to focus on.
All right. Joe, thanks so much. Appreciate it. Joe Dope, Bloomberg Metals and Mining reporter.
No, economic statecraft reporter.
Economic statecraft reporter.
He
Even
just
better.
moved. It's a totally new section within Bloomberg to talk about metals and mining and all the risks that come with it and the economics with it.
Exactly. Very good.
All right, let's go to D.C. now and talk about the broader issues of trade. We just talked about the steel and aluminum tariffs, 50%. Enda Curran is a Bloomberg Global Economy trade reporter, joins us now. We've been very distracted by lots of headlines when it comes to geopolitics. President Trump leaving the G7 early. What's the most likely trade deal to be done?
Yeah, it's almost forgotten with all the geopolitical news that the trade and tariff story continues to rumble along, Alex. I think right now there's a lot of focus, obviously, on the legal process, the court challenge, the Supreme Court challenge that those small businesses have brought against the sweeping IEEPA tariffs that were used using the fentanyl flow for justification. But there is a lot of focus on what other levers the Trump administration can pull, in particular the ongoing Section 232 investigation. What that means effectively is that the Commerce Department has been looking into what they can do on imports of, say, pharmaceuticals, semiconductors, critical minerals.
Hey, SM, you out there? You miss your setup today? Hey, I'm Slam, man. So the markets are closed tomorrow and then Friday. I may not have the stream. 1K? What happened? You just didn't get in, or you chickened out, or what? Oh, you didn't wake up. Well, that's a. I can't help you with that. What's going on with this audio here? Damn it. Oh. There we go. So, it's not there. Oh, there. Shit, man. You talked yourself out of the trade. I wish I could talk myself out of some trades. I wish I could. I should go back to bed after I make a little bit of money. Yeah. But hey, the markets are closed tomorrow, so the stream won't be up. Friday, I'm off and I got running around to do, so it might not be on until later. and then I'm gonna leave it running because I'm going to Las Vegas next week, so I'm gonna try and see how long it'll run while I'm gone. But I'll be gone for a week, just so you know, and I'm gonna try and leave the stream up. So hopefully, if the internet doesn't go out or anything like that, we get a few days out of it. Well, Las Vegas, not LA. Yeah, stay out of it. Oh no, I won't be in Los Angeles. Are they in Las Vegas? Are they protesting in Las Vegas? I'm not going to LA. I'm not going to anywhere near California. We're just going to be in the middle of down the strip and in Las Vegas. Yeah, we're just going to Las Vegas. We're going to see David Copperfield. We're going to go to a Fever basketball game, see Caitlin Clark. No, it's Las Vegas. It's our big family vacation, so. But if you don't see it on till later in the day, Friday, I got stuff to do in the morning before I get to the shop. I'll turn it on and then leave it run and see how long it goes. Because I leave Saturday, so before I'm done, before I head home Friday, I'll make sure that it's running. Looks like we got a short coming up here now. You like the short here?
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Ahead of the Powell press conference of the Fed decision starting at 2, major stock averages are higher, but pretty low volumes for this trading day so far. S&P 500, 25 points higher. That's up 0.4%. We're at 6,008. The Dow Jones Industrial Average up 206 points. The Nasdaq 100.
You just got out of the short for $12.50 profit.
U.S. dietary guidelines expect to eliminate the long-standing recommendation that
I think we're going to the VWAP from here.
To 1 or 2 drinks a day. So Booze Company, yeah, I knew you'd like that. Constellation Brands up 0.3% right now. Robert F. Kennedy Jr. considering asking a key government vaccine advisory panel to examine shots that contain aluminum ingredients, which could impact at least 24 vaccines on the market. Right now, ADRs of GlaxoSmithKline, they're down just about 1.1%. Amazon CEO Andy Jassy says he expects the company's workforce to decline in the next few years as they use AI to handle more tasks. And then job cuts at Lululemon Athletica, reducing the corporate headcount by 150 jobs. They cite changes to the company's organizational structure. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube as well. All right, I think we're all used to the crazy numbers being thrown around in big tech and AI, but how about this one? Meta pays $14.3 billion for a 49% stake in a company called Scale AI. That seems like a big number to me. Then I read Mandeep Singh's research note, and it's 15 times enterprise value to sales. 15 times sales, even for like AI tech, that seems crazy to me. So we hauled in Mandeep Singh here to defend this thing or explain it to us. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence. Mandeep, I'm looking at your research. That's a big valuation, for a big company like Meta to, I guess, scale up in AI. Is that what they're doing?
Yeah, and they have a precedent. If you remember, they bought Instagram and WhatsApp back in the day. And if you look at the multiples, that seemed rich at that time. But look, I think in this case, clearly they have made all the right moves when it comes to CapEx. It's comparable to the Microsoft and the Googles of the world. But they've open sourced their model. It's just that when it comes to the usability, that's where they've been lacking the likes of OpenAI, Anthropic, and Google. And I think Mark Zuckerberg is trying to fix that by acquiring this data company. I mean, there's a lot of skepticism whether the data alone is the answer to catching up to the OpenAIs of the world, but clearly that seems to be
I
the
noticed, being a former banker, that they didn't buy the whole thing and they didn't buy a controlling stake. Is this to get around government regulatory oversight, which kind of suggests they can't buy anything, control of anything?
Yes, and precedent here is what happened a year back with the other 3 hyperscalers. So Microsoft bought this company, Inflection AI, brought over the founder, Mustafa Suleyman. Google had an investment in this company, Character AI. They brought over the founder, Noam Shazia.
Your short was good. It's still...
Amazon did something similar. So in all 3 cases, it wasn't an outright acquisition, but an investment.
I think we're going all the way to the VWAP from here. Well, the 50, I think we're going to the
so
VWAP.
That playbook is pretty well established at this point.
Is this a defense or offensive play?
I mean, it's defense because Meta has invested, $70 billion in CapEx just this year on OpenAI, on their AI investment, the data centers. So it's comparable to your OpenAI and Anthropic and Google, but it's just that their models are not as heavily used as some of the other names. And that's where, they are just trailing in engagement. I mean, they have the surface area. Think about it. They get almost 3 billion users to come on their family of apps, Instagram, WhatsApp, and the Core Blue app. They can deploy their AI, which they have done on WhatsApp, but it's just not used. So OpenAI is right now used by their daily active users for 29 minutes every day.
Wow.
Think of how much Meta AI is used, not even a minute.
Right.
So that just goes to show the usage here.
All right, you mentioned WhatsApp. I got to ask you this because this was back in my days covering the stock. When they bought WhatsApp, we said, they can monetize it at some point in the future. That was like 10 years ago, dude. They're just now putting advertising in and thinking about subscription type situation. Is this Meta actually finally trying to monetize WhatsApp?
Yes, and look, messaging is hard. I mean, think about Apple iMessage.
Right.
You can't really show an ad if you're saying your messages are encrypted. You can't really show a targeted ad there. So it's very different from your social media feed. At the same time, Meta does have a $10 billion existing business even before this launch on the update page or the update tab, where click to messaging ads. So they would show you an ad on their Messenger or even your Facebook feed with a click to WhatsApp, and they charge you for that. So a lot of small businesses do use that click to messaging ad, which is outside of WhatsApp, to bring people to WhatsApp and solve for that customer service use case.
All right, Mandeep, thanks a lot. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst. Thank you very much. It's also Fed Day, by the way. 2 p.m., get the Fed decision, then you get the presser. Danielle DiMartino Booth, the CEO and Chief Strategist for QI Research, and joins us now. Okay, what's the thing you're looking for?
Is he going to be dovish? Is he going to be hawkish?
Neither. He's going to want to be neither.
He does. He absolutely, he wants to be straight down the middle and say absolutely nothing of consequence. And, the more President Trump pokes the bear, the more reticent Powell's going to be to say anything. He does not want to be viewed as being a political pawn in this particular setting. And you can't blame him for that. Look, if he was uncertain in May, now that we have more geopolitical uncertainty on top of it, now he's more uncertain. So he'll be able to really, really stay in the middle.
I think the consensus, correct me if I'm wrong, the consensus is growth slowing, but no recession. Inflation, not there. Prices maybe even coming down, no problem. Is that kind of?
Oh, I mean, look, shelter takes a really long time to show up at inflation, and shelter takes a really long time to move out of inflation. It's 36% of the CPI. So this is going to be a very long slog given what home builders are telling you, given what Lennar has said about incentive spending.
So you think inflation is higher than maybe the market's discounting or the data is showing you?
I think inflation's much lower.
Much lower, okay.
Because there's a long lag time in declining in shelter disinflation actually showing up.
Cool.
But growth is a lot worse than we think. Or the job market maybe is a lot worse than maybe we think.
I think the job market is telling us with pretty good certainty that it's weakening. I mean, we're 0.8 percentage points above the low in the unemployment rate. We've got a shrinking labor force participation rate. We're 10,000 shy as of last week's initial claims that were revised up to 250,000. We're just 10,000 shy of the June 2023 post-pandemic cycle high in initial jobless claims. There's plenty of signposts out there.
You often quote to us a function I'm not really familiar with, the bankruptcy dashboard, BCY.
BCY's hot today.
What's it telling you?
BCY is telling you that bankruptcies in 2025 are larger.
Okay.
We've just had Apollo Global Management announce it's going to be helping Wolfspeed file for Chapter 11, $6.3 billion in debt, largest Chapter 11 filing since Steward Healthcare filed with a little bit more debt than that in May of 2024. But the bankruptcies are bigger and they're more frequent. So S&P Global goes down a notch. Bloomberg measures companies with 50 million or more in debt. S&P Global goes down to 2 million or more in debt. And just to give you a quick benchmark, 306 bankruptcies have been filed based on that gauge through May, and that compares to 264 for the same period in 2024. So this is the highest level since 2010. People are losing their jobs.
Okay, so based on that, why wouldn't the Fed cut today? And I appreciate that they have the uncertainty, but is Powell seeing inflation coming that we don't know about? Is he seeing a stronger economy we don't know about?
Well, for heaven's sake, his supercore, which he conceived out of thin air, you could never pull up ECO Go and find supercore before Powell invented it. Even supercore's got a negative sign in front of it. So I think he knows. And the market-based core PCE, which he's referenced multiple times, if you use the Cleveland Fed's new tenant rent index, that is well below the Fed's 2% target. But again, I think this particular Powell does not like to be bullied. And the president is constantly bullying him.
Called him stupid today.
God help us.
Talk to us about just, it feels like tariffs, the inflation pressures that people were concerned about with tariffs, I guess we could say we certainly haven't seen them yet.
No, we haven't.
Do you think it's a timing issue, or do you think most companies are taking it in their margin as opposed to passing along to their customers?
Companies are telling you they have no choice.
Okay.
The purchasing power is simply not there. We're about to hit peak driving season in the United States. So maybe there hasn't been a spike in prices at the pump, but it's going to be visible because so many Americans canceled plans to take their summer vacations on airplanes and are choosing to drive. So this is, look, the inflation's going to be there, but that just means that Americans are going to be spending that much less on services, and that's exactly what we're seeing in the data. Services disinflation.
So when do you think a cut then is most likely? If the bullying is now the main reason for not cutting? October is what we're fully pricing in right now.
I think that there's a very high probability of late July.
And if the Fed does not do that,
what
does the data look like in 3 months from then?
A year ago, July, the Fed did not cut rates, and then it came in with an unusually large rate cut in September of 50 basis points, which
you could maybe
Vice Chair of Supervision and Banking, Michelle Bowman, dissented.
Interesting. All right, here's the Danielle DiMartino booth. Dallas, Texas, temperature, weather for the next 10 days. Sunny and 95 every day.
It's blazing.
Now, you guys are ready for that. You guys can handle it.
Yeah, but they don't go outside. Like
exactly.
Like you just stay inside the whole time. You're the one going to the beach.
Yeah.
I mean, look, Toronto has tunnels underneath the building for extreme cold. Houston has tunnels underneath the building for extreme heat.
Yeah.
I was in Oklahoma when it was over 100 degrees, and it was, I mean,
unbelievable.
By the
that
way,
kind of heat is insanity.
First ever heat advisory for Alaska.
No.
Really?
Yes.
When? Now?
Like right now.
What was the temp?
I don't remember.
85?
Look it up.
I mean, that would be something. Wow, that's yeah. So he's like, I'm gonna go
Juneau's
to the
heating
beach
up.
and,
Yeah,
you know.
I'm going to the beach. Danielle DiMartino Booth, thank you so
Inside.
much. That's why all the Dallas people go to like Montana. They go to California, where I had a house. My whole street was Texas.
Sure.
Danielle DiMartino Booth, CEO, Chief Strategist, QI Research, joining us live here in our Bloomberg Interactive Broker Studio. Again, the Fed day, the timing here, 2 o'clock statement, 2:30 press release, 2:30 press conference. Tom Keenan, the surveillance team, will have their Fed Decide show at 1:30 p.m. Wall Street time, Bloomberg Radio and Television. They will break it all down for you. Lots of good guests looking at the Fed, so that'll be a good and wonderful thing. That's coming up at 1:30 Wall Street time. S&P 500 up 25 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now we have 10 of the 11 major industry groups in the S&P 500 are higher. Consumer discretionaries in the lead. That's home to shares of Tesla, run the most actively as well. Energy, the biggest drag as oil prices are declining today. Right now, Brent, the international benchmark, down 1.4%. We're at 75.37 a barrel. Ahead of the Fed decision, 2 p.m. Wall Street time. Labor market data showing jobless claims ticking down last week. That matched estimates. At the same time, housing starts sliding to a 5-year low. Among some of the standouts today, stablecoin issuer Circle Internet Group, those shares right now 15% higher after the Senate passed stablecoin legislation. Meantime, Tracy McMillian at Wells Fargo is urging investors to hedge their investments.
We are allocating to commodities, especially energy commodities and precious metals like gold. We think those are good hedges against geopolitical risk. Also, aerospace and defense stocks.
Right now, the S&P 500, 24 points higher. Again, this is low volume. Right now, up 0.4%, 6,007 on the index. The Dow Jones Industrial Average up 158 points. NASDAQ 100 right now up 109 points. That is up 0.5%. Popsicle is out with a collection of glossy lip oils inspired by the nostalgia of ice pop stained lips.
Ew.
You know,
Ew.
no, not ew. When you
Ew.
had like a red pop in the summer, your lips get all red.
Yeah, and sticky.
Limited
That's
edition
what we're talking
glosses available in 3 flavors, by the way. OMG orange, cheeky cherry, and groovy grape.
I like it.
I prefer
Product
the
extension.
bomb pop myself.
I 100% am against sticky on my lips. Like, I'm very anti-sticky lip gloss. I'm very weird about that.
You are
I'm
no
very
fun.
chill, but
no
just that one thing.
fun in the summer whatsoever. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of the topics we've discussed with a lot of the smart investors that come through here is we've seen a bounce back in a lot of risk assets. The S&P 500 index, the stock market in general, has bounced back from the lows from earlier in the year. Bonds have been pretty steady, but one area we haven't seen recovery is in the U.S. dollar. It is down about 9%, Bloomberg Dollar Index year to date, and it's the subject of a big take story on the Bloomberg today, and we love the big take stories, entitled, Trump is Driving Off Investors and Imperiling the Dollar's Reign. Carter Johnson, one of the reporters on that story, joins us. He's an FX reporter for Bloomberg News. Carter, why is the dollar still down? Why? It seems like people are, they sell in the dollar, they're not coming back.
That really seems like it's it, Paul, and thank you so much. But I mean, I think it's a lot of drivers. I mean, the big thing is you think about the Fed, sort of Fed's in a wait and see mode, the Fed's on hold. We're not getting any sort of big market impulses. We'll see later what happens, but we're not getting any sort of big market impulses from the rates and the yield side. And so people have sort of, the market feels like, likes to focus on one narrative at a time. And for a while that was tariffs and volatility and uncertainty. And that was the story through April and May. What's interesting is the dollar sales have really kept going, even as the stocks have sort of rebounded, done their thing. And it really reflects just sort of like if there's sort of a pure distillation of how do you sort of sell macro U.S. uncertainty, it seems like the dollar is the move.
So that's what is confusing to me. Is it just, hey, I was too focused in U.S. assets, I got to diversify, full stop? Or is this the beginning of a structural shift in how currencies move and operate in the world?
It's totally a great question, Alex. And that is the question. And so far, I feel like what we're hearing is it's the first. I was so hugely overweight U.S. assets, U.S. stocks, probably unhedged going into the end of the year. And now, look, I've gotten crushed. Stocks got crushed in the first quarter. Dollar got crushed. So maybe I'm actually going to hedge a little bit more. And it's not like I'm selling everything U.S., but really I'm just sort of rethinking some of my diversification. The thing is, if we get big money and real money players starting to do that, even a little shift in a hedge ratio or sort of a minor shift in thinking, that's a lot of money in terms of flows.
There's even some talk, which I can't even imagine it, but that a threat to the U.S. dollar as the reserve currency. I'm like, okay, so maybe you're down on the U.S. a little bit, but where are you going?
That's the question too. Yeah,
Europe.
absolutely.
That's what you're doing, right?
The euro?
Well, yeah, so maybe you're going to the euro. But, you know, the euro bond markets aren't what the treasury markets are, and at least not yet. Of course, they've had their own sort of fiscal impulses and a lot of interesting things going on over there this year. But that is still the question. I think Europe is absorbing a lot of this. If it is happening, maybe it's being spread out over a lot of different currencies. You know, if you look at sort of the IMF's official data over time, the U.S. is a share of those official reserves. It has come down about probably 20 percentage points over the last couple decades, but it hasn't gone all to China or all to Europe. It's gone to a little bit to China, a little bit to Australia, a little bit to Canada, gold, you know, so it's really been spread out, and maybe that's what we're looking at.
What about emerging markets? I mean, I know you mentioned China, but aside from that, Brazil, other areas in EM.
Yeah, I mean, EM has been, and I will always defer to my EM colleagues here, but it has been a really interesting year because you get the carry in EM. You know, if it's really interesting to think about Latin America, EM, Brazil, Mexico, if you're starting to think of it as a rotation, a diversifier out of the U.S., and you get the carry, you get these nice yields, that could really accelerate more inflows than we've been even seeing this year as the dollar weakens. Yeah.
Now you have a chart here just showing the kind of the futures market, and derivatives traders are now bearish on the U.S. dollar. Now they've been showing a net bearish position. It's not like that never happens.
No.
I mean, it happens periodically. So is there something we should be drawing into this? Or again, it kind of goes back to Alex's question: is this something more fundamental, or is this just a trade?
Yeah, you know, I think what that shows is right now this is just a trade. Just from that perspective, you know, this is the fast money. These are the CTAs, these are the hedge funds. These aren't the sovereign wealth funds or the pension fund managers that are reflected in this futures data. But it does show just how quickly, you know, we went into the beginning of the year. They had a long position, those, you know, fast money traders, 30 billion long, 35 billion long USD, and how quickly that shifted in the course of basically a quarter. That is pretty unusual. So again, that sort of speaks to the speed of the move in dollar that we've seen this year. The next question really is, as you said, how sustainable is it? Yeah.
What about the yen? What role is the yen playing in all this?
It's a great question too. I mean, the yen is tricky because you've got the BOJ, and you know, they had their own meeting this week. The direction of travel for the BOJ is higher yields and sort of, you know, sort of tapering bond purchases, et cetera. Like, you can sort of have a directional view on rates in Japan. But again, it's a big market, but how much, you know, they're already huge dollar holders of dollar debt. I mean, how much could they really absorb if you know, a bunch of global investors started to sell dollar and go to yen? It's just sort of, it's sort of hard to imagine at this point. Certainly, though, I can imagine that some of that would sort of be absorbed in the Japan markets.
Any feeling coming out of the U.S. government about the dollar? I mean, President Trump says he'd like, I guess, a weaker dollar to help with our manufacturing, sell stuff overseas and that type of stuff. Is that kind of a policy of the government, do you think?
You know, definitely not explicitly. So that's the first thing I would say is in no way have they been explicit about wanting a weaker dollar. If anything,
all right.
And,
looks like we didn't get the VWAP.
Whether it's in interviews with Bloomberg, with
I guess
other,
we could still roll over, but stochastics looks like we might be back on the swing up.
But the market is basically
to another.
I have to say this, but we don't really.
Another EMA cross.
And that's because, you know, Trump, I think he told Business Week last August on the campaign trail, the strong dollar's hurting us. Like in the first term, Trump talked all the time about wanting a weaker dollar. So
like real work.
Certainly not an explicit policy, but I think markets and traders basically, they hear Bessent say we have a strong dollar, they don't believe him. That's sort of the sense. Yeah.
Really good stuff. I would definitely check it out. It was a great piece. Lots of great detail in that. Carter Johnson, Bloomberg News FX reporter on the Bloomberg Big Take. You can get that on Bloomberg.com/Big Take. You can also go ahead and check it out on the terminal as well. All right, coming up, we're going to talk to Kevin Tealsley, founder and CEO of GEO Academies, to discuss how that organization is focused on breaking the cycle of poverty by providing access to exceptional, non-traditional educational opportunities to all families. Education, of course, always so important, and even more so now with the trauma related to private universities in terms of funding. So we will get his take on that. Looking forward to that. All right, taking a look at the markets. We are taking the S&P is just up by 0.4%, but volume quite light. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Wednesday, happy Fed Day. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. You can catch us out on YouTube as well, streaming live there. June is Pride Month, so over the next couple weeks, we're going to highlight segments on topics related to equality. And today we decided to speak to Kevin Tilsey, founder and CEO of GEO Academies. The organization's focused on helping to break the cycle of poverty through access to education. Super pressing topic right now. Hey, Kevin, can you walk us through specifically what your company does?
Okay, thanks for having me. GEO stands for Greater Education Opportunities Foundation. And what we do is we're a nonprofit, and we support and manage and start public open enrollment charter schools in the country. We're in Louisiana and Indiana right now and headed to Ohio.
Talk to us about or describe one of your schools, like what grade levels and kind of what's the focus?
What we're most known for, first of all, we're kindergarten through 12th grade, but we take a very business-like approach to what we do in the sense that we believe in spending the money most effectively and efficiently for each student's needs. And there's nothing in the law anywhere in the country that says all you can get with K-12 dollars is a K-12 education. So we're best known for students graduating from our high school with a full associate degree. That's 2 years of college that's already paid for by us, earned by them. We're also, I believe, the only network in the country where students have actually graduated having earned a full bachelor's degree before graduating from high school.
How does school choice benefit the U.S. workforce, and how does that align to the DOE?
Well, I think we're completely aligned with the current U.S. Department of Education's goals of preparing students for success, to be successful citizens in the community. When I use the term college, that's a universal umbrella name that I put for both college and career. And what we're trying to do is get our students to graduate not only from high school, and not just to go to college, but to complete college. And to say that we have a problem in the United States is a bit of an understatement when it comes to college completion. And it's not necessarily because of lack of money. The U.S. Department of Education's biggest job is to loan money for kids to go to college. So they do student loans. You've probably been following the student loan forgiveness program under the previous administration. The reality is the U.S. Department of Education, and frankly all the states across the country, have either Pell Grants or loans or college scholarship programs. And in most cases, they're a failure. We have students borrowing money or getting money who have absolutely no college experience whatsoever. And so does that make any sense? If you're an employer and you're hiring somebody to come take a job, the very first thing an employer is going to ask is, what's your experience? But when it comes to college loans or grants, Pell Grants, FAFSA, which you've probably heard of, the Federal Student Loan Program, even state grant programs, there's no question on there that asks, what's your college experience? And you may say, well, these are high school kids. Why should they have college experience? Well, many schools across the country are doing dual credit and dual enrollment now. So if you know that you're going to need a grant or a loan by the time you graduate from high school, maybe you ought to be getting some of that college experience while you're in high school. And then the loan and grant folks, or the officers that are reviewing the opportunity, they would have a question there that says, do you have any college experience?
Right.
How did you do? So that when they're borrowing that money, the borrower knows what they're getting into. Makes sense to me.
Yeah. Kevin, what's the economic model for GEO Academies?
We try not to rely on philanthropy. We focus 100% on using the public tax dollar, the federal and local and state dollars that every traditional public school gets. And we just try to get as much education as possible for each of our students. We do need philanthropy to start the school, but after we get it up and running, we are self-sustaining.
Really great stuff. Good luck. Really appreciate it. What actually is your biggest hurdle right now? before we let you go?
I think the biggest hurdle is getting adults to understand that when we get kids that graduate with an associate degree or bachelor's degree, that is a great start to their career and their lives, and it benefits all of us. Believe it or not, there's some adults out there that think kids in high school should enjoy high school. Well, in many cases, that's okay. But in the student population that I'm serving, which is Gary, Indiana, Indianapolis, and Baton Rouge, very low-income communities, these kids are ready to rock and get going. They don't have time to sit around and enjoy the traditional high school.
Right.
They want to get busy with their life. They want to get moving and earning an income and, being successful.
All right. Really great story. Thank you so much, Kevin Telsey. We wish you all the luck for
Thank you so
that
much.
in all your endeavors. He is the founder and CEO of GEO Academics.
Yep, it's a pretty cool story, I thought.
A really good
Yeah,
story.
yeah.
It's nice to have these sort of off the beaten path, but really
Yep.
important to our society stories.
There are good people out there doing good
Good
work.
stuff.
That's kind of how I feel about it.
All right, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM, channel 121 is presented by Ship Station. Stay with us. Your top stories and global business headlines are coming up right now as we take a look at the S&P. Going nowhere, honestly, guys. We're up 0.3%. Volume light. Fed coming out later on today. Can we say that it's going to be a very boring meeting? I mean, I'm assuming. Like, what?
Undersell it too much.
What? Yeah, it's going to be so exciting. Definitely stay tuned. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The Supreme Court, in a 6-3 decision, has upheld Tennessee's ban on gender-affirming care for transgender minors. CBS's Jan Crawford.
They're rejecting claims that there's any kind of equal protection argument. And they're also rejecting or deciding not to decide for now, and this would have been a major expansion. They're not going to decide how they're going to look at transgender people generally under the Constitution.
In her dissent, Justice Sonia Sotomayor said the decision abandons transgender children to political whims. 26 states have laws similar to the one in Tennessee. Iran's supreme leader has rejected President Trump's call for an unconditional surrender. Trump was asked today what he meant by that.
Unconditional surrender. That means I've had it. Okay, I've had it. I give up. No more. Then we go blow up all the nuclear stuff that's all over the place there.
CBS's Ed O'Keefe says the president was also asked if he'll use the U.S. military to strike targets in Iran, as Israel has been doing for days.
He suggested there he may do it, he may not do it, which of course will be heard around the world as holding us all in suspense as to what exactly the United States may do, if anything, to join Israel in its attack on Iran. He did suggest that Iran has offered to come to the White House for talks and that he turned those down, but the United Nations mission of Iran a little while ago on X refuted that, saying that is not the case.
Iran's leader also said U.S. intervention would cause irreparable damage. In Washington, tense debate as Republicans at a Senate hearing take up former President Biden's mental state while in office.
Republican Senator John Cornyn co-chaired and asked about what should be done when the president is incapable of performing his duties.
We need to know who was in charge during the last months of the Biden administration.
Democrat Dick Durbin says lawmakers should be focused on things like the assassination of a Minnesota lawmaker and
President Trump's unprecedented deployment of the U.S. military in Los Angeles.
Allison Keyes, CBS News, Washington.
It's expected the Federal Reserve will not take any action on interest rates when policymakers conclude a two-day meeting today. President Trump called Fed Chairman Powell stupid for not lowering them.
Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people.
The cereal maker General Mills, which also owns Pillsbury and Betty Crocker, says it will remove synthetic coloring from all of its products by the end of next year. Wall Street's right now, the Dow Jones Industrial Average up 140. This is CBS News. A tragic chapter of Ireland's past is being unearthed at a former institution for unwed mothers.
Self-denial and mortification of the flesh.
Ireland's mother and baby homes and the nuns who ran them, now made notorious by films like 2013's Philomena.
Their suffering was atonement for their sins.
One of the mothers was 14 years old.
9 years after human remains were first found there, preparations for excavating a mass burial site at one of those homes have finally begun. It's believed the remains of nearly 800 newborns and toddlers lie there, dumped in a disused sewage tank. Vicki Barker, CBS News, London.
The new Trump mobile service, which is touting American-made smartphones, one of them gold, has taken down its coverage map after someone realized it included the Gulf of Mexico. Trump, of course, calls it the Gulf of America. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Washington turns its attention to the Fed. Welcome to the Wednesday edition on this Fed Day, with President Trump calling Chair Jay Powell stupid before he even announces his decision on rates. All the while, the world is still waiting for a decision on whether the U.S. will join Israel's attacks against Iran offensively. We're going to get the latest on all this from Bloomberg White House correspondent Kate Sullivan with insights on military operations. In an important conversation ahead with Dr. Rebecca Grant at the Lexington Institute, we have analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the duration. Wall Street's on the rise, and we start there right now with Charlie Pellet. He's got his update on the markets for us to start things off in New York. Charlie, how we doing?
Thank you very much, Joe Matthew. A lot of green on the screen. Indeed, just under 2 hours to go until we get that FOMC decision. Count on Bloomberg for the very first word when it drops 2 p.m. Wall Street time. Right now, stocks higher across the board. Stocks are gaining after President Trump said Iran has reached out about the possibility of negotiations, bolstering hopes Tehran's conflict with Israel will de-escalate. Oil erased gains. Right now, we got West Texas Intermediate crude down 1.4%, but stocks higher. Right to the numbers here with the S&P up 22, back above 6,000. The S&P at 6,004, up 0.4%. The Dow up 144. That is a gain of 0.3%. And NASDAQ up 100 points now, up 0.5%. Bottom line here, off session highs, but still gains ahead of the Fed decision. 10-year 4.34%, the 2-year 3.91%. Gold little changed, up 0.1%, 33.91 the ounce, and West Texas Intermediate crude, as I mentioned, 73.78 a barrel, down 1.4%. The Fed will make its June decision 2 p.m. Wall Street time. Policymakers widely expected to keep rates on hold for a fourth straight meeting, but former St. Louis Fed President Jim Bullard says his colleagues could make changes to their Summary of Economic Projections, or SEP.
This will be the first SEP post April 2nd, and so I think it will be a more stagflationary SEP, and I think markets are already anticipating that, but there is some room there for surprise depending on where that goes. And so I think during the chair's press conference, he'll want to be talking about the SEP.
And, of course, the news conference, 2:30 p.m. Wall Street time. Texas Instruments touting plans to spend more than $60 billion on semiconductor plants in the United States. Right now, we've got shares of Texas Instruments up by about 0.7%. And Intel has named a new engineering leadership as part of a turnaround effort under CEO Lip-Bu Tan. Recapping, stocks higher. S&P up 22, up by about 0.4%. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Thank you, sir. Good to see Charlie Pellet as ever. The Wednesday edition of Balance of Power, off and running here live from Washington. Thanks for joining us. I'm Joe Matthew in the nation's capital here on Bloomberg Radio, satellite radio, channel 121. On YouTube, where you can see us now, search Bloomberg Business News Live, and on Bloomberg Originals as we bring it all together on what is day 6 now. If you can imagine how much our world has changed since last Thursday. Day 6 of fighting between Israel and Iran. No unconditional surrender by Tehran as demanded by the president yesterday. And so we're still in this state of limbo here, floating a couple of feet above the ground, waiting for news from the White House. And the president was certainly asked about it. He found him on the South Lawn a little while ago with a group of workers who were there to install a flagpole. They actually held an event around the flagpole. The president was asked about whether the U.S. will join Israel offensively in its war against Iran. Here's what he said.
I mean, you don't know that I'm going to even do it. You don't know. I may do it. I may not do it. I mean, nobody knows what I'm going to do. I can tell you this, that Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to people, why didn't you negotiate with me 2 weeks ago? You could have done fine.
You could have done fine, he says. Now Iran's got a lot of trouble. Trying to not show his cards on this, having spent a good deal of time in the Situation Room yesterday with his national security team. And as I mentioned, the world waiting for a decision here. Whether we hear or see from him again today, of course, has yet to be seen. And whether we get news on Truth Social, all the same. This is big stuff, and Kate Sullivan is covering it for us here from her perch at Bloomberg. White House correspondent Kate, it's great to have you back. The president's demeanor today was interesting. He seemed kind of tired. He had the hat on, which sometimes, I don't know if it's a bad hair day or whatever, but he looked like...
Always got the hat on, yeah.
Well,
different
yeah,
hats,
white
too.
MAGA hat today.
Yeah.
Group of workers behind him, and he spent as much time turning to talk to them, kind of riffing with them as he was with the press. Is this a moment of indecision for this president?
It could be. You know, I think what you heard there, I mean, the I may do it, I may not do it, nobody knows what I'm going to do.
How about that?
How about that? I mean, clearly no clarity there. One thing that I took away from that exchange too was the door is still cracked open for negotiations. And he said, you know, we may meet, and said that the Iranians wanted to, or suggested that they come to the White House.
That's kind of news, right?
That is news. And, you know, very unclear whether that's actually going to happen. I think, you know, Witkoff has been leading these discussions with the Iranians. I think that could be a more likely scenario, that Witkoff meets with them. But, you know, at this point, there are reports that Trump is leaning towards a military strike. It's also possible that, you know, once again, we're seeing Trump deploy the same kind of tactic here and making these very public aggressive threats, but that it's really, you know, what he wants is it to pressure Iranians to come to the table to negotiate. Now, so we don't actually know which one of those it is, or if it's a combination, or if there, you know, are intentions to strike. I think we're still going to have to stay tuned and see what he says.
By design, which I understand. He was kind of laughing at reporters. I'm not going to tell you here what I'm going to do.
Right,
and of course,
like, oh, I'll give you the coordinates.
Let you know what time.
Yeah, yeah.
But how is he actually spending his time? We know he was in the Situation Room yesterday. Is he surrounding himself with advisors right now? Is he making calls to other world leaders? Or is it a combination thereof?
He is, yes. He said that he's in constant touch with Israel's prime minister. He also said that he spoke to Putin yesterday. So he's definitely surrounded by, you know, top national security officials, and he's making calls to world leaders. You know, he has also... One thing that I think is really interesting is seeing, you know, some of these people he's calling, not all of his allies and supporters are really on board with what he's talking about doing here. I think we're seeing a really big clash and tension within the Republican Party on this. I mean, I'm sure you saw this clip that's going viral of Tucker Carlson and Ted Cruz. And, you know, I think that really shows where people are right now on this. You know, the Senator Ted Cruz is for military intervention, and Tucker Carlson was saying, you know, was sort of grilling him, and Tucker Carlson is not for it, and saying, you know, you can't answer these basic questions about Iran's population, the ethnic makeup, and yet you're talking about, you know, military intervention.
Do you want to hear it?
So.
We actually have.
Oh, sure, yeah, we can play.
I guess this whole podcast hasn't dropped yet, or whatever we call the show.
Right.
This is a really important moment, which is why we isolated this as well, to watch the unraveling here. The argument with inside MAGA crystallized in this conversation between Tucker Carlson and Senator Ted Cruz. Let's watch and listen.
How many people live in Iran, by the way? I don't know the population. At all? No, I don't know the population. You don't know the population of the country you seek to topple? How many people live in Iran? 92 million. Okay. Yeah, how could you not know that? I don't sit around memorizing population tables.
Well, it's kind of relevant because you're calling for the overthrow of the government.
Why is it relevant whether it's,
because
it's 90 million or 80 million or 100 million? Why is that relevant?
Because if you don't know anything about the country...
I didn't say I don't know anything about
Okay, what's the ethnic mix of Iran?
They are Persians and predominantly Shia.
This just got worse as it went. I mean,
It
that is a moment. As somebody who's had a chance to interview Senator Ted Cruz a couple of times, I've never imagined a conversation like that. Is he finding himself on the outs with MAGA? Where does the line fall between Steve Bannon and Ted Cruz?
Right. I think we're figuring that out right now. It's really interesting how this is playing out. And, you know, I covered every single Trump rally. I went to every single Trump rally. And so I heard all of his campaign promises over and over again. And,
no
you
new
know,
wars.
no new wars. And it, you know, Trump has been very consistent in saying, you know, Iran should not have a nuclear weapon. And he said that over and over again. I heard him say it a million times. But what I also heard him say a million times was the U.S. should not start new wars, should not get involved in other wars. We should pull troops back. We should, you know, peace through strength was something that he talked about a lot. And this, he really outlined, and he's been very, you know, also in his first term, just this, he's talked about this isolationist worldview and this kind of America first, you know, policy. And so I think there are people who support the president, are big fans of the president, and they're watching this play out and thinking, this is not what I voted for. This is not what I thought he was going to do. And this isn't really in line with what he said he was going to do. And so I think we're testing, I think Trump is testing the waters here, and there are definitely conflicting Republican and, you know, MAGA points of view here kind of bubbling up.
Well, he seems to be thinking, or the analysis around the White House here, whomever's leaking at the moment, seems to think that there might be maybe a delineation between an isolated couple of strikes against some underground bunkers, and then we're done. Does MAGA see it that way, or we don't have an answer on that yet?
It's a great question. I guess we don't know. I think there are some people who, you know, the Steve Bannons and Tucker Carlsons, who say, let's just not get involved at all, because, you know, it can be a slippery slope. You know, it starts out as one strike or two strikes, and then all of a sudden you're kind of really entangled in, you know, a war that is, you know, in MAGA point of view, you know, a million miles away and has nothing to do with the United States. That's what, you know, they would say.
And you can sleepwalk into a much wider conflict.
Right, and then things
has
escalate.
proven. So he says the Iranians are too late, or it's very late, he said.
Right.
Maybe not too late, but they're very late. Then he says Jay Powell's too, that's his nickname, is too late. He called the Fed chair stupid today. And he, by the way, came back around that he said he hates him, thinks Jay Powell hates the president.
Right.
We're a couple of hours away here from a Fed decision. This is just going to get worse when he doesn't get a rate cut, I guess, right?
That's right. And I think you're hearing Trump sort of brace for that and already saying, you know, I don't think I'm going to get what I want. And the typical, he's been attacking Powell, you know, for months and months. And I think we're just hearing more of the same of kind of, you know, Trump views it as he should be working with me here. He should be helping me. And Europe is doing these cuts. And so why can't the United States do? I think he's very visibly frustrated with Powell, like personally. And you know, that's where all the personal attacks come in.
I'm sure there might be more on Truth Social coming our way. Kate, great to see you. Thank you so much. Kate Sullivan, Bloomberg White House correspondent, with us here on the Wednesday edition of Balance of Power. He thinks Jay Powell hates him? Jay Powell's a deadhead. I didn't think that was possible. We have an important conversation coming up next from the Lexington Institute, Dr. Rebecca Grant, on the options facing the president today on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got equities staging a cautious bounce ahead of the Fed decision coming up 2 o'clock Wall Street time. The all-important Jay Powell News Conference, 2:30 Wall Street time. You can catch it live on Bloomberg. Right now, we got the S&P 500 index back above 6,000. 6,006 where we stand now, up 23, up 0.4%. The Dow up 150, up 0.4%. NASDAQ up 108, up 0.6%. And the Russell 2000 index of small cap shares now surging by 1.1%. The 10-year, 4.35%. The 2-year, 3.91%. Gold at $33.90 the ounce, up just under 0.1%. And a retreat for crude, down 1.1%, 74 even a barrel on WTI. President Trump, meanwhile, says Iran has reached out about the possibility of negotiations, bolstering hopes Tehran's conflict with Israel will de-escalate. The Fed is expected to leave rates unchanged, but may pencil in 2 rate cuts this year, with some economists predicting only 1 rate cut. New U.S. residential construction declined in May to the slowest pace since the onset of the pandemic. Among home builders today, we are looking at shares, for the most part, higher today. Lennar up by 0.1%. KB Home up 1.6%. Toll Brothers up by 1%. Again, recapping, Fed Wednesday ahead of the decision. We've got the S&P up 22, up by 0.4%. Balance of power continues right now. Back we go to Washington. Once again, your host is Joe Matthew.
All right, Charlie, many thanks. On this Fed Day, we have Charlie Pellet standing on that wall, and he'll be with us as we walk up to and come out of our special Fed coverage, just to set the baseline on where the markets are before we hear from Fed Chair Jay Powell. We'll, of course, bring you the news conference live. Our special coverage starts right at 1:30 p.m. Eastern, about an hour from now, as we hand things back to World Headquarters in New York. Michael McKee, I talked to him a little while ago in the newsroom, is on his way over as we speak, and we'll be at the Fed to ask the tough questions of Jay Powell. He must be sitting around trying to figure out, how do we do this again, right? It's the same conversation at every meeting. Just ask Donald Trump. And surely he'll be asked about Donald Trump's insults this morning. He called the Fed chair stupid multiple times and suggested that Jay Powell hates him, said he was political. As we remind everyone that Jay Powell is a Republican who was appointed by Donald Trump. Zachary Cohen at CNN is reporting that there's another carrier strike group that's being deployed. Jerry Ford is on its way. The USS Ford expected to be deployed to Europe next week near the Middle East, putting a third aircraft carrier in close proximity as he writes to the conflict between Israel and Iran. Sources talking to CNN about this. We are throwing a lot of equipment at this region. Pretty remarkable. More than 24, as we told you, air-to-air tankers already in the theater. We've got the USS Nimitz, the second carrier strike group, already steaming its way. Massive numbers of fighter aircraft are on the ground. B-2 bombers are at least positioned. They can fly all the way around the world with air-to-air refuelers, do a 30-hour mission, come back home, sleep in their own beds in the Midwest. It's pretty remarkable stuff. And all of this, of course, is based around the big question of what Donald Trump is going to do. What are we really preparing for here? Are we going to join Israel's effort against Iran offensively, militarily? American B-2s with American pilots dropping American bombs. As we continue to hear, those would be required to break through the likes of Fordo and the other underground installations. We spent a lot of time talking about this week, and I'd like to just move the conversation a little bit away from this toward the other options. The president is not only looking at this one option. When he's in the Situation Room with his national security team, they are unloading a buffet, a menu of options that the president can use here. That's what we wanted to talk to Rebecca Grant about. She understands the nuances of this better than anybody. From her perch at the Lexington Institute, where she is vice president, Dr. Rebecca Grant, welcome back to Bloomberg. It's great to have you here at this sensitive moment. We've talked a lot about the potential for this happening, and here we are now. And I wonder your thoughts on some of the alternate plans that the president is hearing about. For instance, knocking out power to Fordo, letting the centrifuges spin out of control. What else is he hearing from his team today?
I think President Trump is evaluating a big range of options, but make no mistake, the main thing on the menu here is U.S. air power, probably in the form of very precise B-2 bomber strikes. So this is not a ground operation. This is not a major war with Iran. This is very precise, detailed impacts perhaps on Iran's nuclear weapons capability. And as you suggest, always have to add into that cyber activity, maybe a possibility of Israeli special forces action on the ground, who knows, but they have air superiority there. But really, Joe, we're down, I think, at this point to the weaponeering. So people are coming in to brief Donald Trump saying, if we put this bomb on this aim point this many times, here is the expected damage. Their goal to make sure that Iran a nuclear bomb and can never reconstitute that capability.
Interesting. Are there other half measures? And if that sort of saboteur's approach to knocking out power, for instance, or a cyber attack, would that also be part of an air campaign? I don't know where this power is coming from at a site like Fordow or at Natanz. How would that be accomplished?
Well, it could be. And what the whole thing tells us is, again, this is not a big regime change air campaign. This is very specifically focused on ruining high-level, complicated machinery that Iran uses. That can be done by having that machinery break. That was done with the computer virus several years ago in one of Iran's facilities. It can be done by denying power, or the sort of get a bomb through those levels of dirt and concrete and make enough rubble and disruption of the whole thing. So I think there will be a cyber component to this, unquestionably. I think the question now for President Trump is, would putting a few bunker busters or heavy bombs from the U.S. into that target set, what are the weaponeering effects? Is it going to accomplish what he wants? And is this the right moment to make that strike? There's probably never been a better moment with Iran's air defenses peeled back the way they are.
Well, this is what we keep hearing from those who support the idea. Doctor, we heard from the director of the IAEA, Rafael Grossi, was talking to Bloomberg earlier today about some of the potential changes that could happen on the ground while we're in the midst of, what is this now, day 6, and whether in fact Iran is capable of moving some of this material that we would be attacking. Let's listen to what he said.
In principle, it is there, it is stored there. As you can imagine, at a time of war, all nuclear sites are closed. So our inspectors who are still, I must say, still in Iran, although they are in a protected place, as you can imagine, but they are not inspecting. No inspection, normal activity can take place. We assume we have not seen anything that would suggest that the stockpile has been moved.
Okay, if you had any trouble hearing him, he's telling us that the inspectors are still in the country, but of course they're not at the nuclear sites. They are closed right now. Doctor, do we have eyes via satellites on any potential movement of stockpiles inside Iran?
Oh yes, we have so many eyes. Satellites, aircraft. The Air Force has a particular aircraft that can sniff nuclear radiation in the atmosphere. I have to say, I think Rafael Grossi has really worked hard on not only in Iran, but in Ukraine as well. And at some point, it does come down to inspectors from the IAEA, the UN, saying, yep, the stuff's been moved, or there is no nuclear program left, or here's the damage that's been caused. I think he's talking specifically about if Iran agreed to move out the highly enriched uranium and maybe some machinery. The Russians have offered to take it. Who knows? How would that take place at this point? But, we'd have to see some sincerity from Iran. To me, that would perhaps start with no more Iranian missile attacks on Israel. But this is all something that President Trump has the intelligence assets to be able to evaluate if Iran is serious or if they're still running around trying to launch missiles.
Well, just as you say that, Rebecca, like clockwork, headline crosses the terminal, the IDF telling us that it has identified the launch of another round of missiles toward Israel. So this continues at this moment. I spoke with Ron Dermer a couple of days ago here, Israel's Minister of Strategic Affairs, and he pointed to American pilots flying aircraft as part of this operation defensively as we saw last year, firing interceptor missiles at ballistic missiles shot by Iran. What would happen if one of them was shot down?
They have a search and rescue plan in place. It's not easy to execute, but we have extracted people. Believe me, these pilots don't fly without at least a plan for combat search and rescue. Remember, a lot of this is taking place over Iraqi airspace, Jordanian airspace. And yes, we are very involved defensively, from Space Force watching the Iranian missile flares and passing that warning along, to our carrier and land-based pilots who are, I believe, looking for drones to shoot down. And then, of course, our Navy that has already done some exo-atmospheric ballistic missile intercepts against Iranian missiles. So we are in there defensively. It's a hugely important part of containing Iran. Second aircraft carrier, getting close to nearly 50,000 American forces deployed there as we try to contain and denuclearize Iran.
And another boat with 5,000 sailors on the way. You know, it's remarkable to see the way Israel used drones. You mentioned drone technology in the initial attack, not unlike the way Ukraine planted them behind enemy lines in Russia. We saw that take place with Mossad agents planting drones inside Iran, and they were launched remotely. This is something that we've talked about a lot, the changing sort of dynamic when it comes to the most effective weapons platforms, what we should be buying, procurement reform. And there's an argument here about whether we should be buying a lot of cheap drones to do this or putting very expensive modern fighter planes in the air with actual live people inside them. Rebecca Grant, you've made the case that you need to have actual manned aircraft to get this job done.
Hey, drones are great. We need a lot of them, and the U.S. has used them since the Gulf War to attack enemy air defense systems. But Operation Rising Lion proves again that you need manned fighters carrying heavy ordnance with really smart air crews responding to orders. That's what Israel has used over and over. We've seen manned fighters deployed on the carriers, a new wave of fighters, air crews and the tankers doing that. So, hey, manned aircraft are very important. They will be in any scenario, including facing China in the Pacific. So, hey, a big lesson here is we have got to restock our manned air power. Air Force F-47, get the Navy its secret carrier plane that they're about to decide on. We need all of that to team with those drones.
Is this the end of the Tomcat? Did we blow up all the F-14s left? This is what all the Top Gun kids want to know, what happened to the Tomcats. Rebecca, are they gone?
We've seen at least a few. They weren't in very good condition. That dates back to when we were friends with Iran and they flew the F-14s. We saw at least one blown up. Yeah. I think they are not in a flyable status.
No sign of Tom Cruise behind enemy lines. Dr. Rebecca Grant, it's great to see you. Thank you for the briefing, as always, from the Lexington Institute. I'm Joe Matthew in Washington. I'm glad you're along here on the Wednesday edition. We'll assemble our panel next. Jeannie Shanzano and Rick Davis have been watching and listening to all of this, and we'll have their insights straight ahead on the fastest show in politics. This is Balance of Power, only on Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a development out of the Middle East. The Israel Defense Force says it has identified the launch of missiles toward Israel from Iran. We've got the Dow, the S&P, NASDAQ all advancing right now. S&P holding above 6,000, 6,003 where we stand, up 20 points. That is a gain of just about 0.4%. The Dow up 111 now, up 0.3%, while NASDAQ is up 102 for the NASDAQ Composite Index, a gain of 0.5%. But the Russell 2000 Index now surging higher by 1.1%. The 10-year, 4.34%, with the 2-year, 3.91%. Spot gold up $3 the ounce, little changed, up 0.1%, while West Texas Intermediate crude 74.21 a barrel. WTI down by 0.8%. 1 hour, 19 minutes to go until the latest Fed decision. Fed Chair Jay Powell has his news conference at 2:30 p.m. Wall Street time. Our Fed coverage will kick off at 1:30 p.m. Wall Street time. So what to expect today? Blake Gwynn is head of U.S. rate strategy at RBC Capital Markets.
You know, when we think about these Fed meetings, particularly the SEP ones, you're kind of marking Powell's comments back to May, but you're marking the dots back to March. And if you think about the net of what we've had since March, we did have Liberation Day. So, you know, we do have probably a lot of the FOMC participants baking in some more extreme kind of tariff scenarios, perhaps higher inflation on the back of that.
All about the dots today. RBC's Blake Gwynn interviewed this morning on surveillance. Nippon Steel has closed its $14.1 billion takeover of U.S. Steel, bringing to an end an 18-month effort to combine the American and Japanese steel makers. ADRs of Nippon Steel, they're gaining now up by 2.8%. Recapping Fed Wednesday, we got you covered here at Bloomberg with the S&P up 20, up 0.3%. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Great to have Charlie Pellet on a Fed day as we approach special coverage starting 1:30 p.m. Washington time here on Bloomberg Radio. Satellite radio channel 121. We'll, of course, have it on YouTube. We put it all on YouTube every day. Search Bloomberg Business News Live. You can also choose Bloomberg Originals here, unless, of course, you're listening to us on the Bloomberg Professional app. Hello, CarPlay. President Trump is going to be heading back outside again, it seems. They're putting up some flagpoles today at the White House. That so far has been the biggest dose of news that we have seen. With headlines now crossing the terminal, sirens, air raid sirens are sounding in Tel Aviv and many other areas in central Israel. We have a new round of missiles that have been launched by Iran toward Israel. So far, they have, of course, been able to knock most of them down. But we have seen some of these ballistic missiles get through defenses, get through the Iron Dome and into civilian areas. We'll keep tabs on this. We're watching the skyline in Tel Aviv here on what is day 6 of this back and forth. And we assemble our panel for their take on everything that we've seen here in the past 24 hours. Rick Davis, Bloomberg Politics contributor, Republican strategist, partner at Stone Court Capital, alongside Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress. Jeannie, the president was asked repeatedly when he was outdoors with the workers setting up a flagpole this morning what he was going to do. He said nobody knows what he's going to do. He might bomb. He might not bomb. How much time does he have to decide?
Joe, you forgot to mention they are magnificent flagpoles. They're tall, they're tapered, they're rust-proof. The truth went on and on about these flagpoles, so I'm very excited to see them in person if I can. You know, we still, we still don't know where he is on this, and he made that clear once again to reporters. I don't suspect any reporter out there thought he was going to reveal some information. But as we see the third U.S. carrier going into the region, and one of the largest, Gerald Ford, it's either because they're planning to use it or as a show of force. And so there is, between that and some of the heightened rhetoric, a lot of people suspecting that the decision has already been made by the president, but of course he's not going to share it with us publicly.
There does seem to be a feeling that he's made up his mind. Rick, I don't know where your spidey senses are on this one, as you just heard Jeannie mention that Jerry Ford's on its way over. Now we're going to have 3 strike groups in the region. As we heard from Rebecca Grant, 50,000 members of the U.S. military, an enormous amount of hardware. Do you feel like Donald Trump actually knows whether he wants to use it, or is this in fact a show of force to prevent what might come next?
Look, I have no doubt there's a level of deterrence that the strike groups give to the United States as Iran postures as to what their reactions are going to be. We know right now there's an attack from Iran into Israel happening as we speak. But the real question is if the U.S. uses the B-2s, and right now, from what I can tell from the reporting, there aren't any B-2s in the region, although they did fly in aerial tankers that could be used to refuel the B-2s, so they could come from anywhere. And so you're right, they're lining up all these assets to give the president options, right? I mean, like, if you're running the military show, you're looking at every asset you have on the table that can stop weapons, rockets from coming into Israel or any other place that the Iranians may feel they need to attack in retaliation. And then two, what are our offensive capabilities? Because if the president chooses to do something offensively, we have to have all that ready to go, because he could turn to his command system and say, let's strike now. And they have to be ready to go. So this is a movement to put lots of chess pieces onto the table and allow the president options to do this. I'm impressed, actually, that the president continues to actually give public messaging to Iran, that would indicate that, if they capitulate, if they surrender, they can avoid more bloodshed. But the reality is, how much of that is just a smokescreen, we'll never know. And yet, I do think the president has acted prudently in making sure that all the options that he needs to try and ensure that there is no nuclear program left to be advanced in Iran is available to him at his whim.
It's interesting, as Rick mentions, the B-2 bombers based at Whiteman Air Force Base in Missouri. It's something like a 30-hour flight, and they can accomplish that, suggesting that, look, they could be in the air already for all we know. There are missiles in the air, as we've just learned, on their way from Iran to Israel, where air raid sirens are blaring right now. Jeannie, you wonder who Donald Trump is listening to at this point. We've talked a lot about the split in MAGA. This Tucker Carlson throwdown with Ted Cruz is the latest example. We can listen to that in a moment. But Steve Bannon was meeting with reporters earlier today in Washington as well to make the case that this is not America first and this is not what Donald Trump promised. That's got to be weighing heavily on his decision right now.
It absolutely must. I mean, all of us who have watched him carefully, just on the campaign trail for 2024, this is something he said specifically right up into his inaugural address, that he did not want to start another war in a faraway place. And he's been saying that for a long time. Now, the White House is pushing back and saying he's also promised no nuclear weapons in Iran. And so he does have this dilemma, and we hear he's listening to a lot of people. I think the question is, who is going to win out in that debate? But one thing I think I'm most interested in, and the Tucker Carlson showdown, as you called it, with Ted Cruz, I can't wait to hear the whole thing. It's fascinating. But is the president getting sort of flashbacks to WMD? I mean, this is somebody who made his name politically criticizing George W. Bush, Hillary Clinton. I mean, the list goes on and on over weapons of mass destruction. And what do we find today? An eerie similarity, because the U.S. intelligence community is pushing back on what Netanyahu has said. They said that Iran suspended its nuclear weapons program more than 2 decades ago and hasn't reversed that assessment. You also had Tulsi Gabbard stand up in March in Congress and say, yeah, they're still enriching uranium, but it's nothing really new. Then the president contradicted her and pushed back. So I suspect the president is having flashbacks to WMD. He does not want to be George W. Bush going into Iraq based on intel that is not something that we can trust, coming particularly from Israel.
Let's hear this exchange. This is at least a clip that was made available by the Tucker Carlson show. They're going to drop this full thing, I guess, later on today. He sits down with someone you would think would be friendly. This is Tucker Carlson and Texas Senator Ted Cruz. Listen.
How many people live in Iran, by the way? I don't know the population. At all? No, I don't know the population. You don't know the population of the country you seek to topple? How many people live in Iran? 92 million. Okay. Yeah, how could you not know that? I don't sit around memorizing population tables. Well, it's kind of relevant because you're calling for the overthrow of the government. Why is it relevant whether it's 90 million or 80 million or 100 million? Why is that relevant? Because if you don't know anything about the country... I didn't say I don't know anything about Okay, what's the ethnic mix of Iran? They are Persians and predominantly Shia.
Rick, first of all, can you imagine how awkward it was to be in that room? And what does that illustrate? How much of MAGA is thinking this way as a percentage of the Republican Party?
You know, I don't think you can put a number on it that, you know, there's a certain percentage of MAGA that would support a strike on Iran from the United States. I mean, one of the things we do know is that Donald Trump sets the rules on MAGA, right? I mean, if Donald Trump makes a case to the country that this is something that's important, it's highly likely that the vast majority of MAGA will go along with him, right? There are, you know, splits in the MAGAverse. Marjorie Taylor Greene, Tucker Carlson, these guys are out there, you know, sort
Steve
of
Bannon,
chomping at this. But people like Miriam Adelson and others who've given hundreds of millions of dollars to Trump and his MAGA universe has been pushing very hard for this. So the reality of this is that that Donald Trump's going to make a decision, and that's going to sway MAGA. And the other thing we learned from this experience is never go on the Tucker Carlson show, right? I mean, if you're a United States senator and you want to be embarrassed and have the whole world talking about how stupid you sounded, go on the Tucker Carlson show. Knock yourself out.
Look, we don't do ambushes around here, Jeannie. It was kind of reminded me of when Joe Pesci walked into the room thinking he was going to be a made man. It didn't turn out that way for him, certainly in Tucker Carlson's studio here. So Rick put this beautifully. Who's got Donald Trump's ear, Steve Bannon or Miriam Adelson?
I think he is listening to both. And Joe, by the way, you've interviewed Ted Cruz a few times, many times. So have him back. You can let him clarify what he knows about the population of Iran.
We shall.
I think that he is listening to many voices. I think this is, in my mind, more of an internal conflict, if you will, for Donald Trump. You know, Rick may be right that, and Donald Trump said this the other day, what I say is MAGA. So they may be forced to go along with what he says. But I do think this is something of an internal conflict for Donald Trump. He is somebody who has described himself as a peacemaker. He is somebody who has said, we need to be out of foreign wars. We have to think about America first. We have to make America great. And yet on the same sort of definition of and support for going into Iran that George W. Bush gave for going into Iraq, and every president has given before and since, has been, I will use military troops when it is in America's interest. Now, that may be absolutely right for the president to say, but it totally contradicts what Donald Trump said and promised his foreign policy was going to be. And he's going to hope that he can hold this base together. But it is something, along with immigration and several other issues right now, where for the first time we are hearing a fissure in the MAGA base. And it is not quiet. It is quite public and it is quite loud. And people like Tucker Carlson are getting a lot of attention for pushing back against the president.
Well, he's certainly making the noise. To Rick's point, it's hard to tell how much of the Republican Party or the conservative movement this reflects here. Rick, I started this conversation by asking Jeannie how much time Donald Trump has to make this decision. Do you have a take on that?
Yeah, I'm sure it's being informed by the strategy that is really the dominant theme here, and that's what does Israel want to accomplish and when do they want to accomplish it? They're on the fast track, right? They know that the longer these strikes last, the more risk they have to their own citizens, and the more the world community tends to turn against them. So they want to wrap this up as quick as they can. They've already been very clear, we're going to pound away at Iran till we've accomplished our goals. And one of those goals is to knock out the capability of the Iran regime to be able to, basically build a bomb. And they need us for that. So the sooner they get us to respond in kind, the more they are able to take their foot off the accelerator.
The wait continues with the help of Rick Davis and Jeannie Shanzano. We're also counting down to a Fed decision with special coverage set to begin here on Bloomberg in about a half hour. Stay with us for hour 2 of Balance of Power. Congressman Mike Lawler from New York is going to join us. You don't want to go away on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Washington waits for word on interest rates and U.S. military involvement in Iran. Welcome to the Wednesday edition of Balance of Power. We're live from the nation's capital with a lot of questions to answer today. Wall Street is watching as well. We'll be joined ahead by Republican Congressman Mike Lawler of New York, who is trying to hold the line on SALT all the while in the president's big, beautiful bill. We've got a lot to talk about ahead with analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us about a half hour out from our special Fed coverage here on Bloomberg. Let's set the baseline first on Wall Street, where we stand ahead of the Fed meeting with Charlie Pellet at World Headquarters in New York. Hey, Charlie.
And good day, Joe Matthews. Stocks higher right now. Again, special coverage coming up of the Fed, 1:30 p.m. Wall Street time right here on Bloomberg Television and Radio. 2 o'clock, that's when the actual decision drops. 2:30, Jay Powell's news conference. We got you covered here at Bloomberg. The Dow, the S&P, NASDAQ all advancing. Stocks higher after President Trump said Iran has reached out about the possibility of negotiations, bolstering hopes that Tehran's conflict with Israel will de-escalate. And the Federal Reserve is expected to reiterate it needs more clarity on the impacts of government policies before adjusting borrowing costs. So here's where we stand. The S&P 500 index right at 6,000, up 18 now, up 0.3%. The Dow up 108, up by 0.2%. The NASDAQ Composite Index up 90, up 0.5%. The outperformer, the Russell 2000 Index of small cap shares, that is gaining now by 1%. The 10-year ahead of the decision, 4.35%. The 2-year, 3.92%. Spot gold flat on the day, $33.90 the ounce, and West Texas Intermediate crude down 0.6% right now, $74.45 a barrel on WTI. Texas Instrument shares are up 0.5%. TI touting plans to spend more than $60 billion on semiconductor plants in the United States, making it the latest chip maker to promote its domestic manufacturing ambitions as the Trump administration urges investments and threatens to upend the sector with tariffs. Recapping stocks higher, the S&P right at 6,001, up 0.3%, ahead of the Fed decision, the 10-year 4.35%. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthews.
All right, Charlie, many thanks as we count down to the Fed decision here on Bloomberg. We'll hand things back to World Headquarters in New York, as I mentioned, about a half an hour from right now. Get you set up for this decision at 2 and live coverage, of course, Jay Powell's news conference that will follow. I saw Bloomberg's Michael McKee before he headed over to the central bank, crafting some interesting questions for the Fed chair, who the president has already been talking about today, referring to Jay Powell as stupid on a couple of occasions, using the nickname Too Late, suggesting that he should start cutting rates yesterday, and that's not expected to happen today. We'll have more on that a little bit later this hour as we walk up to our special coverage with Kitty Richards, senior fellow at the Groundwork Collaborative. We'll be changing our view on things as we get closer to the decision. We want to stick with the beat on what's happening here, meantime, on Capitol Hill. It is not only a conversation today about whether we're going to see U.S. military involvement in a more offensive way in Iran, and we're going to talk to Congressman Lawler about that as well. But it's, of course, Mike Lawler who has drawn a line in the sand on SALT, this being essentially the SALT network. I know how important this is to our listeners and viewers, and Mike Lawler does as well, because the Senate version from the Senate Finance Committee of the big, beautiful bill just came back to the House, and it's not what a lot of certainly members from New York and New Jersey wanted to see. Spoke about this yesterday with Senator Ron Johnson. He's a no vote on this. He wants to see deeper spending cuts. And when you start talking about deeper spending cuts or permanence with regard to business tax breaks or the Trump tax cuts, you got to find the money from somewhere. And the Senate seems to think that pulling that out of the SALT deal is part of the way to get there. Ron Johnson's still a no vote, though, as he told us yesterday here on Bloomberg. Listen.
Well, I'm currently a no. I think the House bill is something I basically support, but my problem is it just doesn't go far enough. At most, we'll be reducing spending by about $2 trillion over 10 years. We increased spending by more than $2 trillion in 1 year from 2019 to 2020. And, you know, it's a budget reconciliation process. We ought to be talking about numbers.
Well, let's talk about numbers with the aforementioned Congressman Mike Lawler, Republican from New York 17th. It's good to see you, Congressman. Welcome back to Bloomberg TV and radio. It's almost like we're sitting in the same room. If you're with us here on TV or on YouTube, I feel like I can turn and talk to you. Where are you on this right now? It was $40,000, the SALT cap established in the House. It went next door and they chopped it right back down to 10. But I'm told that this is simply a placeholder, and that there's yet another debate. Are you ready to go through this whole fight again?
Look, the bill, as the Senate has written it, is dead on arrival. And I made that very clear the other day when the language came out. But here's the reality of this situation that I think many of my Senate colleagues failed to recognize. At the end of the day, the cap on SALT was nothing more than a pay for back in 2017. And it paid for most of the provisions of the Tax Cuts and Jobs Act. It here again is being used as a pay for by not going back to unlimited. It's paying for the doubling of the standard deduction. It's paying for no tax on tips, no tax on overtime, the expanded child tax credit, among other key provisions, including business tax credits. And we understand that is all part of a negotiation. It's all part of having a tax bill that actually provides real tax relief to the middle class, to the working class. This is not about the billionaires or the millionaires. That's why we agreed to a $40,000 SALT cap with a $500,000 income cap. That was a hard-fought, good faith negotiation that we entered into despite efforts to roll us. And we came to an agreement with the White House and with House leadership. We are not going back on that agreement. And I think what the Senate needs to recognize, they can make changes, they can enter into negotiations, but the fact is you need 218 votes to pass this in the House. And there is not a chance in hell that this bill will pass at $10,000, let alone less than $40,000.
So it's anything under 40 is I know you've got to talk tough on this because you hear it off the air from Republican members that the SALT guys in New York, they knew they were negotiating. They went for 40 knowing it was going to come in at 30, as the House Ways and Means Committee said. You're a no on 30,000, right?
No, if we were going to accept 30, we would just accept 30. That is a no. And I guess people, want to try and call our bluff. They tried that in the House. They tried to jam us, and we didn't fold. And we're not going to fold here. We're not trying to stop the bill. We are making the point that this was a good faith negotiation. This is the agreement, and this is what the final number is going to be. And I would just remind everybody, you look at 10,000. This isn't just about blue states. First of all, SALT applies to everybody. It's not just particular to New York or California or New Jersey. But second of all, 29 states blew past the $10,000 cap with the average SALT tax burden over the past 7 years. So, leaving it at 10,000 will be a crushing blow to middle class and working class families all throughout this country. And if the objective is to provide real tax relief and grow the economy and allow for people to invest in jobs and businesses and in the stock market, then having a real SALT cap that we can provide tax relief with is vital. And we're not going to cave on this. We're not.
Well,
so this is obviously something.
Your point's
that
taken. I just wonder, how do you fix
it?
How do you fix it, Congressman? Does this go to a conference committee? Does Mike Johnson have to carry this water for you? How do you get it back to 40?
Well, look, we're still talking to senators. We're going to have a conversation today. And, I'm speaking with the speaker. And the speaker certainly understands our position. He agrees with us, even if he doesn't fully support, SALT. He understands how important this is to passage of the bill. Yeah. And this is just the reality of government. You're not going to get everything you want, and you have to negotiate. We negotiated. This was the agreement. And whether the Senate likes it or not, this is going to be the number.
I want to tick through a couple of other important items with you while we have you, Congressman, because you serve as well on the Committee on Foreign Affairs in the House. Where's your gut as, in many cases, Republicans argue with Republicans about what President Trump should do right now in Iran? I know you support Israel's right to defend itself, but do we need to put American B-2 bombers in the air to help finish the job?
I don't think there's any question about that. I think Israel obviously has made tremendous strides over the last few days and really speaks volumes to their military prowess and intelligence. But ultimately, to get the job done, I don't think there's any question, the U.S. is going to have to be engaged. I'm not advocating for troops on the ground. I'm not advocating for regime change. The bottom line is Iran cannot have a nuclear weapon. President Trump has made that clear for years. Republicans and Democrats, both prior presidents and in Congress, have made that clear for years. The time has come. And ultimately, we need to finish the job. They cannot have a nuclear program. They have shown a willingness to use ballistic missiles targeted at civilian populations with the express intent of killing Jews and eradicating the state of Israel. Folks have to remember, there are 700,000 Americans that are dual citizens and live in Israel, at least part-time, if not full-time. These are Americans on the ground in Israel being attacked. We have 40,000 troops in the region under threat of attack. We have to make sure that this threat is eliminated. Ultimately, a weakened Iran, a denuclearized Iran, is the best hope for the Iranian people to rise up and reclaim their government. That will be their choice. That is not a choice for the United States or Israel or anyone else. But it will give the best opportunity for that to happen. And in doing so, will give the best opportunity for peace and prosperity in the Middle East for years to come.
Wow. The time has come, says Congressman Mike Lawler. If our involvement offensively was limited to a series of strikes, as we've heard referred to, against these nuclear enrichment sites and no more, would you be comfortable with President Trump conducting this on his own, or does Congress need to have a say?
Yes, I would be comfortable with the president making that determination. Obviously, in years past, presidents from both parties have made these determinations in limited strikes without getting congressional approval to do so in that moment. And certainly if that is the decision that is made for the express purpose of eliminating Iran's nuclear capabilities, I fully support it.
Lastly, Congressman, from your perch on financial services, you're wishing there was a rate cut coming today. I'm guessing there's not going to be one. How concerned are you that Jay Powell, as Donald Trump says, is too late?
Look, despite Jay Powell's many predictions over the years, many of which have turned out to be wrong or late to the ballgame, the fact is the economy is in a very strong position. Inflation has come down. The economy is growing. And ultimately, I think when we pass the tax bill, you get deregulation into effect, you increase domestic production of energy, you bring these conflicts to an end and normalize relations and expand trade, the economy is going to take off dramatically. And I think this is something where the Fed should be looking to ease tensions to start to bring down interest rates, which is vital to economic growth. And I certainly believe that it's time to bring the rates down. I think the predictions over the last 2 months tied to the tariffs have not borne out the way many in the media and Democrats have speculated. And so I do think it is time for these rates to come down.
It's great to have you with us, Congressman. Appreciate that. Congressman Mike Lawler, Republican from New York, from SALT to Iran to the Fed. We're going to be turning things over to our special Fed coverage coming up in a little more than 15 minutes with, of course, an announcement on rates coming at 2 p.m. Want to assemble our panel with more on what we just heard from the congressman with regard to Iran. That was an important moment. You're going to hear that played back. The time has come, said Mike Lawler. Rick Davis, Bloomberg Politics contributor and Republican strategist, partner at Stone Court Capital, is with us now alongside Jeannie Sheehan Zaino, Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick, how many Republicans does Mike Lawler represent in Washington today?
I think the vast majority. I mean, the Republican Party is still pretty hawkish. In the last year, even before the elections, we had a majority in the House of Representatives supporting aid for Ukraine against Russia. I think Iran is the unifying force. It is the greatest evil empire left in the world. Compared them to Russia and China, we can have a dialogue with Russia and China, but we cannot have a dialogue with Iran. And Iran has been the basis for mischief in the world for a long time. They sponsor terrorism around the world, and so I really don't think there's a lot of daylight between the Republican Party and the need to do something about making sure Iran never has the capability of crafting a nuclear weapon.
Then there's Tim Kaine and the likes of Democrats who want to limit the president's war powers in this case. Jeannie, where are Democrats going to stand if there is an announcement from the White House that American bombers are in the air?
Well, we have heard from many Democrats who support the president if he does decide to assist openly, either offensively or certainly continue defensively. You know, we've heard Adam Schiff, we've heard others. So there is a split in the Democratic Party. We've also heard Democrats on the other side joining people like Tom Massey. That would be Alexandria Ocasio-Cortez, Ilhan Omar. So very much like the Republican Party, there is a split on the best path forward for this. And I thought another really fascinating thing that the representative said was the fact that he would not support boots on the ground. I think there are a lot of people who agree with Mike Lawler on that. They would allow for support, whether it is aid, whether it is offensive or defensive support, but not support for boots on the ground. And that is a question that has been raised by military experts. Can Israel, can the U.S. really destroy Iran's ability to get nuclear weapons, not just in the short term, but in the long term, without boots on the ground? And that is a big question. And to hear him say, no, I wouldn't support that, I think is also very telling.
Rick, how, if the White House decides to act, should this be rolled out? Does the president need to address the American people in prime time? Is that old-fashioned? To what extent do the American people need to be prepared for this?
Well, we do know Donald Trump likes these big moments in a presidency. The symbolism of the Oval Office, the Resolute Desk, is not lost on this president. That being said, I would think it would be always after the fact. I mean, these are operations that are best left in the secret. No sense in telegraphing our punch to Iran. So I wouldn't anticipate the president forecasting his intent to strike Iran, to degrade his ability to manufacture a bomb, and until after the fact. And then I do think there is an opening at that point to say, okay, now let's figure out what happens next, because it may not need much more attention militarily in Iran if we do indeed use some of our unique capability to destroy these facilities.
Rick Davis and Jeannie Sheehan Zaino with analysis as we wait for a decision from President Trump. Bloomberg Politics contributors, many thanks to both of you for your insights as we turn our attention coming up to the Federal Reserve. Walking up now in less than an hour to the announcement on interest rates. We'll be joined ahead here in Washington by Kitty Richards at the Groundwork Collaborative. Stay with us on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go ahead of the FOMC decision, 2 o'clock Wall Street time. Our coverage on Bloomberg Television and Radio kicks off 9 minutes from now. We have got the Dow, the S&P, and NASDAQ all higher. Ahead of that decision, the S&P 500 index now below 6,000. 10-year, 4.36%. The S&P up 15, up 0.3. The Dow up 100, up by 0.2%. NASDAQ up 73. That is a gain of 0.4%. Cannot ignore the Russell 2000 index of small cap shares today. It is surging now by 1%. Again, your 10-year, 4.36%. The 2-year ahead of the FOMC decision, 3.92%. And spot gold, little changed, up less than 0.1%, 33.89 the ounce. West Texas Intermediate crude, 74.99 a barrel, up by 0.2%. Bitcoin just about flat on the day at 104,250 on Bitcoin. New U.S. residential construction declined in May to the slowest pace since the onset of the pandemic. Home builders trading mixed. KB Home right now up 1.1%. Lennar down 0.5%. And luxury home builder Toll, it is up by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
Okay, Charlie Pellet, thank you so much. A perfect setup here for what is about to happen. The S&P 500 up 15 points as we prepare for special Fed coverage here on Bloomberg TV and Radio. We'll hand the keys over to Tom Keene, Lisa Abramowitz in a little bit less than 10 minutes, so stay right here. Of course, the Fed decision at 2 p.m. And, well, Donald Trump knew that when he woke up this morning. He was asked about the Fed meeting by reporters when he walked out onto the south lawn of the White House today with a group of workers who were there to set up a new flagpole. It's one of the only public events he has today. No affection for Jay Powell. He called him stupid several times, suggested the Fed chair hates the president of the United States, that he was acting based on political inspirations, and had a lesson for the Fed chair. Listen.
Yeah, I'm
because
listening.
Of this guy's rates. You know, if he'd lowered a point, I'd pay about
I'm on the side that we don't do that.
If he'd lowered 2 points, I'd pay about.
They've got that old Nimitz aircraft carrier just cruising around off the coast, waiting for somebody to shoot at it, so that we have a reason to go in and create another 10-year war for no reason.
Saying it would be nice if the Fed lowered interest rates today by 2.5 percentage points.
The Nimitz was scheduled to be decommissioned this month or next month, and they got it over there right off the shore where it's nice, easy target
2.5 points. What would the market
for some type of ballistic missile or a glide bomb or anything they can shoot off the coast?
To the markets.
And as soon as that happens, then we got another 10-year war in the desert.
And
you're in a short?
Honestly, I think that the
All right.
president is
Let's
really
head down.
putting the Federal Reserve in a difficult position with the chaotic
We got a fair
management
value
of the
gap.
economy
That's the
that
only
we're seeing
thing
out
that
of his
could catch it.
administration.
Oh, shoot,
If the
sorry.
president wants to
Let me get it
see
back
Jerome
up.
Powell cutting rates, I would encourage him to not turn the Fed into a political football, but also we really need to see stability in trade policy, in tax and budget policy, some sort of responsible stewardship of the economy. And I think that the various cost pressures created by the Trump administration are putting the Fed in a difficult position.
We got a free fall for about 20 points if we get through that fair value gap.
The White House would point to as justification to cut rates.
And look, it's difficult.
Are you on paper or are you on a
on this show?
eval?
And I think that high rates are squeezing American families. They're making housing less affordable, both through higher mortgage rates and through less building. There are real reasons to think that the Fed should be considering moving rates
Fed's
down
not cutting
at
rates.
a more rapid pace. But
This is
going to
be a disaster soon.
uncertainty created by things like the tariffs.
Yeah.
And, you know, we're seeing war in Iran cause energy prices to go up. That can filter through to inflation. It's a really difficult situation.
Liberation Day was the game changer then, in your view, and that's what's keeping the Fed's attention away from some nice CPI reports that we can talk about all day long. They're concerned about looming inflation coming from tariffs.
I think that's right. Inflation from tariffs, some of the Fed governors have talked about that as being transient, a word that we have heard in the past. But I do think that it's a real concern. And also, I think that there are concerns about the massive budget bill moving through the Senate now, what that would do to pressure on interest rates.
What does the Fed think about
Let's go break down. I like how the NQ looks.
I think it's hard.
We got a
for
fair
me to
value
say
gap
how the
right here on
Fed
the
will
NQ,
view it.
so we
You know,
could get
typical Fed
this could push it down
policymakers
through
are
the
concerned about a $5 trillion increase to
support
the budget deficit, especially to pay for something that is not going to create economic growth and stability, like tax cuts for the very wealthiest. There are also real problems for workers in this bill. If the Medicaid cuts currently contemplated by the Senate bill go into effect, that's going to be millions of workers losing their health insurance, having to pay more. It's going to drive costs up. That's also a problem for the labor market. So I think the Fed they have said they're in a wait-and-see approach. We'll wait and see if that's what they say at the press conference today. But there is so much going on that I think it puts the Fed in a position of feeling most comfortable just standing pat.
Interesting. Jay Powell's an institutionalist, right? Does he take the CBO at its word when we start talking about additions to debt and deficit?
I think that the Fed understands the pressures, if you're talking about the different policy baselines that are out there.
Well, it's become a parlor game around here. The CBO is the only one who doesn't know what's going on because there's no dynamic scoring and they're not factoring in the tariff revenue. This is what we hear every day on this show.
Yeah, I mean, I think that the parlor game around the tariff revenue is the Trump administration claiming that they are going to raise a lot in tariffs, and yet somehow
here you go, SM.
Prices are not going to go up.
Oh, you're out?
And
125,
we're not going
that's
to see
good.
any of that impact
That's
the
good.
American economy or American
Yeah, I would have
workers.
tried to get out. There's a trend line right here, and then support value gap.
I'll
Yep,
be
I
interested
think
to
you
see
got
what
out
the
at the
dot
right
plot tells us today.
Price
we're
action's getting a little
following what
goofy
Fed
now.
governors are saying.
They're going
They're
to crank this down to one cut? Is that the idea?
I think that most of what we've seen is a wait and see approach, and they continue to wait and see, and things continue to be pushed off. I will be really interested to see what they say about the later quarters of this year. Now, that is also when we expect to see the impact of the tariffs in both inflation and the labor market.
Jay Powell is preparing to meet the press right now. Bloomberg's Michael McKee is over there. He's got a bunch of questions. They're going to throw him off. What will be his posture? What will be his tone any different than the last meeting? There's so many questions he can't answer.
I would assume that we're going to see a very similar approach to the last meeting. And also, as you said, Jay Powell is an institutionalist. I think that it is important to him and the other Fed governors to not be seen as overly reactive to the inflammatory statements that Donald Trump makes. So I would anticipate a very even-keeled and very similar approach to prior statements.
What would you ask him if they called on you in the briefing room today?
I would ask him to talk about the impact of the Fed's rates on the housing market. I think that this is a really underappreciated problem with how high the Fed went and how slow they've been to cut back. We've seen both rates impacting Americans' ability to afford homes, with Americans who got their mortgages later in the rate hiking cycle facing much higher burdens of housing costs than Americans who have mortgages from a few years ago. And we've also seen how this impacts the housing market through the ability of builders to get financing to build more housing units.
New homes falling to the lowest level since 2020. We had a weaker than expected reading on retail sales. This has to be hanging over his decision here.
I think that's right. And housing is such a huge part of a family's budget, and it's such a crisis in this country. But again, the Fed is...
You have a point where you'll double dip and maybe get back in?
Yeah. Really glad you could come by. Kitty Richards, Senior Fellow, Groundwork Collaborative, helping us walk up to the Fed. Many thanks for the insights. As always, Kitty. We're going to hand things to New York now, and I'm going to meet you back here at 5 p.m. Eastern Time on the late edition of Balance of Power. We could be living in a very different world by then as the headlines cross moment to moment, never mind hour to hour. A special edition of Bloomberg Surveillance is on the way. The Fed decides with Lisa Abramowitz and
Yeah,
Tom
but it
Keene
takes,
live
you
from
know,
World's headquarters
you got to
in New
take
York.
profit when you have it,
Straight
because how
ahead
many
on
times does that
Bloomberg
go back
TV
against
Radio.
you, and then the VWAP turns into support? You know what I mean? It's a double-edged sword, that breathing room.
Live from New York City for our audience worldwide, Bloomberg's The Fed Decides starts right now.
This is a special edition of Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, The Fed Decides.
Live on Bloomberg Television and Radio, good afternoon. Counting down to another Fed rate decision and Chair Powell news conference. Alongside Tom Keene, I'm Lisa Abramowitz. Someone is missing. Tom, I believe.
Missing. I just got a message from the Bank d'Italia, and he's 24 miles south of one of their branches. I think it's an island.
Yeah, well, somewhere beautiful, and unfortunately, he's missing the most riveting Fed meeting since the last one.
I'm all the way up.
Yeah,
I'm just not close to it because I'm working.
Coming out
I
saying
got.
he should be the head of the Federal Reserve. Honestly, quite a time for him to be.
Trying to get everything cleared off from when I was off,
He's got to rebut
and then I'm taking another week off. So I'm
There's that. There's also this question of how much uncertainty can you
This is a
possibly
big drop.
have
What
at a
happened?
time where not only do you have tariffs, do you have changes in policies in
the
Washington,
Iran
D.C.,
stuff?
but now you have what's going on
2
with Iran and
o'clock.
Israel threatening to disrupt oil supplies at a time when that will
Great.
only add to some of the inflationary questions.
I think over $80.
Must be people are feeling we're not gonna.
Yeah, and this is why we're watching. The
We're not
state
gonna
of economic
decrease
projections,
rates.
as well as what we might
We're
end up
pricing
getting
in.
from
Maybe we're
the
pricing
forecasts
in no
in the
rate
dot plot.
decrease
Right
from the
now in
Fed.
markets, you
Is
can
that
see
better? I'm
a bit
closer
of
to
calm.
it and
You've got
talking a little
equities that
higher.
are rallying despite some of that uncertainty. Just to give you a perspective, since the last meeting on May 7th, S&P is up almost 7%. When you take a look at yields, they are up materially, about 10 basis points on the 10-year, up from on May 7th, the last time the Fed met, 4.36%, and crude lower, but still up materially since that last meeting. Coming up shortly, JP Morgan's Bob Michael, Kathy Jones of Charles Schwab, and Greg Peters of PGIM will be taking us up to the Fed rate decision at 2 p.m. We'll get immediate reaction from former Fed Vice Chair Rich Clarida, Diane Swank of KPMG, and Deutsche Bank's Matt Lazzetti, and finally breaking down Chair Powell's news conference, Stephanie Roth of Wolf's Research, Apollo's Torsten Slok, Subhadra Rajappa of SocGen, and BlackRock's Jeff Rosenberg. Joining us now, we are so pleased to say, is JP Morgan's Bob Michael. This is actually a big deal because they're going to release their quarterly summary of economic projections at a time where things haven't exactly gotten clearer.
Yeah, I don't think this is a boring Fed meeting. I think this is a historic Fed meeting. You've got the Fed dealing with a lot of things. Tariff policy could be something we haven't seen in a century. You could have a potential major conflict in the Middle East. And of course, when you look at the One Big Beautiful Bill Act, if that passes, you've got the extension of one of the biggest tax breaks in history. If it doesn't, you're going to have one of the biggest tax hikes in history. How does the Fed bring all of this together?
The question really will ultimately be, what is the reaction function? Where are they placing the emphasis right now? On data that does appear to be weakening, we are seeing a shift upward in the jobless claims over a 4-week moving period. You are seeing the economic surprise index roll over into negative territory, or on the potential for inflation from oil, from tariffs, from some of these policies that they don't really want to get involved with commenting on.
Well, that's why the summary of economic projections is going to be so critical this time. The last ones were in the March meeting. Of course, you've had Liberation Day, you've had the One Big Beautiful Bill Act, and now you've got Israel, Iran. So all of that, they have to weigh into that. We expect, of course, they've got to raise their expectation of inflation. So core personal consumption expenditures, we expect them to go up from 2.8 to 3.2. And they're going to bring down growth, probably from 1.7% GDP to 1.4%. And you'll probably see a tick up in unemployment from 4.4 to 4.5, and probably just one rate cut this year, not two.
From where you sit, is the job market cracked? I mean, 245,000 4-week moving average on weekly claims. I would say the majority of people say not yet, but how's our labor market?
it's on the knife's edge. And what you see in the weekly claims data is that businesses are neither hiring nor firing. They're frozen. And you see that with continuing claims continuing to go up. That tells you that if you've been laid off, you can't find a job.
I'm not going to let this go, and I like that we have 3 bond people up top. I think the bond market's speaking right now versus the equity market. I want to look at the 10-year real yield. I'll let you pick the duration. But what's amazing to me is it's still range-bound. Do you predict that the inflation-adjusted yield will break down to a new lower, disinflationary, slower, sluggish tendency, or can it break up with all the geopolitics we've got?
It's probably likely to break up. I think there will be an expectation that as all these different policies take shape and are deployed, that's going to create a lot of anxiety and volatility in the market. Break-even spreads will have to accommodate for that. So
is it rude to ask for a level at this time of our Fed show? Let's ask for a level. 203. Can you give me a number to 2 decimal points up? 220?
Yeah, I think you're looking close to 2.25%.
Farron would never let me do that.
Well, Doug will be back next Fed meeting, so don't get too excited. There is this question, though, and you raise it in some of your expectation, and this is the baseline expectation that they are going to raise their inflation expectation, downgrade their growth, and also reduce the number of rate cuts that they have. Doesn't that imply that they see the potential inflationary shock as being something more than transitory? I know that T word is somewhat contentious. At the same time, people are pointing to that weakness that Tom was talking about in the labor market and saying, why not weigh in on that if you think that this is actually going to be a passing trend?
I think what it tells you is they're in a pretty good spot right now. Nothing's really broken. Yeah, everything could move materially in one direction or another. So why shift things in anticipation before you know what the actual policies look like and the impact to the economy?
Meanwhile, as Tom was mentioning at the top, there has been this drumbeat from the White House, and we only got that again this morning when President Trump came out and said the Fed should really be about 2.5 points lower, saying that they should reduce the rates that much, and then saying, I would be a really good Fed chair, and he'll be out the second that his term is up. At what point do you think that really starts to color the press conference in terms of how the Fed wants to color their decision, even if it is based purely on the economic data?
Yeah, and I think there's been a lot of conversation. If you bring the Fed funds rate down to 1 7/8%, you're probably going to see the 10-year go up to about 5%, maybe higher. We have history for that. 1992 to 1994, the spread from Fed funds to the 10-year was 300 to 400 basis points. And that was another period where the markets felt the Fed was overstimulating. He's going to get asked a lot of questions about that. Why not?
Why shouldn't he answer them? We have a template of McChesney Martin in 1951. We have the Vietnam War, LBJ, really unhappy. Maybe it was Nixon, I can't remember right now. What is this silence that we get from Powell? He should make some form of defense of the institution today, shouldn't he?
I'm sure he will. I'm sure he'll defend the integrity with which they look at inputs into their decision-making process and the summary of economic projections. In the past, he has admitted that there are wide dispersions of time. Not everyone is in agreement. We think this time there will be unanimous on not changing rates, but I think he will defend the institution.
Let's say the Fed were to cut rates, not by necessarily 2.5 percentage points, by let's say a percentage point. How much would long-term yields rise based on the current expectation of an elevated trend of inflation for a longer period of time?
Probably not a lot. I think the market is expecting about 100 basis points in rate cuts over the next year. I think everyone has moved to a December rate cut and 3 more early part of next year. So that's already effectively in the market. It would be interesting to see what that does to the 10-year. Does it bring it down a little bit? And does that create a more positive dynamic for the housing market? That's the one thing that worries us the most. When you look at the housing data today, it's at a cycle low.
Yeah, and that was something that we saw in economic data that we got earlier this morning. We've been getting consistently. I am just wondering how much that forecast for front-loaded or back-loaded rate cuts next year stems from the fact that we're going to have a different Fed chair, who potentially will be a little bit more dovish.
Yeah, that's the case. Look, Fed officials are political appointees. They're not voted in. So they're going to be appointed based on their views and beliefs and what the administration wants to endorse.
So did you hear that, Tom? He said that this is actually going to be a riveting meeting, so we should all be very
agree,
clear.
and I've changed my tune. I was not, did I think it was a snooze fest? Maybe, but we have migrated from that. At least I think this is important to state. We're fighting 2.5 wars. We're fighting Ukraine. We're fighting from Israel to Persia, and we're fighting, with great respect, half a war in Gaza, I guess. So it's 2.5, if not 3 wars. When did we have a Fed meeting with 3 fronts, ever?
Well, with 3 fronts on one side and then a home front with a question of policy. And Bob kept talking about the bill that may or may not get passed, with the CBO putting out that it would increase the deficit some $2.8 trillion over the next 10 years. How much does that factor into a Federal Reserve who is being accused of raising the costs for this government by the president? This is something that he's going to have to discuss today. I'm sure he'll get asked about it. Bob Michael of JP Morgan is sticking with us, which we are so pleased about. Coming up, we've got Kathy Jones of Charles Schwab and Greg Peters of PGIM as we count you down to that Federal Reserve decision. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
do
the
we have a camera, or do we don't want to lose you, Emily, in all of this.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Addiction isn't a choice.
I would isolate, self-medicate, and fabricate to continue my use.
I didn't really think I had a problem.
Rachel and Pete are just 2 of 48.5 million Americans with substance use disorder. But 3 out of 4 people find recovery is possible with help. Go to shatterproof.org/findtreatment to watch the short film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
In case you missed it, on Bloomberg Surveillance. Reading economic data right now is like reading tarot cards, because right now it feels like you can pick out what you want and interpret it in whatever story that you wanted, and maybe it'll sound vaguely truthful for people and they will lean into it.
There was a science to it.
Tarot cards?
I thought tarot cards was like real deal.
Yeah, my son is a physicist and he tells me economics is not a science, so.
Well, I just think that it's a very choose your own adventure kind of moment. At what point do you know this data is reliable? Don't miss Bloomberg Surveillance live every weekday.
The Fed sort of stuck between a rock and a hard place.
The Fed is in risk management mode.
They're definitely going to be on hold.
On hold.
So the Fed is really on hold.
Remain on hold. The Fed won't cut.
I expect them to not do anything.
The Fed wants to be, quote, late to the game.
It makes sense for them to be on hold. They will continue to sit on their hands. They're going to upgrade inflation. They're going to downgrade growth. They'll continue to say we're being patient.
The FOMC is prioritizing inflation over the labor market.
Powell will probably say that he will continue to wait for clarity.
You probably are going to get a lot more wait and see, a lot more to learn.
The Fed is going to wait and wait and wait.
Such an intro. The riveting Fed Decides, the countdown to the Fed Decides on Bloomberg TV and radio is right now. I'm Lisa Abramowitz alongside Tom Keene. Jonathan Ferro is on a well-deserved week off. I will just say right now, markets kind of range-bound as they assess all the potential risks in markets. They've come a long way, though, since the last Fed meeting on May 7th. You can see the S&P is almost 7% higher. Now it's up by almost 0.3%. Across the board, we have seen gains in the equity indexes, in part because of this. this. You have seen this expectation with yields higher across the board since May 7th, but not running away. And that has been one of the concerns. Do you end up with this yield premium that really becomes pernicious? Right now, not so much, still up about 10 basis points, but the 10-year yield, 4.37%, I should say 10 basis points from the last Fed meeting. But oil, Tom, and this is, I think, what we're watching most closely. Oil prices materially higher since the last Fed meeting, up some 28% on the heels of what's going on.
There's a rule, and Bob will remember this from LIBOR OIS in 2007. You go 4 standard deviations. It matters. 2 days ago, Brent crude went 4 standard deviations within a very tight range. I don't want to say a lot about it other than we haven't hit 80 yet. People are modeling out hundreds. I don't have the name. I can't remember, but somebody modeled out a 1.5% hit to GDP with $100 oil. I don't want to be inflammatory on that other than it's moving up. It's part of the mix. You know, I like the headline here moments ago. This, you know, Powell could say this today on cutting rates. I may do it. I may not do it. We may get that from Jerome Powell.
I'm guessing that that's not going to be the case. Joining us right now is Kathy Jones of Charles Schwab, who I'm sure agrees with me, and Bob Michael of JP Morgan is still with us. Kathy, thank you so much for being with us. How much is this Fed going to have to respond to what's going on with respect to oil prices, in addition to what we have already learned, both on tariffs or not, as well as the budget?
It's just another layer for the Fed. I mean, it's just like this layer cake that you just keep adding on one risk, one policy issue after another. So on top of tariffs, on top of the budget bill, on top of the multiple wars, now we're going to have energy prices as an input. And I think that this makes it even more complicated, and it was already really complicated to start with.
And part of this is the guessing of GDP. We were talking to Bob about it before, and whether it's a nominal GDP mystery of what inflation's going to do, or even real GDP. Do you get a sense that there's a real dispersion of wonderment about where real GDP is the end of the year, or dare I say out 12 months to Q2? It's next year's 2026, is that right?
You got this.
Nailed it.
Oh, we got the year now. I don't know that there's a lot of dispersion on expectations yet. I think we haven't even gotten to the end of the 90-day pause on tariffs, so we don't even know what the effective tariff rate is going to be longer term. So I think a lot of people are still modeling kind of a muddle along, not bad kind of GDP growth because consumers have hung in there. But I think as we get over the next couple of months, what we're probably going to find out is how's the labor market holding up, how's consumer spending therefore holding up, and what do all these policy changes have? What impact are they going to have?
At a certain point, though, and I got to say, Bob, we do have some certainty. And this is something that I think people should recognize, that tariffs are going to be on, that you do have an economy that, yes,
I just finished
is weakening,
my call.
but it's not falling off a cliff.
Did you put your entry on the wrong side of the candle?
They have to give us some sort of scenario analysis for what they do with some kind of stagflationary type of situation.
And
if you were going, I've done it. I've done it.
The revenue from tariffs is,
I know.
By the way,
I've done it a million
exactly
times.
Matches what the one big beautiful bill
it's just a mistake,
over the next 10 years. So I think it's incumbent on the Fed to give us some answers.
Like right now, if you're going long,
they can talk
like you probably want to put your entry down here toward the 200. You don't want to be in up here. You want to be in at one end of the candle. And if it leaves and goes without you, then you get in at the bottom of it.
Yeah. They'll be there after it happens. To me,
oh wow.
Missing here
well, that's good, man.
Of the president, 2%.
So you're up for the day. Then
drop. The drama of President Trump.
Yeah.
You know, I can do it down 100 beeps, down 200 beeps.
Yeah.
What's wrong with the 25 beep cut?
Those are painful, aren't they?
Multifamily housing's down 23% or something. The housing market's
You just can't get FOMO and get in after the move already started. That's when you get chopped up.
Why can't they do that?
See, like right here.
They could.
See this candle?
All the uncertainty of what these big policies will look
This is
like.
probably the entry to go long right here. Well, your stochastics are overbought. Yeah, this would be this is tough. This might roll over again.
They need a few more
this could do either way.
Everything looks okay. Most of the time, we would look at where the labor market is, where inflation is, where growth is, and say, we would take it.
This is either way. We're in VWAP chop, by the way. We're chopping around the VWAP. Look, we're below the VWAP on the NQ, and we're over the VWAP on the ES.
Kathy, do you think
So
we should
this
weigh
is,
in
for
more
me,
on
this
the
is a no
dovish
trade
side,
zone until
considering the
it picks a
weakness that we're seeing
side.
in the economy in tandem
This could
with some of
easily
the
roll
inflation fears
over,
that have
or we
really,
could confirm and
embedded
go
quite a bit.
higher. There's,
Yeah, I
I
think
have
the
nothing
problem
saying
with
either
being
way.
too dovish right now is that there's a
Okay,
lag
yeah.
time
Yeah, for sure,
between
man.
tariffs and when it might
Where's your
hit the
entry
price-
point, like the
price
50
level.
EMA?
There's a
Like,
lag time.
I guess
in so
right
many
in,
of
like
these
up
things.
here?
Energy prices can be a lag time.
What would be your
And
entry
they
to go
are
short, do you
further
think?
from their target on inflation than they are from their mandate on unemployment. So if you remember last time, Powell said, we look at how far we are away from our targets and we set policy based on that. Well, they're further away on inflation than they are on unemployment. So that would argue not to be too dovish at this stage of the game.
Which raises the question, and this is something that John would be saying if he were here. He'd say sometimes you can learn more about how the market reacts than even the news itself. Joining us now is Greg Peters of PGIM. Greg, from that perspective, how much are you expecting the market to really want to hear a dovish message versus a more hawkish one when you take a look at longer-term bond yields that are a little bit more controlled than they have been, but still nudgy?
Yeah, I mean, the bond market's been in a very volatile range for several years now. The market is clearly leaning more dovish. I think they're going to be sorely disappointed. I think the Fed is focused on inflation, and the market is, focused more on the growth side. What you're also seeing is kind of forward path of rates is baking in this new Fed regime, whatever that means. So,
That's a
what does
pretty
the Fed
strong
look
candle.
like
Did you enter yet?
And so the market
If you
is
haven't, man, I'd
really
wait for these
skewed
stochastics to at least
one-sided,
roll over
around rate cuts
if you're going to
and
go
the amount of
short.
rate cuts as you go out
It's
the
tough.
curve.
It's tough shorting a candle
I'm
like
not
that
sure
back
the
into the
inflation
VWAP.
dynamics or even the growth dynamics support that.
What do you see in the comparison of nominal to real yields in the bond market, Greg, right now? What's the dynamic, just the last couple days, between a nominal full faith and credit and the real yield?
Yeah, I mean,
You know
you
it's
look at
getting
real
goofy when
yields
it
are,
starts
just call it,
tripping, though.
above 2%. That's, pretty substantial. I think that's, on the higher, end of the range. I would expect that to come down, but you could interpret that. The beautiful thing about yield and real yield, you can interpret that.
Yeah, I'm rolling. I'm done. I'm done
Right?
trading
It
it
could
though
be
until I
a
get
strong
back.
macro growth story, or there could be something more nefarious. So I think that real yields are a little too high, but not dramatically so.
Greg, what Bob Michael was talking
try and
about
get to
was
the
that this is a
payout when
Fed
I
that's
get
going to have to
back.
give some answers. They're going to have to answer how the reaction function really does change as their dual mandate comes into conflict, and we do see something more akin to the stagflationary picture that the summary of economic projections is likely to show.
Something
What
I
would
got to
you
work
like
on
to
those.
hear?
I got to
And what
quit
would your
trading.
question
Like
be
I
if
keep
you were in that
getting
meeting talking to Fed Chair
like
Powell?
at the end of the day, when my trade box shuts off at 320, I just got to start shutting down Rhythmic and closing the account. Let the chart run, but not have the ability to trade.
But quite
I
frankly,
get caught up
would
into
ask,
trying to do
the
MOC,
employment, question.
and it works some days, and
I
other
think this
days
economy and even
you get
inflation
snapped,
hinges
and it's
around
just stupid to
employment.
do.
You have seen some weakening. There's some seasonal
So I'm
adjustment
gonna-
factors there as well, but really trying to hone in on how important.
Thing is you
the
sit there and you
employment
watch it,
picture
and you
and
got
what are
yourself
the targets
convinced
that
it's
you're
going to do
looking
one
at,
thing or
whether
the
it's
other.
quit rates, whether it's
Yeah, that I got to be honest with you, man. That would be the one reason I would move everything over. Like if I could do my strategy, like if I could load my the forecast strategy there,
Fancy bank here.
and if I could license it, I would move over there.
City of Prudential. What do you see in the real world?
Because I would just lock myself out when I had profit I was happy with, so I couldn't touch it the rest of the day.
Policies very uncertain.
Yeah,
It's very
exactly.
volatile. And I think they're very nervous.
See, you can't make
about what
Ninja
they're
Trader do that,
doing,
though.
Broadly speaking.
Maybe
It's
I can,
keeping some
but,
duration, but not too much. So we've been advocating kind of a middle ground. in
I'd have to have it
duration.
programmed
We're
in.
Finding the yields are relatively attractive. If you go
Like I
into
shouldn't even
investment grade corporates or municipal bonds have been very attractive. They're finding a spot
I'm
where
looking
they
at
feel
it again.
secure because they are a bit nervous about the equity market.
Microsoft's $1.20 below its record high of 2 days ago. I mean, I find retail here to be just absolutely fascinating. Of the nervous and OMG, what's
I'm
going to
disconnected
happen?
now.
Long term has become 2-year paper, In
I
a
don't wanna
stock
fuck it.
market that's up near record.
Yeah,
highs.
yeah, I agree. But it's not very old either. It's only a couple years old, if that, where Ninja Trader's been around for like 15 years. So it's just over the years they've added features people have asked for, which makes it more complex and a lot more work to set up. You know, there's give and take to it, I guess.
Magnitude of either one.
It's
That's
just
what
I
the
can't
trend
switch from
discussed,
Ninja
and
Trader
that's why
because
the
everything
consensus
is in it.
on
I
hold,
just
because
I
these
can't.
things are still
There's no
playing
way
out.
I
We
could
still don't
convert
even
it
have
over
all the
from
policies.
at
It
this
still
point.
hasn't finalized all
But
these policies.
if there was
that
a way
are conflicting in some ways.
to
You know,
program
they're
in
gonna
clicking a
slow growth and
button
they're
so
gonna
you
raise
couldn't touch
inflation.
it till the next
But then
morning,
on the, 6
maybe
months
I'll
from now,
talk
it
to
could
the
go the other
programmer
way.
when I have
That's a really
everything
tough
done.
environment to set a
I might
policy.
actually
Bob, I
get
find it
serious
interesting
about
because
spending
you've
the
come on
money
the
to
show,
do it
and
when I
earlier
get
in the
back
year,
from
you talked
Vegas.
about a sub 3% across the curve.
So I can get it through
yield
licensing
on 10
and
years,
see
2 years,
if
and
that's
30
something that
years.
he
It's
can add is
obviously
find a way
changed,
to
and you have changed
completely
some of your
lock
outlook.
myself out
But
and
I
not be
wonder if
able
it's
to go in
based
and
on
retrip
some
it,
of
you
the
know.
Sell America trade, if it's based
There's no
on
point in doing it
inflation,
if
or
I
if
can
it's
take
based
5
on
steps and
something
turn it
related
back
to
on in
supply
5
and
minutes,
demand,
you know, or
having to do
whatever.
with
I
yield term premium
want to be
based on
completely
Washington,
locked out.
D.C. and that big, beautiful
But that is
bill.
genius
I
feature,
think there are
man.
a
That's
couple of
kind
things.
of like
One,
them thinking
tariff
of things
policy
like
is far
that
more
is why I
aggressive
like
than
Top
we
Step,
originally thought it
because
would be, and it's going to set
that's like a
in
real
above
thing
levels
traders
we
can
had
use. And
expected.
so they
The
put
One
one
Big
of the first
Beautiful
big
Bill
features they
Act,
put
that
in.
came out to be much higher in terms of incremental spending than we had also assumed. And I think the combination of those things just made you pause and say, what's the Fed going to do? They're probably going to hold off. Greg mentioned that the rates market has been relatively volatile. We're taking the other side of it. It's remarkable to us how stable it's been. I'm surprised the 10-year Treasury isn't 5%. Fed funds is 4 3/8. It's been 4 3/8 for a while. We've already had half of the year go by and one after another rate cut that was expected pulled off the board. So that's already happened, and the market's on board with a rate cut in December. You could take that off the board. I don't care. We're 4 3/8%. We've been there for a long time, but we see it because we have meetings every day with people looking to get into the bond market. I've not had a single meeting this year with anyone saying, oh, I've got to get out of the bond market. When do I get out? How do I get out? It's all about, is this the time to get in? Where should I go? About de-dollarization.
Greg, just quickly, a final word from you.
All right.
No,
I got a call
I think
in
of
2
all
minutes.
the things that are going on, I think this Fed meeting is probably the least important, right? They are just reacting to, all the events that are unfolding that we're discussing and the uncertainty. So I think definitionally you'll see a Fed behind the curve.
I always have
and
myself
I think
convinced
there's
I'm going
no
to catch
way
one
to
of
get
these
around
big
that
trades
fundamental
on the
fact.
funded,
Kathy Jones, Greg
where
Peters, to both
you
of
get in
thank you
early
so
and you
much.
let it
This
run
is
and you get,
Counting the Countdown to
and
the
it
Fed
moves 200 or
Decides on
300
Bloomberg
points in
TV
one
and
day,
radio.
and you
We are
basically
just
make
about a minute
enough
and
to
10 seconds
keep your
away
account
from
funded
that
forever
decision.
and take money off it every
I
week.
don't know. I
don't think so.
I'm guessing that
Given
probably
the president
not.
alone
probably
today,
just a dream.
If I was dissenting against Jerome Powell today, he's under fire. I mean, they're coming out of the trenches after him.
And there's no reason
But
for them
thinking,
to
having that in the
say
back
that
of your
they should
mind
cut
probably
rates.
makes
The
you
dissent will be expressed
make
maybe in the
moves you
dots,
shouldn't
because we are
make.
going to be getting the dot plot, which I know they all love very much.
You know how much I wish.
All of a sudden, if you start to have people pulling dots off the base in terms of
Rate
how many
decision
rate cuts this
imminent.
year,
All right,
only
we're right
one
up
getting
against the rate
gamed out in
decision.
those
Let's see.
dots. How
Let
much
me
does
put
that
the
really put the fire on Jay Powell?
We need James Bullard to come back and give us that low ball.
4 seconds.
Yeah, well, he
3,
actually was thinking-
2.
he
Which
said
way
the
are we
other side of
going?
that. We actually caught up with him earlier
Which way are we
today.
going?
He said that this is a Fed that should recognize more greatly the weakness
4.5%,
in the
so
US
they didn't
economy
move
as,
it, right? Isn't that
evidenced
where we
by
were?
the downside surprises, as well as what we have seen with respect
Is that good or
to
bad?
the labor market and the housing
Yeah,
market.
they
We
didn't
have
move
evidence
it. They
just for
held
you.
the
Heading
rate.
into that meeting, into that
So we did
decision,
not get
they
a
are staging
reduction
rally
in
up
rate.
about a third of a percent for the S&P and NASDAQ. Russell
Market
2000,
must have priced
more
in.
dependent on Fed easing, up almost
we're-
1%.
Let's see
Right
what
now,
happens off
let's
this
head over
candle.
to that
Sometimes
decision.
this will be a liquidation wick before we go lower.
Very few changes to the statement, no change to the dot plot, and some expected changes to the outlook. Fed officials still forecasting 2 rate moves by the end of this year, as 7 members now forecast 2 cuts, 2 more than in March, or forecast no cuts rather, 2 more than in March. 4 see just 1 cut. They do see 1 less cut than they had for next year. The biggest change to this statement is the balance of risks. Uncertainty about the economic economic outlook has diminished, it says, but remains elevated. In May, the committee said uncertainty had increased further and that the risks of higher unemployment and higher inflation have risen, a phrase that is dropped from the statement today. They also changed their labor market outlook to say unemployment remains low rather than May's stabilized at a low level in recent months. Labor market conditions remain solid, they say. The forecast sees only a slight increase in unemployment by the end of this year to 4.5% from their March forecast of 4.4%. Unemployment will remain at 4.5% next year. Inflation,
all right, I got a call. I'll
is
be right back.
forecast to rise significantly. It will end this year at 3%, up from a 2.8% projection in March. Headline inflation was 2.1% last month. Core inflation will be 3.1% this year, up from a March forecast of 2.8%. Growth should slow, rising 1.4% this year. That is down from a projection of 1.7% in the March SEP. The neutral rate remains at 3%, though some members think it may fall in 2026. The decision was unanimous, so the bottom line basically is with fiscal policy, tariffs, and taxes still undecided, there is still too much uncertainty for officials to give a clear answer as to the path of how monetary policy will respond.
Mike, thank you so much. Great work as always. That's Michael McKee, our correspondent for economics. We're looking right now at a reaction in markets that is treating this as a dovish message. We are seeing a rally into bonds across the board, a sharp rally in the 2-year in particular, and that is extending into equities. What you're seeing is down almost 5 basis points for the 2-year yield, 3.9%, partly because of the dots, the idea that they are keeping 2 rate cuts getting priced in or gamed out for the dots. That, I think, is the news of so far this statement.
Based on all my conversations, you're dead on. It's really important that they're gaming out 2 more rate cuts this year. There's a wide body of people that say, show me the evidence.
Joining us now, former Fed Vice Chair Rich Clarida. Bob Michael still with us. Rich, what's your take on their reluctance to get rid of one of those rate cuts getting gamed out in the dots?
Yeah, Lisa, I thought going in was a close call. I actually thought they would get rid of one of those cuts. So I think you read it well. It is a dovish lean from the committee. I do note that apparently they took out 1 cut next year, but that's way down the road. So they still have those 2 cuts in, even though they see more inflation than they did in March.
I look Richard Clarida, say Jeffrey Frankel at Harvard years ago, saying we've got to go beyond the dual mandate. Within the scope and scale of your economics and what you did at the Fed, line up the priority of those things: employment, inflation, economic growth, or the side distractions we have from the president. Line up those distractions forward for Jerome Powell.
Well, I think right now, look, the economy's in a pretty good place. The labor market is at or close to full employment. Inflation has been coming down this year. I think right now the third factor is the uncertainty about the tariffs, probably also on fiscal. I do think that if we had not had the overshoot in inflation in the last several years, then we would probably be already signaling a rate cut at this meeting. So I think there is some history dependence here as well, Tom.
Bob, what's your take on this in terms of what we were expecting, which is 1 rate cut getting priced in, one of them getting priced out, and what we did see, which is a sort of stagflationary mix of a downgrade to growth and an increase in inflation, but not as much as we were expecting. What's your take? Are you surprised?
I am surprised. I'm surprised they left in 2 cuts this year. Obviously, they're paying a lot of attention to the housing market and to the labor market. Both of those show signs of potentially cracking. Yeah,
President Trump weighing in earlier on the Fed today at a press conference. Take a listen to what he had to say.
Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people. So anyway, we should be 2 points lower.
Rich, how much do you think this is actually weighing on what we're hearing or what we're potentially going to hear from Fed Chair Jay Powell later today? This idea that there are a lot of people in markets saying that rates should be lower, and you also have the president increasing the pressure.
I don't think it's so much. Look, Jay Powell has a lot of experience with criticism from the White House, and so I don't think that's going to be a factor at all. But look, the inflation data has come in better than a lot of folks, probably even the Fed, expected. We are seeing some slowing in the labor market. You know, Lisa, I think a factor now is they're also having to deal with what is a fully employed economy given what's going on with immigration right now? So we're going to have probably some slowdown in the labor force from that. Engaging that is an additional complication to the decision, I think.
I'm going to do this for Stanley Fischer, the late, great Stanley Fischer.
Yeah.
He lectured me, folks, a little bit of math time here. Lisa said, Farrah would never let me do math. We're doing math. I think it's a clarification, Bob Michael, that we talk about 2 rate cuts, and the President of the United States is talking about 8 rate cuts. 2 full percentage points. And we don't understand, he's talking about jumping down a point, like a real estate guy. What would happen to our world if we were so abrupt as to go halfway to 100 basis points or all the way to a presidential 200 basis point 8 rate cuts? What would happen?
You're betting on a number of things. The first thing you're betting on is that tariff policy would create a significant headwind to the U.S. economy, and businesses and households would just stop spending. So now you're creating a lower cost of funding for them to step in and start spending. You're also betting on the One Big Beautiful Bill Act doesn't get passed in its current form, that it gets dialed down quite a bit. So that sort of offset to tariff policy isn't quite there. I think those are 2 mighty big bets to make here. I would just stick with tinkering with the dots.
Tinkering is the key thing here. We have a 50-year history, Claire is expert at this, of tinkering and not jump conditions like a real estate guy from New York.
Well, the tinkering will actually make the press conference a whole lot easier because it'll give Fed Chair Jay Powell a bit of a pass in dealing with some of the political questions. Joining us now, Diane Swonk of KPMG. Diane, were you surprised that this Fed leaned dovish at a time when even people in the market, putting aside President Trump, have talked about how inflation, as Rich just mentioned, has been coming in weaker than a lot of people had expected?
No, I'm not surprised. I think this is an important issue. The Fed says they're data dependent. They have to respond to that, but they're not going to cut right now. And that's the most important thing. We've got a forecast where the Fed is actually more stagflationary, which I think is what you pointed out. And that's important. And, you know, whether or not we believe it's 2 or 1 rate cuts, time will tell. And the Fed is in this really policy purgatory where they're unable to move because of the uncertainty ahead and the fact that we know that tariffs were not all collected. The effective tariff rate in May was actually lower than what we know the effective tariff rate will be in June. And these things are coming in sequentially and in a staggered way that will show up later in the data. And that's what the Fed's waiting to see.
And Diane Swonk, the headline's simple here. Jennifer Pinero, thank you for this. 1.4% on growth and 3% on inflation. That's that Swonk stagflation that we're looking at. What's your conviction that we would see a reduced GDP level?
Oh, I think we will see a reduced GDP level, and I think that's what the Fed is also acknowledging and why they're saying they might go the full 2 points. It's actually not that far off from our forecast as well. And in fact, if they get the forecast that they're saying, this would be a forecast where inflation sort of peaks around 3.1% on the core and then starts coming down by year end. And they feel convinced that it will continue to come down by year end because weakness, the unemployment rate starts to creep up, but it doesn't creep up fast enough to trigger an official recession.
Diane, I'm so glad you mentioned this, Rich. And Rich, I would love your thoughts on this. You were talking about how they have gotten inflation data that has been better than expected, weaker than expected. I'm looking at the unemployment rate that they're forecasting, and it went up from 4.3% from the March summary of economic projections to 4.5% in this latest one for 2025 and for 2026. It raises a question, especially what you were talking about, the demographic shifts, just what this feels like in terms of the labor market tightness or not, given how much we have seen immigration affect the picture.
Sure. Well, because the immigration is going to show up in the growth of the labor force, and it's going to obviously show up in employment or unemployment. So I think it's a complication in the sense it makes their signal extraction problem even harder. I guess one thing I would say, Lisa, and I like the term policy purgatory, Diane, because I think it captures it well. One thing I would say is 4.5 is a number, so we'll talk about it, but there's a big range of outcomes for the unemployment rate, especially 12 months down the road. So I think there's a chart in the SEP that will show uncertainty about unemployment, and that's probably pretty elevated as well.
Professor Clarida, are we unanchored? And I say that within the great central bank fear of lessons learned, particularly from Japan years ago. Oops, we raised rates. Oops, we got to turn around. Lots of oops. Are we unanchored where there's a new monetarist fear out there of monetary policy people, I should say?
Tom, I don't think so. You know, there was a paper at the recent Fed conference about unanchored inflation expectations, so I know it's on some folks' mind. I don't think we are. In fact, I think Jay Powell's focus really right now for the remainder of his term is to be darn sure that when he leaves, that we are anchored. And I think, you know, that's probably part of what's going on, and we'll hear about it today at the press conference.
Is there anything that gives you pause, Bob, about the idea that maybe we aren't really fully appreciating some of the inflationary risks at a time when, yes, the backward-looking data has been better than expected, but looking forward is pretty complicated right now?
You know, I was sitting here thinking, actually, the Fed did almost exactly what everyone expected. They didn't hike rates. When I go through their forecast on GDP, inflation and unemployment, directionally, they're where everyone was headed, so they kind of match that. And I think 3% inflation looks to us to be very aspirational. When I look at Mike Feroli's forecast, he has inflation peaking at 4.6% in the third quarter. And that's on a seasonally adjusted annualized rate, but that's a very high number. So I think, yeah, there is some risk that we may be underestimating what tariffs and higher oil prices could do to inflation, and whether the One Big Beautiful Bill Act has enough power into it that it helps to entrench higher prices.
And Diane Swank, with your charm of the Midwest, there's one big beautiful interstate system out of Chicago moving south, which is directly affected by goods, tariffs, and the rest of it. What do you observe in the Midwest? Are the tariffs clicking in now? Advise the chairman.
Well, they know what's going on. They're hearing it from everywhere. And what we're starting to see is not only are firms doing whatever they can to mitigate the costs of tariffs, they're also starting to see some disruptions due to supply chain problems that you can't undo overnight. And I think that's very important as well. That's only just beginning to seep into the data, but it's very reminiscent of the pandemic. And I think that's why the Fed is still on so much guard. And this is a purgatory for them because they are very concerned that the unemployment rate will rise, or it may not be signaling, as Rich said, what it might have otherwise signaled, because we'll have pockets of tightness where immigrants used to be and they no longer are. We're already seeing that in the care economy, and we've been tracking it, and the slowdown in elder care in particular, where there's a disproportionate amount of foreign-born workers in that area. That employment has fallen basically to nothing, and in fact, that's where inflation is also moving up at several times overall inflation. So those are pockets that, you know, you get a little pocket of it. Is it enough for the overall economy? When you've got the aging demographics we do, that's something you want to worry about. Along with, we have childcare disruptions as well.
Diane Swank of KPMG, thank you so much for being with us. If you are just joining us, the rate decision was unanimous, and it was a decision to do nothing, at least when it comes to the actual rate, holding it in the benchmark rate zone of 4.25% to 4.5%. The one aspect, though, that caught everybody, or some people, off guard, Neil Dutto again would say, absolutely, this is not surprising, is that they are leaving their dot plot at 2 rate cuts for the remainder of this year. They did lower their GDP estimate to 1.4% from 1.7% in the March summary of economic projections, and lifted inflation from 2.8 to 3%, but they still kept their rate cut expectations the same, talked about uncertainty diminishing, but still elevated, Tom, at a time where we're all kind of in this policy purgatory that Diane was talking about.
I know you want to go to Matt Lazzetti here, but to me, the arch issue, I've said this, you've heard me, the Bramall Cam once got her, she was very upset at me boring her with this. Can you aggregate America? If you're Richard Clarida at the Fed or Matt Lazzetti at Deutsche Bank or Bob Michael at JP Morgan, Greg Peters, any of them, can you aggregate American economic data, or is it a barbell economy of those healthcare workers Diane Swank just spoke about? They're desperate and unreplaceable, or fancy people you're living with every weekend north of New York City. I mean, which is it?
Well, you know what? This is a great time to bring in Matt Lazzetti of Deutsche Bank to answer all of those questions and address them. Matt, thank you so much for being with us. Let's start with your reaction. Do you view this as a dovish move by the Fed, as it seems to be treated in markets?
Look, I think it skews slightly dovish. We thought in a very close call that they would go to one rate cut this year rather than two rate cuts. But when you look at the overall change in their economic forecast, it's very much in line with what we anticipated. And you have a committee where 7 officials expected to not cut rates at all this year. That's up from 4 in the last SEP. They actually raised their dots in 2026 and 2027 because they think inflation is going to be a little bit more persistent. And so the way that I view this, the median for at least this year, it was kind of a managed kind of agreement that they would keep it at 2 cuts at this point in time. Don't want to rock the boat. There's still a lot of uncertainty in terms of how the outlook will evolve from here. But it's a committee that expects eventually to be cutting rates, but less so in aggregate than what they thought previously.
Matt Lazzetti, it's a 3-ratio effort. We don't need to go into the math. Where is productivity in America right now? Out of the pandemic, all the tech stuff, there seemed to be this zeitgeist that we were seeing increasing productivity. The overlay for Jerome Powell, is it still a productive America?
Yes, I think so. We've been very constructive on productivity growth coming out of the pandemic, mostly because we view productivity growth as being kind of a lagging indicator from a very tight labor market. So when you have extraordinarily tight labor markets, what you find is firms, see labor that is tight, difficult to find, and expensive in terms of high wage growth. That incentivizes them to find productivity-enhancing investments, capital deepening, other efficiency gains. Now, there's a lot of volatility in the near term. You're having big shocks from trade policy uncertainty. You have a fiscal package that's coming through. But overall, on a trend basis, we're quite supportive and kind of constructive on productivity growth.
Taking a step back in terms of the uncertainties that this Fed is going to be having to deal with, there's a question about oil and how much it matters or doesn't. We're used to saying oil doesn't matter. You strip it out from core inflation and you take a look at what does matter. And yet it does seem to trickle into inflation expectations and potentially some of the costs of goods around the board. I'm just wondering, and I would love Rich and Bob to weigh in too, but Matt, from your perspective, how important is it to both growth and inflation to understand whether this is a sustainable level of oil prices that we've seen in the terms of the $16 rise since that May 7th meeting, the last time the Fed gathered?
Yeah, in terms of the growth impact, I think that impact has moderated over time as we've become a net exporter and energy production has become more important within the U.S. Obviously, it lifts headline inflation in the near term with a far more modest pass-through to core inflation as we look ahead. But I think you're exactly right, Lisa. The key area to focus is on inflation expectations because all measures that we have are highly sensitive to oil prices, including long-run market-based measures. So if you look at the correlation between oil and five-year break-evens or inflation swaps, that correlation is about 75% since 2014. And so if you do have a spike higher in energy prices, I think above these levels, most importantly, I think that is something that could move inflation expectations to more worrying levels for the Fed.
And Rich, what's your take on this? Because we heard from Bob that maybe we are underestimating just how inflationary not only the one big beautiful bill is and also the tariffs, but potentially also the oil price spike that could alter longer-term inflation expectations.
Exactly, Lisa. I think, again, given the history, they are attuned and attentive to inflation expectations. They don't take them being well anchored for granted. The Fed and other central banks have a lot of experience over now decades of how to look through oil prices. But I think Matt is exactly right. In the context of where we are currently with the history and also with the tariff uncertainty, I think it's yet another thing for Jay Powell and the committee to worry about, which is probably, again, why they're on hold at this meeting.
Bob, what do you expect him to say about this? The idea that traditionally oil price surges can be disinflationary, inflationary, stagflationary. How will he message it at a time where we do have enough certainty that he does, as you said before, have to give some answers?
Well, I think he'll point out a lot of things. I think he'll point out that the Fed understands it's one of the biggest household expenditures. So higher oil prices could translate into higher prices for gas at the pump, and that could cause households to pull back on expenditures elsewhere. I think he'll go back to things he's always been saying. It's about inflation expectations. Are they concerned that this becomes embedded in prices going forward and then expectations become unanchored?
A sensitive question, Richard Clarida. I believe you were on the watch when Putin invaded Ukraine the second time, 2022. How does the Fed talk about geopolitics? Around the table, how do you talk about war?
Well, actually, I had moved on from the Fed at that point, but in general, geopolitics is an ever-present uncertainty. Sometimes it spikes, as it is recently, at least in my experience, and the minutes and the transcripts show this. It's a pretty clinical, analytical discussion of how it feeds into inflation, demand, supply. At least in my experience, Fed commentary doesn't really go into the politics side of the geopolitics, more just the economic side.
Matt Lozzetti, I think one thing important here, Bob Michael mentioned this earlier, is the surprise that yields aren't higher, whatever anybody can believe. Ken Rogoff mentioning 5, or I think at one point he got out of control and mentioned a 6% 10-year. Matt Lozzetti, are you surprised that yields aren't actually higher right now?
I think given some structural factors, the answer is probably yes. So the budget deficits that we are running here in the U.S., the outlook for the debt to GDP ratio, the idea that inflation might be somewhat higher and more volatile, and bonds may not be as good of a hedge for equities. All those suggest, I think, over the more medium term, long-term yields are likely rising and term premium are likely to be higher. In the current environment, however, I think that is being offset by cyclical considerations and cyclical concerns, at least. And those concerns are still around the possibility that the uncertainty shock that we've had from trade policy and the impact of trade policy uncertainty will lead to weaker growth outcomes, a weaker labor market outcome, and that the Fed could need to cut meaningfully at some point in time. I think for the long end of the curve to kind of dislodge meaningfully higher and on a sustained basis, probably need those concerns to completely dissipate, and we're certainly just not there yet.
I mean, Bob, the history here, the young crew, including young Lozzetti, they 45 basis points on the vanilla 2s and 10s, the difference between the 10-year and the 2-year yield. You and I recall 200 basis points, 2 full percentage points difference. Are we just going to get used to a steeper yield curve?
Tom Pooh, we used to do 45 basis points on the curve in a day. This is total nonsense. But I think actually Mr. Lozzetti is right. He hit the nail on the head. It's going to take time to get there. You are still living in a post-Great Financial Crisis world where most of the investors who are sitting on desks only know a 0 to 2% Fed funds rate.
Right.
So this looks extreme to them. I think it's going to take time to mean revert to the normal that existed pre-financial crisis. Remember that first Fed dot of neutral policy long-term was 4.25%. It wasn't 2, it wasn't 3, it was 4.25%.
Okay, now my idea is James Diamond's going to have a phone call. He's going to be in Central Park running. He's going to get a phone call from the president, and they're going to explain Bob Michael's x-axis here. President Trump's x-axis doesn't look like Jerome Powell's. How do you explain to President Trump to have patience to get the market to normalize away from the oddities of the last 5, 6, and 7 years?
Well, I think you have to look at how things look pretty healthy right now. Yes, there are storm clouds on the horizon, but we've now been talking about them for 2 quarters, and they haven't actually materialized yet. I know housing and the labor market feel a little bit softer, but the hard data hasn't actually reflected the breakage.
Rich, come on in here. Do you agree with this? I mean, honestly, I've heard this discussion so many times. I remember back in the day when I got a mortgage at 10%. At the same time, no one mentions the fact that their house cost about $90,000. So just saying, it was a very different time asset price-wise. Do you think...
At the table
well, no,
right
this
now.
is something that people always argue that. And I love that you said puh. But I'm just curious, Rich, from your perspective, is that something that this economy can handle? Rates where they are on the long end and even going higher in this sort of adjustment period that we hear Bob and even Matt talking about?
Well, Lisa, we've been, the 10 years been in this range of roughly the high threes to just under 5 now for 2 years. We really got into this at the last Fed hike in July of 2023. The economy is handling it. We do think a higher real term premium is what investors are going to require in order to hold this debt. We've talked about the bad news on deficits, but this bad news has been really priced in for a while. So we think the economy can handle it, will handle it. We do think that the curve eventually will steepen. Inverted or flat as a pancake curves are not the new normal, but it will take Fed cuts, as I think Matt Luzetti mentioned a moment ago, for that steepening to be actually realized.
Matt, there was a feeling yesterday that maybe if there were some regulatory changes at banks that would help the long end of the yield curve, that would suppress yields. And I'm talking about the supplemental leverage ratio and how there was discussion, and the Fed's going to meet to discuss it, about potentially allowing banks to hold more treasuries without getting penalized for it or having been charged anything. Do you think this would materially shift anything in addition to maybe adding some incremental liquidity? Would it actually cause banks to go out there and be bidders, be net buyers of treasuries in a new kind of way?
I think the impact is likely at the margin. I think many banks you don't actually think is being constrained by the SLR at the moment, and therefore easing up a little bit, I think, may not have as big of an impact as anticipated. I think also there was actually some hope or optimism that there'd be even greater relief around SLR, for example, excluding treasuries from the ratio. And so kind of the news reports around just kind of dropping the rate, I'm not sure are going to have as big of an impact as anticipated. But I think as you take a bigger picture on this, what you do see, and I think what's been hinted at by Rich and maybe Bob, is this idea that, look, I think foreign investor demand for U.S. treasuries and U.S. assets is likely to be declining over time. It looks like we are set to continue to run budget deficits as a share GDP that are 6.5% to 7% over the next several years. And it makes sense, I think, for the administration to look for ways to free up some demand from the domestic financial sector. And this is one way, at least at the margin, that they're looking to do so.
Rich, out on YouTube live chat, I'm getting torn asunder here. I mentioned the x-axis. This guy says, for those of you way, way, way in the back, the x-axis refers to time. Speaking of time, does a chairman have to come out, Rich Clarida, today and make a clear statement of Fed independence?
I don't think he needs to lead with that. He'll almost certainly get a question from the reporters. Again, Jay Powell's now been doing this for 7 years, and I think he has a record that doesn't really need to be, defended in that way. So I'm sure the question will come up, but I don't think he needs to lead with it. No.
Well, we do this every time before the Fed meeting. Imagine all three of you are in the room at that press conference. Bob, I will start with you since you always have your question handy. For Fed Chair Jay Powell, what would you ask if you were in that press conference?
I'd ask him how they modeled revenue coming in from tariff policy, because right now the CBO scoring is at $2.8 trillion. That's a big number.
And I'm guessing he will want to punt. Rich, what about you? What would you ask?
I would say Governor Waller's talked about a good news rate cut. What would it take to get it in July?
Ooh, compelling. And what about you, Matt? What would you ask if you were in that meeting?
Yeah, I think we want to get clarity or some view on what type of signal they want to send with 2 cuts versus 1. And so, what is the type of data? What is the confidence that they have around that? And does he want to lean into the signal of the dot plot or not would be my key question.
Matt Luzetti, Bob Michael, Rich Clarida, to all three of you, legends, thank you so much for being with us. And Tom, there you have it, a lot of hard questions today.
Well, you can see the steam coming out of my ears. Look, we're benumbed by what this president says about institutions, all institutions. What I heard on the lawn this morning about this central bank and its force around the world, somebody's got to come on. Vice Chair Clarida was graceful, I would say. I'll be less than graceful. He's got to say something to reaffirm McChesney Martin, 1951.
Well, and he has. He has come out and said that the Fed is absolutely independent from any kind of pressure. At the same time, the pressure is coming from markets as well, and I think that's important. That people in markets are saying there are signs of cracking in the labor market, there are signs of cracking in the housing market, there are signs of cracking even in retail sales, albeit it's a complicated picture. How does he respond to that? Jerome Powell is walking to the podium for the press conference. He is beginning his news conference. Let's listen in.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country, and a research conference that we held last month. We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up any modifications to our statement on longer-run goals and monetary policy strategy by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of when they will materialize in the data?
So we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs is to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that will depend on the size of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations anchored.
Hi, and thanks, Chair Powell. Howard Schneider with Reuters. If you look at the rate path starting in December to today and adjust it over the full time horizon you've got there, you've taken about a quarter point per year out of your projected path, and you end at a higher rate at end 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation? Is it a result of reassessments of where your short-term neutral rate is? Why are you on a slower path now?
So I would focus most on the nearer term. As you get out to the later years, it's hard for anybody to know where the economy is going. You didn't see people moving their longer term, estimate of the neutral rate, for example, at this meeting. So, and those things are probably slow moving. So I think if you look at what's happening here since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
But you say in the statement that risks have diminished on that front, but the July 9th, drop-dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Thank you. Chris Rugaber at Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about, cracks in the job market with gross hiring slowing, concentrated in just a few industries. We've seen some housing data, including this morning, that has been pretty weak. Do you see any concerns that, the economy is weakening and that is a reason to cut rates going forward?
So we do of course monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So, you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation, look at wages, look at job creation. They're all at healthy levels now. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that there are concerns inflation will rise, but there is the alternate scenario that tariffs would create demand destruction and slow growth sufficiently, and that would perhaps keep a bit of a lid on inflation. Do you see odds of that scenario? What kind of odds do you see of that scenario coming true, and how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is very much the conversation we had today and yesterday. There are many, many different scenarios, many combinations of scenarios where inflation does or doesn't prove out to be at the levels we think, and where the labor market does or doesn't soften. And I think what you see people doing is looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths, I think, that you see in the SEP. And we do this once a quarter. It's a hard thing to do particularly at this time, but it does reflect. If you see somebody writing down a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate. And it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
Thank you. Mr. Chair, I wonder if you could describe for us some of those scenarios. How do you get to a place? I'm noticing that the uncertainty levels in your forecast are very high. How do you get to a place where you have the confidence in the outlook for, say, inflation and or growth or the unemployment rate? How many months does it take, and what do you want to see in the data to get to that level of confidence to actually reduce rates off the restrictive level?
So it's very, very hard to say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and I think all estimates are now pretty close together, but it's again highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
What you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. As you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying not to be the one to pay for the tariff. But together, they will all pay for it together, or maybe one party will pay it all. But that process is very hard to predict. And we haven't been through a situation like this. And I think we have to be humble about ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data. And again, in the meantime, we can do that because the economy remains in solid condition.
Nick Timros of the Wall Street Journal. Chair Powell, I guess I'm wondering if you could explain a little bit more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another inflation mistake? How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways that the two things I think that drive these things. Remember though, as I mentioned earlier, with uncertainty as elevated as it is, no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things, and I think as the data come in, you should see those differences diminish.
If I could follow up, you've said the policy is in a good place and that it's modestly restrictive. Given all the uncertainty you just talked about, tariff levels, uncertainty around the pass-through, is it price increases versus margin compression, some of the softness that Chris talked about in labor and housing, why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period of very high uncertainty?
So if you just look backward at the data, that's what you would say, but that's not. We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction, and I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise that the markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers, about the outlook for the economy?
Look, from my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with a strong labor market and price stability. That's what we want. We think our policy is well positioned right now to deliver that and to be able to respond in a timely way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Andrew.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly, what kind of effect would that have on the labor market
Sorry,
in the short
with
term?
what picking up?
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing. It's been in a good range and well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand and labor supply are kind of moving down at the same rate. Labor demand is softening. You see that in job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SEP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. Pardon me. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SEP is part of it. Many other ideas. It's sort of how do we think our communications can be improved? There are a number of ideas. People offered a really it was a great conversation. Number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that only implement things that have very broad support. And also, you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today, and you didn't cut today?
Well, the forecast for inflation in December was 2.5%. Core PCE for 2025, the forecast was 2.5%, which was a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that tariffs are going to be substantially larger than forecasters generally thought. And, we don't, our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming and that would mean higher inflation. That's what happened. And so now you saw 2.5% forecast in December, you saw 2.8% in March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of the change, and that's due to the effects of the tariffs that are, we don't know where they're going to land, but it's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I mean, consumers, right, we're looking for relief on rates when it comes to mortgages, car loans. Small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable, sustainable basis, that, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy. So I would say probably modestly restrictive. And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn a little more about tariffs. I don't know what the right way for us to react will be. I think it's hard to know with any confidence how we should react until we see really the size of the effects, and then we can start to make a better judgment. So that's what we're doing, and I think we can take the time to do that because unemployment is 4.2%. Wages are moving up. Real wages are moving up at a healthy clip now, and inflation is 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down, the economy is moving at a solid pace, inflation has come down over the past 3 months, and this is all moving in the right direction. So are you indicating here that Americans should expect some sort of economic pain in the second half of the year?
I'm not saying that at all. From our standpoint, what I can say is that the U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. So, and what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional forecaster with adequate resources and forecasts for a living is forecasting a pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs, and it will be someone in that chain that I mentioned between the manufacturer, the exporter, the importer, the retailer. Ultimately, somebody putting it into a good of some kind, or just the consumer buying it, and all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses say, that's what the data say from past. So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
And follow up on that. So you spent years though talking about how you're data dependent, and be a little more direct on this. Now you're making decisions looking forward. Doesn't the data you're seeing today indicate there should be a rate cut?
No, I mean, your monetary policy has to be forward-looking. That is elementary. You've got to be looking. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again. Right, so it's always forward-looking. If at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very aggressive forward-looking because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses, in a bit of shock after April 2, but you see business sentiment, you talk to business people now, there's a very different feeling now that people are working their way through this, and they understand how they're going to go, and it feels much more positive and constructive than it did 3 months ago, let's say. So again, we think that our current stance of monetary policy is in a good place.
Thank you. Amara Mokwe with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you explain what changed in the roughly 3 months between those statements that made you decide that staff levels at the Fed should decline?
I don't see them at all as intention. So I was asked, is the Fed overstaffed? And I said no. And I sort of said as a pun, overworked but not overstaffed. People do work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we do. We work hard. But I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public, we're going to demonstrate that we are good stewards of public resources. So we thought, and I thought, that this is a time when we can, we grow at about, our headcount has grown at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks, and we're going to find 10% of employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think this is without taking risk to carrying out our critical missions. So this is something you do very carefully, thoughtfully, and you do it, again, respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions, and I think it's just us wanting to demonstrate to the public that we are actually good stewards of their resources. We're effectively wiping out 10 years of headcount growth with this. So, I mean, we wanted to show that, that we're good stewards.
How is progress on reducing headcount going so far? Are you on track to meet the goal?
We're just at the very beginning. As you know, we're doing a buyout program. We're gonna hit that goal. I think many organizations find that they can do this. You don't want to do it every year or anything, but you can do it at intervals, and you wind up not interfering with your ability to perform your jobs.
Chair Powell, Claire Jones from the Financial Times. As you're no doubt aware, the Senate Finance Committee has tabled its version of the reconciliation bill this week, and I was wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections for 2026 and beyond. Thank you.
Yeah, so we don't sit around and debate or really discuss. We take fiscal policy as fully exogenous, and so we actually really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, remember also we have a very, very large economy, and that the effects will be at the margin, I expect that they may already be in, but they will be in by the next meeting. We'll make an estimate, but it's not a major thing. It's nothing that we discuss. It may have been mentioned a couple of times, but as something that's coming in. But I think the outcome is, we don't know the outcome yet there, so hard to be real specific.
Neil.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics collection in the last few weeks, and worries that long-running problems around funding and response rates may be getting worse. How much is this concern on your radar? How much confidence do you have that the gauges you're watching to assess the economy are reliable right now?
Two things. One, the data we get right now, we can do our jobs. I'm not concerned that we can't do our jobs. That's not the point. The point really is that we are starting to see, layoffs and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and everyone, having really good data on the state of the economy at any given time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that, because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen. It's very hard to measure what's going on in the U.S. economy. If you read, there was a book called, it's really remarkable how many things you need to understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place to I would want to keep investing in that, for the good of the general public.
Victoria. Hi, Victoria Guida with Politico. So you're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure that this framework will actually be durable?
The framework document goes back to 2012, and it's the committee's document. It's not like we're going to invent a brand new way to do things. It's been an evolving document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So, yeah, it isn't really tied to any particular chair. And we used to renew it every year. Now we do it every 5 years. So, but I don't think I've never heard anyone raise this issue that, a new chair might want to come in and go in a completely different direction. I really don't think that's right. But that's not going to be up to me to decide.
Is that affecting at all who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation in recent reports, but that trend is starting to reverse given the crisis in the Middle East. How are you thinking about how the Israel-Iran conflict will impact the economy, especially inflation, and what lessons were learned during the 2022 period when another conflict, the Russia-Ukraine war, sent oil and gas prices skyrocketing?
So, of course, we're watching, like everybody else is, what's going on. I really don't have any comment on that. Possible that we'll see higher energy prices. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but it tends to come down. Those things don't generally tend to have lasting effects on inflation, although, of course, in the 1970s, they famously did, because you had a series of very, very large shocks. But we haven't seen anything like that now. The U.S. economy is far less dependent on foreign oil than it was back in the 1970s. So, but there.
A quick follow-up. I've just got to ask you about artificial intelligence. Some technology executives have recently been warning that AI could wipe out a large chunk of entry-level jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about the threat that AI poses to employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements, including one today. I wouldn't, overread a couple of data points, because, AI should be creating jobs at the same time. It may be replacing, maybe doing both. Anyone who's done any work with AI will have been a little bit stunned at how capable it is. And it's just a different thing. So I think this is something that certainly has transformational potential. And probably we're in the very early stages of it. You know, they say what you're seeing now compared to what you'll see in 2 years is going to be very different and even more effective. So I think it's really hard to know. You know, of course, there are optimists who feel like it's going to make everybody much more productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum, you know, white collar, blue collar, and everything. So I just don't know. We don't have a house view on that, but this is going to be a very important question for some time.
Greg.
Thank you. Greg Rapp from MarketWatch. I was wondering if you could step back a little bit, Chair Powell. You know, there's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this profound change, you know, akin to the end of the Bretton Woods era in the 1970s. And don't you owe the American people, like, some sort of, like, explanation for what we're going through? I mean, I noticed earlier this month when you talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to, like, change how the dollar, movements of the dollar was impacting the economy. Are we going through something like that now? That, you know, are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's certainly a time of real change. You know, from a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. I mean, but and it doesn't change our objectives or what we need to do. And you know, these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. You know, will it be, there have been many, many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. You know, AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know, though. So, but you're right. But honestly, our focus is a much more practical one, and that is how do we keep inflation low and employment high in the near term. That's really what we're about.
Mark Hamrick.
Hello, Chairman Powell. Mark Hamrick with Bankrate. What is the view about the growing amount of slack in the job market, including the softening in payrolls, the forecast of a modest rise in the unemployment rate, and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack, really. I mean, at the margin, remember, you're at 4.2% unemployment. That was, for many, many years, that was an extremely low level. It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, you know, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You know, you're right that the level of job creation has come down, but so has the supply of workers, the change in the supply, the new supply. So you've seen the unemployment rate remain pretty stable at 4.2. It's been as high as 4.3, but you know, those are good numbers. So it's a pretty good labor market. There's a more concerning thing is there are not a lot of layoffs, but there are not a lot of job creation. The number, if you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very, very carefully, because if there were to be significant layoffs and the job finding rate were to remain this low, you would have an increase in unemployment fairly quickly. But that hasn't happened. It really hasn't happened. the U.S. economy has defied all kinds of forecasts for it to weaken, really over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Go to Jean for the last question. Hi, Chair Powell. Jean Young with MNI Market News. There's been a lot of talk about cuts. I wanted to ask you, why do you think there are no forecasts for rates to rise or even to stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event?
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
This is The Fed Decides on Bloomberg Television and Radio. That was Fed Chair Jerome Powell at the press conference following the central bank's decision to keep rates unchanged. What would you write down? I don't know. What would you write down? What about those dots? This is a Fed that sees a lot more certainty ahead, but not yet enough to make any moves. While Powell said that peak uncertainty happened in April, and we are getting some clarity, there's still a lot to learn until the data becomes clear. They're on hold and are in a good place. Take a listen.
We feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking.
Jerome Powell also asked about the situation in the White House, dismissing questions around the future for him on the Federal Reserve.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Is a retracement of some of the earlier moves. We are seeing bond yields actually climb back to basically where they were and then some from before the press conference. Tom, it seemed like this was a Fed chair saying that we are past peak uncertainty, but we probably will get more information later, so stop asking.
It's true, the press conference, looking at the correlation of equities, bonds, currencies, commodities, it was sort of up and downy and up and downy. And I didn't get any real conviction out of it. The one tone I saw from him that I hear in some conversations is, what if we're underestimating the power of this American economy? There's a gloomy call. The GDP numbers come down. Inflation's up. Woe is me. But, and that but was just there for a bit where he said, you know what? It is a resilient economy.
You have said the phrase that I think about all the time, which is that companies adapt and adjust. And we hear that from so many companies that are doubling down on some of their forecasts.
Particularly around tariffs.
Yes, exactly, because they have to look past that and they can handle some of these tariffs. What I thought was interesting was that this was a Fed chair that actually said if we were backward looking at the data, we probably would be cutting more quickly. But because of the tariffs and the forward expectation for more inflation, it does create a greater degree of uncertainty, which is the reason why we still are happy to stand tight.
You don't see this, folks, but Lisa, during the press conference, she's got one of those little clicker things like in a movie theater, and every time they say uncertainty, you're moving your thumb around. And there was
and you're drinking.
150, well, it's surveillance beverage time. The issue here, Lisa, is the uncertainty issue was given to them. They didn't invent it. The president's comments today, outrageous comments. Do you see what he did to McKee? He slammed Michael McKee after those rude McKee-like questions. Tariffs, Bob Michael saying, do we know what tariffs will raise? We have no clue. what they will raise.
Which is the reason why they aren't necessarily going to make any big moves right now. Joining us now is Stephanie Roth of Wolfe Research. So pleased to say that you're here in studio. Stephanie, what was your take on a press conference where this Fed chair said that he had more certainty, but there'll be more later on?
I think the single most important line that he said is rates aren't very high. And when we're thinking about the next couple of months, what we're going to learn is more information about the reconciliation bill. So then they're going to incorporate that fully into the SEP, in which case that's going to look a lot more hawkish. So our base case is this year, they're not cutting. And the two cuts are going to eventually get sort of rolled away. At this point, they were very close on the edge of between 1 and 2, and they're probably going to eventually not end up cutting this year because the economy will be resilient and fine, and inflation's elevated.
On the core GDP equation, do you have any conviction at all in C, I, G, or NX? I mean, I don't know how you do it. I don't know how you come up with a real GDP statistic.
Yeah, we're looking for 1.4% GDP this year, so not that different from the Fed. But I think the important thing to focus on is for 2026, my forecasts are a lot higher than what the Fed has. I'm looking for something that's close to 2%, if not a bit above. Our forecast is that reconciliation bill could boost the economy by about 40 basis points. So that could be a notable acceleration versus where we are today. And that's what the market's going to start focusing on.
Lisa, help me. Is the reconciliation bill the big, beautiful thing?
It's one big, beautiful B.
Okay.
It's one 3B. Yes, we can.
Again, more uncertainty.
Well, that's the problem. And I really was struck by the idea that Fed Chair Powell brought to the fore, which is in response to Nick Timiraos of the Wall Street Journal's question, why aren't you looking at some of the weakening trend that we're seeing in inflation and say, you know what, we're actually quite restrictive. Why are you saying that this is actually an appropriate rate? And the Fed chair said, well, the reason why is because we have to look forward and we have to say this could potentially be inflationary and we don't know, and we will learn more in the next couple of months, but we're not sure how much we're going to learn. Is that good enough for you? Does that ring true to you that that is an appropriate stance for this Fed?
I think it's fair for them to be in wait and see. They know that the tariffs will be inflationary. He very much emphasized someone's going to be paying the cost, and eventually they're going to try to get it to the consumer. And I think that's the right way to think about it. It's going to eventually flow through some portion of it to the consumer. Our numbers are similar to the Fed's forecast that inflation should be close to 3% at the end of this year. And at this point, we don't know how much. It's hard to forecast these things, but I think the main takeaway is inflation will be elevated this year, but growth should probably hold up just fine.
Which is essentially what they were saying, albeit at a slower pace. Right now, we're so lucky to have Torsten Slok of Apollo joining us. Torsten, thank you so much for being here. What was your take on the press conference, on the Fed stance, and frankly, the market taking this based in stride, not saying that they're getting much new information here?
I think the banner hanging over this entire press conference and the forecast is stagflation. They revised down GDP growth to 1.4 and they revised up inflation to 3%. That's telling you that they are beginning to worry about the things that are hitting the U.S. economy, and it's no longer just trade and tariffs that's stagflationary. Oil prices are also stagflationary, meaning higher inflation, lower GDP growth. And restrictions on immigration is also stagflationary. We already saw in the last employment report upward pressure on wages, and of course that also really means downward pressure on employment if we're going to do, in particular, deportations at the current pace. So the conclusion is, it is not surprising that the Fed is beginning to worry about their mandate being torn in the opposite direction, because inflation higher says that you'd be hiking, GDP growth lower says that you'd be cutting. So that's why at the moment they stay put, and the conclusion therefore is that he didn't really give much other than say we will likely be cutting, and that's what's in their dot plot. But the conclusion is this is a very difficult situation for them when there's both, as he said, meaningful expectations of upward pressure on inflation and at the same time a revision down in GDP growth.
Torsten, he alluded to their data capture, which is perhaps showing a more resilient GDP, a better, stronger America. Steve Raschuta at Mizuho is heated about this, that we could see GDP better. Is that in any probability for you?
Well, I think that when it comes to a particular trade, forgive the picture here, but the pig is coming through the python. Someone needs to pay for the tax increase on imports. Tariffs have gone up, and if companies are not passing this on to consumers, let's say that inflation does not go up as much as we would have expected, then the conclusion is, well, then earnings will simply be going down more, because this tax increase means, of course, that you will begin to see some downward pressure on GDP and potentially some more downward pressure on earnings. So that's another way of saying we saw effective tariff rates go up from 3% in January to now 18%. 18% today, and that effect will still be playing out. And he said very clearly he does expect a meaningful increase in inflation over the coming months. So combining that with, he said, we could also see a cooling down in the labor market. It does mean that just maybe inflation will not go up so much, but the consequence of that will be, well, then we will instead see tariffs coming through, instead through lower GDP growth and a bigger hit to earnings.
And he expects to see some data on that front in the upcoming months. Right now, let's bring back in Bloomberg's Michael McKee. If you are just joining us, we did just conclude the Fed's press conference where, Mike, you put him on the spot there with the political question. I don't know that he loved answering it. We were all glad that you asked it. What was your takeaway from the press conference in terms of what you felt was the most new information that we gleaned?
Well, I think the takeaway is fairly obvious here, and I'm not sure that my economist friends all agree with me, but I think the line that you want to look at is how many times Jay Powell said nobody on the committee has a lot of conviction about these forecasts. In other words, this is all going to change, and we had to write down something, so we did. So don't take us seriously in terms of the number of rate cuts. Don't take us seriously in terms of the forecast. It's the best we can do at the moment, but we know this is all going to be different. So don't, I would translate that into don't invest on the idea that the Fed is going to be doing 2 rate cuts by the end of the year.
Michael McKee, thank you so much for being with us. And Stephanie, we were kind of laughing around the table when he said, we just kind of turned to each other and say, what did you write down? You know, I don't know. I'm kind of throwing a dart at the dartboard, but it does feel like they are trying to message something to markets. And do you think that this is saying, ultimately, we understand our dual mandate and we are going to respond potentially to a weaker jobs picture?
I think it's saying there are risks to both sides of our mandate. We don't know if it's going to be on the inflation end or the growth side. And at this point, we're in wait and see mode. I think the ultimate destination will be that the economy holds up okay. Inflation does pick up. I totally agree with Torsten's comments. If it doesn't pick up, that's almost a bad sign because that's going to come from company margins. But at the end of the day, we'll come through this okay, and then the focus will be on 2026 for markets, which is an economy that's just fine.
Your core ability is the math and the dynamics of our math. The toughest math is productivity. Is productivity still in play? Is there a total factor productivity right now that we underestimate?
Yeah, I think that's certainly the case, and hopefully it's the case, especially given that our labor supply is shrinking, so we kind of need that to some extent. And our base case is that the productivity should be fairly solid throughout the course of this year into next year. It is hard to estimate. But I do think AI is going to slowly have that impact over the course of the next couple of years.
With productivity gains, Torsten, and I'd love you to weigh in on this because you've been really good on this. We're not necessarily going to get recession. A lot of people say that's not their base case, but we are going to get a slowdown at a time of increasing inflation. People seem to think if there's a recession, that's really bad. If there's not a recession, that's really good. What is that breaking point where you have growth slowing enough that it becomes really terrible for companies in terms of where inflation is and growth just not keeping up?
The talk of war, Lisa, at the moment, namely, we do have a number of things that are weighing on growth, as we're talking about here, namely higher oil prices, higher tariffs. We now also have restrictions on immigration, meaning removing labor. All those things would argue for GDP growth slowing down, as the consensus expects over the coming quarters. But at the other end of the rope in this talk of war, we have definitely the productivity increases that we potentially could see. He did respond to the question around, will this be labor replacing or labor augmenting? And we still just really don't know the answer to that question. Yes, it is the case in the census surveys when businesses are asked, have you adopted AI in the last 2 weeks, that about 10% of companies and a rising share is saying, yes, we are now using today AI tools to improve our productivity. But the speed with which productivity gains, and to Tom's point, total factor productivity, namely how well labor and capital work together, the speed with which we'll see that in the data is probably going to take quite a bit longer. So I worry more about the cyclical downward pull on GDP growth, because I do think that over time we will see the AI gains, but it's just probably not going to come quick enough relative to some of the downward pull coming from the cyclical forces of tariffs, higher oil prices, and at the same time also the restrictions on immigrations we're seeing.
Given that backdrop, Torsten, do you think that based on what this Fed said, they are just moderately restrictive? Do you think they're more restrictive than that? Or do you think that this really is closer to neutral than many people think?
Well, that's why this discussion, Lisa, around, as we have all talked about for so many years now, our star and where are we relative to that. Note how he didn't bring that up today. This conversation about where are we relative to neutral has almost become a backseat issue because now there are some cyclical issues that are overwhelming the structural discussion around where neutral rates are. So, but I do think that the Fed's own framework and the New York Fed's estimates would certainly say that neutral is lower. And as he did hint a little bit at, that we are in slightly restrictive territory. But the issue still here is they are battling. The major issue is that, as he said, they expect to see meaningful upside pressure on inflation, and that makes sense. Not only headline inflation because of oil prices, but also because of tariffs, and again, because of the emerging pressure we're seeing on wages. So the short answer to your question is, I think that this discussion of restrictive or not restrictive is taking a little bit of a backseat because we now have some cyclical forces pushing inflation up over the coming months.
Torsten Slok of Apollo, thank you so much for being with us and for those comments. Joining us now is Subhadra Rajappa of SocGen. Just curious, Subhadra, what you make of this idea that rates are not very high, that policy is modestly restrictive, but not necessarily causing the restraint that many people would expect. Do you think that this was an appropriate Fed meeting?
You know, let's call a spade a spade. I must say I didn't get a lot of new information out of this meeting. I think Mike McKee summed it up. There's a lot of uncertainty. The first half of the year, the economy's been extraordinarily resilient. There's a chance that we get higher inflation in the second half. There's a chance that the growth could slow down as well. But that doesn't really give us a lot of information on exactly what they're going to do on the policy front. Yes, the dots are showing 2 cuts for this year, but there's a good chance that they don't cut at all this year, or they have to cut as early as the September meeting if the data deteriorates. So for me, the informational value was very little. I think that there's a lot of uncertainty, which was highlighted again and again during the press conference, and I think that they're going to wait till they have enough information to confirm a rate cut. So for me, this is status quo. The market pricing hasn't really changed. The bond market really hasn't reacted much. So we need more information.
Subhadra, is the information going to come in the yield curve? We had a really informed question come in about the vanilla 2-10 spread, or I'll let you pick the spread that matters. Are we going to go back to yield curve steepness as we saw many years ago?
Yeah, the 530s part of the yield curve has been steepening. The Fed, you know, the front end is pegged to policy, so the 2 years is kind of stuck between 3.75 and 4%. And the 530s part of the yield curve has the potential to steepen. But again, a lot depends on what we get out of that big, beautiful bill. If it is actually more deficit inducing than what we are anticipating, then there's a potential that we could see a rebuild in term premia. But you know, those negotiations are still ongoing, and really it's the fiscal side that determines what the shape of the yield curve is, not so much how much the Fed is going to cut, because cuts between now and the middle of next year are quite modest. We're looking at maybe 75 to 100 basis points of cuts at the most.
Stephanie, where are you on the fiscal space? I mean, I think this is, Bob Michael brought it up and others before, but this is a huge mystery that's unspoken. We don't have a clue where our debt and deficit is doing. We have no clue.
We have one clue, and that's not good. So it's not heading in a very good direction. We all know that. But I think the bond market has largely internalized it. So what we're talking with clients about is, at this point, once they actually pass the reconciliation bill, base case is there's not a big sort of bond market riot as a result. It's a risk. But I think maybe over the summer, the bigger news is going to be the inflation prints, which could be a headwind for equities, and the employment data, which might seasonally surprise, plus the downward sort of projection on immigration. That could be sort of the bigger news over the summer. I don't anticipate it's going to be a surprise on the deficit front, because we largely know what's going to be in the bill, and they're going to kind of negotiate from here. But I don't expect it to be a major surprise at this point.
All I can say is this feels a little bit, I keep saying this, like when you put too many commands into a computer and it says, I'm buffering, and it just kind of, we have no idea what the headlines are going to be in a couple of months. Subhadra Rajappa of SocGen, thank you so much for joining us and for really being honest, which is, we didn't really learn all that much. Joining us now is Jeff Rosenberg of BlackRock. The one thing that did stand out was this idea that this is not a Fed that feels urgency to cut rates, even though you have a president basically jawboning them, and you have people in the market saying we are seeing cracks. What was your take, Jeff, from this meeting?
Yeah, you know, there's something we're not talking about, which could have been, you know, the headline, which is this is the first statement of economic projections post the tariff uncertainty. And mostly he got away with not really talking about that. Torsten just highlighted it a second ago. It's stagflationary. I don't think anybody raised that once that word ever came up. So we really kind of pivoted away from what might have been kind of an interesting storyline to the storyline that we're hearing, which is watching paint dry. And I think that's an excellent outcome for the Fed. That's what they want us to talk about, paint drying, and not the Fed opining on the impact of policy. They really ended up pivoting the conversation towards a repeat of nothing to see here, and we don't know, and it's much more about the uncertainty than it is about the forecast that we just wrote down. I think that's kind of an interesting takeaway. I think, as your previous guest just highlighted, that is the takeaway that the markets are having from today. And when you listen to the opening press conference, as I do, I pull up last month's press conference and you can follow along. It's almost verbatim, with the exception of the insertion of the SEP changes, which he downplayed, and maybe the introduction of waiting for more information as opposed to waiting for the uncertainty to clear. This is very much a repeat of what we got last month.
Jeff Rosenberg, when you look at what the president said in the lawn today, we're benumbed by presidential criticism of Jerome Powell. Is this a Fed, as we're all half asleep in a snooze fest, representing the haves in the financial industry? Or are they actually representing a good part of America that does not agree with this dialogue and says they're flat on their backs right now?
There are a lot of questions in there, Tom, for me to avoid answering. So I'm going to do my best imitation of Powell to pivot to answering it the way he answered Mike McKee's question, and basically restating what he wanted to answer, which is they believe they're following the right path. They are answering the right questions. They're pursuing the policy for the benefit of the economy overall that benefits the most of Americans.
Okay.
And I think kind of he answered that question the way, or I'm answering that question the way Powell answered McKee's question.
Absolutely gorgeous, Jeff. Very well done. I will answer this. I will ask it.
Oh, it's compliance from BlackRock.
Yeah, you're doing great. So, Jeff, you passed that compliance test. I guess another way to ask the question a little bit more directly is, to your point, this was not a Fed who was challenged, a Fed chair who was challenged on the stagflation point, who said, when your dual mandate really comes called into question, would you tolerate higher inflation for longer in order to protect a labor market that has left a lot of people, to Tom's point, out, and that has left people behind in a participation rate that is lower than we previously had? Were you surprised that that wasn't asked, that this is a Fed that really hasn't had to address that thorny question?
Yeah, and it's going to be the more interesting conversation. I feel like this is the period where we're kind of between two environments, where the kind of pre-tariff environment, and he got asked the question, hey, back in December you were cutting rates. Why aren't you cutting rates now, given that inflation is even lower than it was in December? And he very kind of clearly laid out, there's been a change in information, and the change in information is the impact, the uncertainty of much higher than expected tariff policy. What we're waiting for is it to show up in the data. Now, when he got pushed back from one of the questions of, well, are you data dependent? It sounds like you're forecast dependent. Why are you now saying you're forecast dependent when you always tell us you're data dependent? And he gave the answer on, well, we have to be forward looking, not necessarily forecast dependent. And so we're going to get to this period where the inflation does show up in the data. And now I think the question is, and everybody on this show so far has been calling it the inflation increase. Let's be careful here. Powell is not calling the rise in inflation an inflation increase. He's calling it a temporary or one-time pass-through with the expectation that it goes back down. That's not inflation. That's a one-time pass-through. The difficulty we're going to have is, how do you know, while you're seeing the increase in the prices passing through, that it's one time? And how long are you going to be willing to wait to figure that out? That's going to be the more interesting challenge. challenge. And then, Lisa, to your question, it's going to press on the dual mandate, because if they're seeing the increase in inflation at the same time as we're seeing, which we're starting to see the very early signs of right now, the slowdown in the labor markets, if that accelerates, now you're going to have this tension between the two policy goals.
Yeah.
They kind of address it a little bit with like the distance between the two goals and the time expected to meet those two goals. But they're going to have a lot more questions to answer about how they're balancing those two trade-offs.
Jeff Rosenberg of BlackRock, thank you so much, as always, for being with us. Stephanie Roth of Wolfe Research still with us, and I'm curious for the final word, how you see this dual mandate as playing out. And you had a great question for the Fed chair that was not asked, especially at a time of such confusing, frankly, data.
Yeah, I mean, I think the question we want to know over the summer is when we start to see payroll gains slow down, potentially below 100,000, with the unemployment rate remaining largely steady, how does the Fed react to that? And our base case is at this point, and certainly after today, there seem to be very much in wait-and-see mode, and they're probably going to do nothing, which then means that 2 cuts are going to have to fade to no cuts this year.
Is a 4.2% unemployment rate now the same as a 4.2% unemployment rate 30 years ago? I'm not sure it is. There's a lot of noise in there. I'm not sure it is.
Yeah, that's totally fair. And of course, they're going to think about the directionality here, and they're expecting it to go to 4.5. I'm worried it goes down to closer to 4% with the impact of immigration.
Turns around and goes the other way.
It might go the other way, and I think that's the thing that is going to be a really interesting dynamic for the Fed to potentially watch here. This is a real tightening of the labor market. You have the cross currents with the slowing economy, and then the real tightening of labor supply. We had 530,000 people from Cuba, Haiti, Nicaragua, Venezuela. Their visas are effectively expired overnight.
Stephanie Roth of Wolfe Research, looking forward to continuing this conversation on Friday. Meanwhile, coming up on The Close, former Fed Governor Betsy Duke, and honestly, I think that's the best question, this idea of is a 4.2% unemployment rate the same today as it was 20 years ago at a time of participation rate very much changing. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:46 on Wall Street. We do check markets all day long here at Bloomberg. Fed Wednesday, we've got stocks higher for now. Stocks have been wavering after Fed Chair Jay Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. The S&P right now higher by 6, 59.89. That is a gain of 0.1%. The big question, will we close above or below 6,000 with 14 minutes to go? We've got the Dow up 7, little changed right now. NASDAQ up 57, up by 0.3%. 10-year 4.38%, but the 2-year 3.93%. Gold down $18 the ounce. That is a drop of 0.6%, now at 33.69. West Texas Intermediate crude just about flat on the day, holding close to 75 a barrel, 74.87, up now by 3 cents. So Fed Chair Jay Powell warning that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's job. Here's Jay Powell at the news conference.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment.
Fed Chair Jay Powell in remarks broadcast live on Bloomberg Radio. Oil higher on concerns over flows through the Middle East. Oil stocks right now, they are trading lower. We got ExxonMobil down 0.4%. BP down 1.4%. The ADR, Chevron lower by 0.3%. The National Transportation Safety Board has issued an urgent recommendation calling on the FAA to ensure flight crews are alerted to an issue on Boeing 737 MAX aircraft that can lead to smoke in the cockpit or cabin. Boeing shares down by more than 1%. A jury has found Karen Reed not guilty of second-degree murder in the death of her Boston police officer boyfriend in a polarizing and highly watched case. The same jury did find her guilty of a lesser charge of drunken driving. Recapping, S&P up 8, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. It's a Fed meeting. It's a Fed Wednesday. It is the fourth FOMC decision of the year and presser. And I don't know, I feel like, Tim, going into it, there were people who thought this was going to be a snoozer. There were some who thought it was historic. I don't know. Markets are kind of where they were before the Fed decision to some extent. I think a little bit more pressure on the equity side.
Exactly. And we actually did see equities dip into the red. We just heard the latest from Charlie Pell at 0.3% higher on the NASDAQ composite, 0.1% higher on the S&P 500. We're flat on the Dow. Carol, you said people had different expectations going into the meeting. President Trump wanted to see 2.5% cuts to the rate.
Yeah, not happening.
250
folks.
basis points.
Ain't happening here.
It didn't happen. That did not happen.
It's not even in the dot plot.
No.
What was interesting is that in the dot plot, you are still seeing a call for 2 more rate cuts this year. But we're talking about 50 basis points, not 200. Having said that, quick check on where we are in yields. 10-year note with the yield of 438. I'm looking at the 2-year yield with the yield of 3.93. So a little bit of movement. Initially, we did see right after the decision. But like as we said, we've kind of worked off some of those earlier levels. So let's just remind everybody, here's what happened. Fed officials, you heard it from Charlie, leaving interest rates unchanged, continuing to pencil in 2 rate cuts in 2025, saying uncertainty over the economic outlook was still high but had diminished, and that the Fed can be kind of patient, it seems like, as it awaits more information. Here's Fed Chair Jay Powell.
We feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking.
All right, that, of course, was Fed Chair Jay Powell earlier at the FOMC press conference. Let's get to it. Let's get more on the investment landscape, also the rate landscape, and how the Fed decision and commentary may affect all of it. Or are we all going to kind of just wait for the next Fed meeting? Ross Mayfield is with us. He's investment strategist at Baird Private Wealth Management from Louisville, Kentucky. Also with us, Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey out there in New Jersey. Hey, Ira, I want to kick it off with you. Some went into this meeting truly. I was listening to Bloomberg Television's coverage, really TV and radio's coverage of the Fed decision. Some said it was going to be boring. Some expected not much to happen. Others said it's going to be...
It's never boring for us.
Right? Well, sometimes it is. Okay. And then others said it was going to be historic because all that is coming at the Fed right now. Why was there such a gap going into this meeting?
Yeah, I think there's some people who think that, firstly, that the Federal Reserve does have to cut interest rates because they see cracks in certain parts of the economy. And then there's other people who are fearful of tariffs and think that, inflation might increase. And you even heard that the last question, which was about how come no one was projecting rate increases, even though there were a number of members who were thinking the Fed's going to be on hold for the entire year and then cut a bit next year. This was as I expected. And what's always interesting about this, we have to, as market professionals, kind of parse every single thing coming out of the Federal Reserve, is the reaction function, right? What is the Fed's reaction function? So we heard a number of if-then statements from Chair Powell. And, those if-and statements could mean, give us at least a little bit of an indication of under what circumstances they'll make any kind of policy adjustments.
Hey, Ross, come on in here and just give us your general overview of how the meeting went, your expectations, were they met, were they not met? What was your big takeaway?
Yeah, I think they were largely met. I mean, I don't know anyone who expected much action at this meeting or a resolution of all the uncertainty that they've been discussing at this meeting, given that we're still in this kind of tariff pause. We have the potential for oil prices to swing and impact headline inflation. So I didn't expect much. I'm on the side of the camp that thinks the Fed should be a little more aggressive in cutting. I think the cracks in the labor market are starting to really accumulate, and to hear Fed Chair Powell say that the labor market is, I forget the exact language, but on solid footing.
Yeah, he wouldn't agree with you, I think, Ross, that the cracks are starting to appear. What data are you paying attention to that he's not?
And perhaps that headline, Microsoft planning thousands more job cuts, that we saw
Well,
earlier today.
Certainly the anecdotal evidence of layoffs is rising. But if you look at something like WARN notices or initial claims and continued claims, I mean, we're sitting at multi-year highs for a lot of those levels. If you look at some of the employment statistics about people fresh into the job force out of college, the unemployment rate there is at not record highs by any means, but is significantly higher than the overall unemployment rate. So I think it's a labor market where we have tight supply, and especially in this, given the immigration policy, but it is not a robust labor market, and we are well north of a neutral policy. I think that getting to neutral should be more of a goal for the Fed, who doesn't seem to want to get there until the end of 2026 if you look at the SEP.
All right, come on in, Ira.
Yeah, so I just want to say I think that's part of this debate. Like, where is neutral? And there's the Fed will say that they're still have restrictive policy, but a lot of the other information that some of us, me included, have looked at suggests that actually they're probably pretty close to neutral. So unless there's a deceleration of the economy, the Fed probably doesn't have to adjust interest rates. Now, the question is, and to Ross's point, like, they can't wait until the economy is clearly really bad before they cut interest rates. But I do suspect that because of this overhang of inflation and the recent past episode that we just had, that the Fed will try to wait until almost the last minute. And then once it cuts, it'll cut faster. And I go back to the statement that Jay Powell made in May at the press conference, where he said, like, look, we know how to deal with a weak economy. We could just cut more aggressively and get down below the neutral rate to stimulate the economy. We don't want to have to go the other way and have to hike interest rates if inflation were to remain relatively high.
Hey, Ira, a couple more to you, and then we're going to bring Ross back in here. But I'm wondering about a couple of things here. One specifically is the question of AI and the labor force. The Fed chair was asked about that. Carol and I cannot stop talking about this.
No.
What did you make of the way that he answered this question about AI and the effect on the labor force?
It feels like there's a pig pile of all of a sudden people are waking up and saying, okay, there's going to be a lot of jobs lost because of AI.
Well, there's always disruptions. Whenever you have new technologies, there's always disruptions, and you wind up having, layoffs in some sectors, and then the new economy creates other jobs and new jobs. We've done that over centuries, since even before the Industrial Revolution. You've always seen, things replacing other things. I mean, we did it 30 years ago, right? When you think about the internet, and in 1995, very few firms had websites. Yet today, everyone does, right? And this is kind of an extension of that. So we created a whole new economy around the internet that now is creating more jobs, whereas robotics and other things like manufacturing, less people are needed to do the same amount of work and labor than was needed in 1970s.
So true, so true. Hey, Ross, just got about 25 seconds left here. Mike McKee saying nobody on the committee has any conviction on these forecasts, so don't take us seriously on the rate cuts. Things will change. That was kind of the message that Mike took away, and he says that maybe kind of means for the Bloomberg audience, don't invest on this Fed decision. 15 seconds. Do you agree?
Yeah, I don't think you can take much away from this Fed decision in terms of actionable investment items. I think you need to watch the long end of the curve, and for that, you need to watch things like the budget deficit and service sector inflation. So that's what I'm watching, and I think you go long duration here.
All right. Great duo. Ross Mayfield, investment strategist at Baird Private Wealth Management. Our own Ira Jersey, chief U.S. interest rate strategist at Bloomberg Intelligence. Do not go anywhere. Counting you down to the close. Over to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you through to the closing bell with a global simulcast that starts right now. Carol Massar and Tim Stenovich join us in the radio booth. Scarlet Fu has the day off as we welcome our audiences across all of our Bloomberg platforms. including our partnership with YouTube, Carol, on what might be the least consequential Fed day that we've had in quite some time.
Kind of interesting because I was listening to the commentary earlier on our own Fed special, and there was, I think, one individual who said this could be historic because there's so much coming at the Fed. Another one said this is going to be a snoozer. I do feel like the messaging we got from Fed Chair Jay Powell is, hey, folks, we'll know more, and especially when it comes to tariffs later in the summer, and then we'll have more information to maybe really figure out monetary policy from there.
Yeah, lost track of how many times the Fed chair said, basically, we're in a really good position right now. We like where we are. We're in a good position. We can move if we need to. That's what I heard.
Yeah, and that really raises the question, what's going to be the trigger point, right? When are we going to see any sort of tariff impact actually show up in the data, and what are they going to be weighing at the end of the day? Is it going to be growth, or is it going to be inflation, and which one blinks first?
Interesting, though. I mean, they did point out during the press conference that most of the committee members do see a meaningful increase in inflation as we get deeper into the year. But again, to your point, Alex, it's kind of anyone's guess right now as to whether that feed-through from the tariffs will actually materialize.
Also, one-off is a one-off, right? Again,
Yeah.
that's transitory, and we saw the predicament the Fed got into itself with that. So is it a mistake, or is that sound policy?
Torsten Slok was just on the Fed special. He was concerned because he's talking about that stagflationary scenario once again here, and whether that means that the Fed's hands will be tied, and maybe we don't get much of any action at all. Right now, the market, well, not doing much of any action at all today here, as most of the markets end the day pretty much around the flat line. The Dow Jones Industrial Average losing roughly about 40 points. It takes a while for these numbers to settle, but no matter what happens, it's going to be a decline of less than 0.1% on the day. The S&P 500 only down by 2 points, so we'll call it unchanged on the day. 59.80 and change is your closing number. The Nasdaq higher by about 0.1% on the day, and the Russell 2000 higher by 0.5%.
All right, quick check on the S&P 500. Almost an even split, guys. 236 names to the upside. Alex, we've got 261 names losing ground today, 6 unchanged.
Yeah, you can kind of see that in the IMAP function as well. It's sort of a mishmash of what's up and what's down, but not a lot of movement either way. Energy is the worst performing sector, right? Down 0.6%. Tech, the best performing sector, but only up by about 0.4%. So super calm movement all across the board.
Yeah, I love mishmash.
Mishmash. It's an official technical term. Did you not know that?
I know it now.
It's mishmash go on the terminal. All right, let's get to some of the individual gainers. Coin, number one gainer in the S&P 500, folks. Up.
Whoa.
I know.
Yeah.
I love it when I can surprise you.
I know. I was paying so close attention to Jay Powell. I'm missing all the real action here.
All right. Well, there was action in Coinbase today, up 16% in today's session. Billionaire Michael Novogratz coming out saying that stablecoin legislation will push traditional financiers toward cryptocurrencies. You also had Coinbase introducing Coinbase Payments, a stablecoin payment stack for commerce platforms. And you might remember yesterday, JP Morgan came out saying it's launching a pilot for a token called JPMD, which represents dollar deposits. It will transfer a fixed amount to Coinbase Global on the public blockchain base. This stock is up about 17% year to date. So I just feel like a lot of momentum around that puppy. Marvell Technology, number one gainer in the NASDAQ 100, folks, up about 7% in today's session. Analysts positive on the chip maker following an event focused on AI. At that event, Marvell raised its overall data center total addressable market to $94 billion by 2028, up from $75 billion. This stock, though, is off more than 30% year to date. And one more for you, GoGo.
GoGo.
It's not just a dance from the 60s. Up about 15% in today's session. You know, Wi-Fi while we're flying.
Yeah. Has that improved?
That's a great point. Every time I fly, I can never get Wi-Fi anymore. I think it's me.
No,
But
I feel like it definitely has improved.
Oh, wow.
You don't think?
I don't know.
Depends on the airline.
Wow.
That
It
shall
does.
remain nameless.
Yeah, we're gonna be good today. Shares soaring though on heavy volume. The company coming out saying it successfully completed its first end-to-end call using its 5G technology. William Blair coming out saying those developments represent a significant milestone for GoGo's 5G network. Stock is up 80% year to date, 30% of the float, though, shorted. So investors kind of watching very closely.
Okay, well, the small moves in the indexes really masked some big moves taking place under the surface. I want to start with Wolfspeed, down 30% today. The chip maker shares plummeting. Bloomberg did report today that it will be taken over by creditors, including Apollo Global Management, under a proposal that would put it into bankruptcy to slash billions of dollars in debt. Shareholders could, though, actually recover as much as 5% in this proposed scenario. This is as opposed to what typically happens during a situation such as this, where they are wiped out completely in a bankruptcy. Uber shares also on the move lower today, and this as a result of some Waymo news.
I'm so excited.
Well, don't get too excited
I'm so
because
excited.
just because Waymos will start to be tested in New York with a human driver, this is what drove shares of Uber lower today, doesn't necessarily mean that we're going to be seeing these all over and going to be able to take them anytime soon.
Wait, so Carol's into this?
Oh my
Carol loves it. I convinced her
Oh my God.
to get into one of these things. She did it. Where were you in Arizona?
I did it in
Carol?
Arizona first. It was like evening to the airport, closing my eyes. I'm totally comfortable. I've done several since. Oh, Alex, it's kind of like
Alex,
getting-
I think you're the only one here who hasn't done this.
It almost feels like you get into a spa. There's like this really easy music. The car is immaculate. There's nobody talking to you.
My face is like,
you're
is
one
like
of those people.
Yeah, you
struck
know-
dumb right now.
You know how Carol feels when, somebody talks to her next to her on the airplane, right?
True story.
No, but
Yeah,
you
good
get
point.
you get into the car and they're like, "Hi, Carol." And you're like, "Hi." Okay, it's pretty cool. Anyway,
All right, Carol
moving
obviously
along.
not concerned about the, robot overlords
Right.
taking over.
So this
anytime
is in New York?
Yeah, this is in New York.
Oh,
This is
okay.
where they're going to be testing it out, but
Yeah.
only with a human driver behind the wheel. So with the
And
human
I
driver.
assume what, like in Midtown or where is this
I
going?
don't know. We'll see.
I don't know. It's a good
I think there
question.
are a
It's
lot
gonna
of
be tough.
challenges
Yeah.
to this service happening, like it happens in San Francisco, just due to the congestion in New York, and there aren't necessarily places to pull over, legal places to
I
pull over.
hate
Like,
to break it to San Francisco. You ain't got nothing on New York.
yeah, when it comes to congestion, it's like
Driving in
easy,
New York is
easy
skill set.
peasy there. All right, Waymo shares, or excuse me, Uber shares down 1.6% today. Let's move on to some payments companies. MasterCard fell by 5.4%, but Visa is what I want to highlight, down 4.9%. Both of these companies fell over worries about the impact of stablecoins on credit card issuers. Remember, we saw this on Friday after that Wall Street Journal report that said that Amazon and Walmart were interested in stablecoins. We did hear David Sachs today telling Bloomberg TV that stablecoin legislation would cause the asset class to grow and create demand for the U.S. dollar.
I have an honorable mention. I'm going to pull a Romaine on you. Walmart, now in its longest losing streak since 2004.
Wow.
Take a moment. I mean, to be fair, it was on a huge winning streak, so take that with a grain of salt. Bond market, look at that. Nothing. Absolutely no movement there. You're looking at the 2-year below that 4% level. You're looking at the 10-year around 4.38%. There was a breaking headline about a few minutes ago saying that foreign treasuries holdings held near a record high in April. That was quite interesting. They dipped to about $36 billion to $9 trillion, but yet foreign holdings are still sticky for treasuries. So that was, of course, a big risk and a big worry for the long end of the market. So far, so good.
Yeah, so far so good because at least for right now, where else are you going to go, right? We should also point out another headline on money market still holding at that 7 trillion level here. And it gets to a big question as to sort of what the next catalyst is for this market. With the Fed doing nothing, we're probably not going to get anything out of them until we get to the fall. I know we have an earnings season coming up, but this really puts the eyes back on geopolitics, back on the situation in the Middle East, and of course, back in the situation in Congress with regards to that budget bill.
Yeah, absolutely. Check. I think you hit all of them. I was just looking again at JP Morgan when they report earnings, and it's July 15th. So I feel like that's going to be a big one in terms of what kind of outlook.
Yeah.
It's not that far away, right?
Yeah.
But I do think
my
the next.
birthday's shortly after that.
Is it? When's your birthday?
Yeah, so just mark it.
What kind of cake do you like so that we forget to
He's
get
not
you
saying.
one?
I'm healthy. No problem.
I'm just kidding.
Just carrots and hummus.
Yep, that's my lunch. You're doing gummy bears. A gummy bear cake. That's what's coming.
Thank God for the food court.
Has anyone
man.
thought of that?
We're also going to hear from Powell next week. He's testifying, so maybe we'll hear more there. But given what we heard today, I'm not optimistic that we'll get any more details. I'm still waiting. I guess what I'm curious about is where he's seeing strength in the labor market. I guess it has to do with the unemployment rate and what we're seeing with non-farm payrolls. He was asked a lot of questions about the labor market with specifics to the ICE raids that I thought were really interesting in immigration, but he said it's not, Fed policy to comment on these things.
Yeah.
To be fair, there is a gummy bear cake, but the gummy bears are on the outside of the cake.
See, I'm trying to.
Okay, how did you get them on
trying
the
to keep us
inside
on
of the cake?
task here.
Well, you
Come
can do a
on.
hole in it and then
This
put
is
the gummy bears in it.
this is the technological
I can make it for
innovation
you.
we really need.
I
You're
don't think
talking
this is
about
what our
David
producer meant.
Sachs and
Yeah.
Coinbase and Circle and all that. Come on, man, gummy bear cakes.
I can
that
make
would
this
move.
for you.
That
I
would
can
move.
totally make this for you.
No.
Would bring peace to the world.
That just seems so wrong.
You better get those while you can before all the dyes are not
That
allowed
is right.
anymore.
I forgot, yeah.
You heard there are a couple
RFK
other
trying to ruin our
companies.
fun.
Again,
Just
bringing
can't
this
drink
back to
Kool-Aid
news.
anymore or anything.
A couple
Fun
large
Dip.
companies
Remember
out
Fun Dip?
this week saying they're not going to be using these dyes anymore at the end
Tim
of next
doesn't
year.
remember.
This alone
too young.
says it was not an important Fed meeting.
Right. Yeah, this conversation says it all. Thank you.
Oh, wait. We're supposed to be talking about the Fed?
Exactly,
All right.
exactly. All right, guys.
All right,
that's
we got to go, Carol.
We do. I'm trying.
Sure thing.
All right, that's a wrap. Across platform, radio, TV, YouTube, Bloomberg Originals. Folks, Romaine and Alex continuing out there on television, and Tim and I right here on Bloomberg Business Week Daily. We'll see you again, same time. Not really same place tomorrow, but on Friday we will see you. All right, take care, everybody.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That's Carol Massar. I'm Tim Stenovec. As Carol mentioned, as Romaine was talking about, the catalyst for really what's on our radar really has to go back to what's happening globally right now, specifically with regard to Iran and Israel. The president will be heading back to the Situation Room this afternoon, set to happen any minute now. Tensions between Israel and Iran will be his focus. He spoke with reporters this afternoon. He remained coy about whether the U.S. plans to join Israel's offensive aimed at destroying Iran's nuclear enrichment program. The president said he encouraged Prime Minister Benjamin Netanyahu in a call Tuesday to, quote, keep going with his offensive operations, adding that he gave the Israeli premier no indication that U.S. forces would participate in the attacks. The president also reacted to criticism from Tucker Carlson over the possibility of U.S. involvement in the region.
Very simple. If they think that it's okay for Iran to have a nuclear weapon, then they should oppose me, but nobody thinks it's okay. People that I don't want to fight either. I'm not looking to fight. But if it's a choice between fighting and them having a nuclear weapon, you have to do what you have to do. Maybe we won't have to fight. Don't forget, we haven't been fighting. We add a certain amount of genius to everything, but we haven't been fighting at all. Israel's done a very good job of that.
There you have the president earlier this afternoon. I want to go to Washington, D.C. now, and to Kate Sullivan. She's Bloomberg News White House correspondent. She joins us from our Washington, D.C. bureau. Kate, earlier in the day, the president said that nobody knows what he's going to do. Does our reporting indicate that he knows what he's going to do, or is it clear at this point that he's still deciding what the U.S. will do?
So he actually just spoke to reporters a few minutes ago in the Oval Office, and he said that he hasn't made up his mind yet. So he has not made that final decision, and he also added that he wants to wait until the last second to make that decision. So I think he's taken a lot of questions from reporters today as he weighs this very important decision. And I think what we keep hearing from him is that this is very much on the table. He's very serious about considering these strikes, but it seems to me like he's still kind of cracking that door open for negotiations and, still very open to the idea of Iran coming back to the table and trying to hash out this nuclear agreement that he's been trying to get for months now.
So if a hashed out nuclear agreement or negotiations is still on the table, take us through some other options that are still on the table. What should our audience understand about what the U.S. could actually do when it comes to this conflict?
Yeah, absolutely. So Trump has said, over and over again, he does not want Iran to have a nuclear weapon. And so I think right now the big question is, and what Israel is pressuring the United States to do, is to join their military offensive against and striking Iran's nuclear sites. So the United States has these very powerful bunker buster bombs that Israel does not have. And so Israel's been trying to get the United States to use those bombs to target these very deep underground Iranian nuclear facilities. It is interesting, though. This is bringing up a lot within the Republican Party because there are some major tensions within the Republican Party and within that, the farther right sort of MAGA group. Trump said over and over again on the campaign trail, a central part of his foreign policy vision was to keep the United States out of foreign conflicts, out of wars, not to start wars, and to actually do the opposite and pull the United States back, and was really painting a picture of a more isolationist foreign policy. And so I think we're seeing, with that very viral Tucker Carlson, Ted Cruz moment, just tensions are running really high because a lot of Trump's, most ardent supporters are not on the same page about this with him.
Having said that, President Trump, candidate Donald Trump, former President Donald Trump, very clear on the campaign trail about criticism of other leaders. And actually, even since he's come into the office for a second term, very critical of former President Biden, of President Zelensky, of others about wars that have come out. And so it seems to be very clear that he doesn't necessarily want to get the United States involved in a war, something that could be called a war. And again, we can get into the semantics of what exactly is a conflict, hostility versus war. Having said that, with that backdrop, can we assume that President Trump is going to be very careful about what support he ultimately provides and what he does in Iran specifically?
I think it's all honestly just a big question mark at this time. I think Trump is he's on the phone with foreign leaders. He's talking to his top national security officials. As you mentioned, he's heading into the Situation Room, actually probably right around now if he's not there already. And so it's a very delicate situation, and he's hearing a lot of conflicting things. I thought it was really interesting. He was asked about somebody in the Oval Office asked him, it doesn't seem like all of your supporters are really for this or on the same page about this, if the United States were to strike these Iranian nuclear facilities. And I thought it was so interesting. He said, no, my supporters are for me. And in a way, he's right. It's like ultimately they can, Steve Bannon was actually talking about this morning as well. He was saying, we've got the Matt Gaetz and the Marjorie Taylor Greene and the farther right members of the party saying, please do not get us involved in this because it's a slippery slope and it might start out as a strike or two, but then suddenly the United States might be really enmeshed in this foreign conflict, which is what they really do not want to happen. And Bannon said the same thing. He said, up until the last moment, we are going to be pushing that, but if the president decides to do that, MAGA will be fully behind him. But it was just interesting hearing him talk about no matter really what the decision is, that MAGA will support him.
I will say our most read story in the Bloomberg, I think in the past 60 minutes, is the President Trump's hints at using the U.S. military to help Israel destroy Iran's nuclear program have sparked a divide within his America First base, which is typically opposed to U.S. involvement in foreign wars. So just another little caveat to all of this.
Kate, that's exactly where I want to go with you, because you spent a lot of time with the president as a candidate at his rallies over the last few years. You've been to hundreds of these, literally more than 200 of these. You spent over 300 nights on the road in 28 different states covering the Trump campaign. How big of a theme was no new wars?
It was massive. It was a really, I'm so glad you brought that up. It really was a central part of his pitch to American voters. I mean, just this idea that, America first, that we're going to focus on domestic issues and that he's going to be more focused on egg prices and gasoline prices and cost of living and things of that nature, as opposed to, and making a promise to supporters, I'm going to lead with peace through strength is something that he said over and over again. And that his personal relationships with foreign leaders would keep the United States out of foreign conflicts, and that there would be no troops sent anywhere. And it was just, I think it was a big part of his pitch to the American people. And he criticized previous presidents and President Joe Biden heavily. And it was kind of definitely like a recurring theme on the campaign trail.
Yeah, it's kind of amazing. If you just kind of Google President Trump critical about various leaders allowing war, like so much stuff comes up. Hey, Kate, just real quickly, 30 seconds. We have a market holiday tomorrow for Juneteenth, and I'm just curious, what kind of clock is ticking on the president thinking he's got to do something, or do we not really know? And just quickly, if you could.
Yeah, absolutely. The short answer is we don't really know. I don't think that there is any kind of, 24-hour clock on this, or per se. I think he continues to, there's a possibility that these strikes happen, absolutely. There's also a possibility that he's using this as a pressure campaign tactic on Iran to get them to come to the table. And so in terms of a hard deadline, I don't think we've seen anything like that yet.
Great stuff. and you are up to date for those who are listening and watching us. Kate Sullivan, thank you. Bloomberg News White House correspondent joining us from our D.C. bureau. When we come back, foreign investment flows, an update on that.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg Fed Wednesday. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Just getting word that Fed Chair Jay Powell is scheduled to testify before the Senate Committee on Banking, Housing, and Urban Affairs. That'll be on June 25th. A rally in stocks fizzled after Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. Today we had the Dow, the S&P, NASDAQ ending the session mixed and little changed. S&P down 1 point, drop there of less than 0.1%, but below the psychological level of 6,000. The S&P at 59.80. Dow Industrials down 44 today, a drop there of of 0.1%. NASDAQ up 0.1%. 10-year 4.39%. The 2-year 3.94%. Gold down 0.7%. 33.66 the ounce. And West Texas Intermediate crude little changed, up 0.1%. 74.89 a barrel on WTI. Family members of 737 MAX crash victims are urging a federal judge to reject a proposed deal that would allow Boeing to avoid a criminal charge, arguing the company should stand trial for criminal conspiracy. Slide Insurance Holdings raised $408 million in an upsized IPO. First day of trading for Slide Insurance up today by 19.1%. And a jury has found Karen Reed not guilty of second-degree murder in the death of her Boston police officer boyfriend in a polarizing and highly watched case. Recapping, S&P lower little change, down by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Do appreciate it. The Israel-Iran conflict, the more than 3-year-old war between Russia and Ukraine, the U.S.-led tariff war, changing geopolitical relationships. Carol, these are all things that can and do affect global investment flows.
Yeah, and it's kind of interesting at a moment in time where we're rethinking whether or not the U.S. is uninvestable and also questioning the dominance of the U.S. dollar. We should point out, as Alex Steele mentioned in our TV simulcast, foreign treasury holdings holding near a record high in the month of April. So foreign investors...
So they're not selling
foreign
America?
investors... yeah, it sounds like it, at least not when it comes to treasuries,
Okay.
which is what we kind of keep watching so closely. All of this, tie it all up, and especially when it comes to foreign direct investment, it is the world of our next guest. And it's so great to have back with us in studio Michael Lowen, CEO of IDA Ireland. It's the foreign direct investment agency of the Irish government. Hello, how are you?
I'm good, Carol. Good to be back. And Tim.
There's a lot coming at everyone, and I'm not even quite sure to begin. Just give us a good macro overview as you think of the things that the G7 leaders are facing this week. The wars, the conflict, certainly top of mind. And, you know, we're having this interview in real time and things are going to continue to develop. But how do you see the environment right now? Is it continuing to be an uncertain one?
I think that's the word that you'd have to use, is uncertainty. And you know, when we last met, actually, in March of this year, I think we've gone through a lot in those intervening weeks, to be honest. Probably as much as I've seen in my career in foreign direct investment, a lot has happened in a very short space of time. And when you think about from the tariffs, in terms of what tariffs means, where they're going to be imposed, at what level, in what time frame, a lot of those questions still remain unanswered as we sit today. And I think from a European perspective, we are very clear that, you know, bringing negotiation, trying to get to a point of I suppose, consensus around what this looks like. It's so critically important for investment flows and indeed for the economic prosperity of the world, you know, whether it's the US or whether it's Europe or indeed whether it's Asia. So that's a real area of focus from a European perspective and indeed the Irish government perspective. And of course, you're correct. This is all against the backdrop then of some other conflicts across the world, and you know, we see that increasing. So, you know, we're very mindful of that in the context of trade flows and trade investments as well, because that brings another level of uncertainty into the equation. Yeah.
It's been pretty much exactly 3 months since we last saw you. You were here in New York right before you went to Washington with the Prime Minister to visit the White House.
That's correct.
You met with the president. You met with his team. How did the meeting go?
So you're correct. The last time I was here, I left and I went to DC with An Taoiseach, our Prime Minister. The meeting went very well, actually, and I think actually it was in reflecting on it, you'd say that, you know, the president was actually very gracious in terms of his engagement. Yes, there was forthright discussions, and you know, he talked about the challenges in terms of trade deficits in particular.
This was before all the tariffs were announced.
Yeah, this is before, but remember, this was all very, you know, it was all very live and active at that point, because we were talking about, this is the 15th, 16th of March, so it was all becoming very transparent or apparent as to what was going to come down the tracks. So I would say that meeting and engagement very much reflected the relationship, which is 100 years between Ireland and the US. And I think in any relationship, there can be points of let's call it discussion. And that was a discussion that we had, but I would think it was very respectful on both sides.
Michael, what changes have you guys seen in investment flows? What are you seeing from your vantage point?
Yeah, so what we're seeing today, actually, Carol, it's interesting. So I can sit here today, and actually in 2 weeks' time, I'll be sharing with our Minister, Peter Burke, our results for the first half of the year. And while I can't disclose them to you on air, well, I could, yeah, but I won't. But what I can say is this, is that we continue to see investment flows. In fact, it is a par with last year in terms of the first half of last year, which is maybe maybe surprising given the level of uncertainty that you see across the globe. But the reasons we see that is, and we're seeing across a number of different areas, we're seeing real investment in research and innovation continuing, and companies looking to double down on their investments in Ireland in innovation. We're also seeing a lot of investment as well in terms of new entrants into the Irish economy, which is really important. And that's because they're looking for global marketplace, stable locations which is trusted and proven, I believe, and that's what they're seeing in Ireland in terms of the future growth.
I know you can't reveal all, but I am curious. So on that, where there's new investments coming in, are there conversations you're having with entities, global companies, U.S. companies who say, we want to do more stuff with you guys because we don't necessarily want to be in the U.S. or other, give me an idea if there's anything that's a repercussion or the result of an action by the White House.
Yeah, so I don't think it's a scenario of we don't want to do it in location A, so we're doing location B. I actually think companies are looking to actually, how can we grow our business? Where can we grow that from? What markets do we want to serve? And where can we get the skills or the policies that support that? That's really what we're seeing. And what we do in Ireland is that, we make sure we bring stability and certainty to those areas of policy in terms of talent and talent availability, not just Irish talent, but international talent. These are the pieces that are setting, I believe, investors apart when they're looking at locations around the globe. Because I said previously, at the very core of FDI and of multinational companies, they look to international markets. They need international markets. They need international supply chains. They need international talent. That's what they need in order to be successful. And that success isn't just success in the country they're located in. It actually comes back to their entire supply chain. We're speaking to you on a day where we heard from the Fed chair, and there were a lot of questions about what the labor market looked like. The takeaway that I got from him, Carol, and I think you'd agree with this, is that he really likes where the labor market is right now, and that despite what anecdotes people hear and what people are saying, there are not cracks starting to appear. Things are looking pretty strong. Explain to us the labor market in Ireland right now in the context of these companies, especially tech companies, battling it out for top tech talent for AI. Yeah, and I think you're just to use the comment in terms of the Fed's comments this afternoon on the labour market. Actually, the Irish labour market is somewhat mirrors, I think, what the Fed has mentioned today. It's robust. We're almost at full employment. So there is actually, I think, for economies that are performing and have a strong underlying fundamentals, I think that's mirrored across many economies across the globe. And the key is in this context is you're correct. There is talent availability and is probably the key differentiator for success for whatever business you're in or whatever sector you're in. And that's why I believe that multinational companies they see talent as global. They don't see it as within a geography or within a region. They see it as global. And I think that's what we have to continue. And we're very, I suppose, attuned to the fact that not alone do we have to generate our own talent, but we have to be able to attract the best talent to Ireland, and we have to create the conditions in which they can prosper, which they can live, and which they can and enjoy life as well.
Well, I am also curious because there is a lot of pressure from this administration, the president specifically, for U.S.-based companies, U.S.-based multinationals to do more in the United States. Having said that, I think about a company like Microsoft, who has been in Ireland for 4 decades or so.
Correct.
I'm just curious, is any of that relationship that you folks have, and especially the investments that Microsoft has made and maybe continue to do, has any of that changed?
To be honest, it hasn't. And if you think about it, you're correct. Microsoft celebrated its 50th birthday, actually, since we last spoke. And 40 of those 50 years have been in Ireland. And when we celebrated Microsoft's 40th birthday in Ireland, they spoke about how important Ireland was to the Microsoft success. Not just Microsoft Ireland, but Microsoft, the corporation, because that's what it really is embedded. And when we look at companies like Microsoft and the many more companies that we have in Ireland, there are multi-decade investments. There are trusted long-term partnerships with IDA and with the Irish government. And that's what really brings that success back. And what we have to be conscious of as well is that we need to make sure that we actually we're meeting the future needs of industry as well. So that means people, it means infrastructure, and it means policy. And that's very much what we're focused on and what the Irish government are focused on.
We'll go back to my question about AI specifically. Carol mentioned there were some layoffs at Microsoft today. There are hundreds of thousands of people who work at Microsoft, and we know thousands. Is that the latest report, Carol?
Yeah, thousands of more job cuts, and,
So we
and a
don't know
lot of it
specifically.
salespeople, I think they were saying.
And it's about making sure that you have the workforce that these tech companies need. Jay Powell was asked the same question: what is going to be the effect of AI on the workforce?
Yes.
What is it in your view, and how do you make sure that it doesn't decimate a workforce like the CEO of Anthropic, Dario Amodei, said recently?
So I think you're correct. We need to be conscious of the fact that AI is going to be a technology, and is a technology that's going to revolutionize. In fact, we see it all in our day-to-day lives and our day-to-day work. What we're looking at from an IDA perspective is we have very much looked at where is the opportunity for AI to bring efficiency and bring productivity gains. But secondly then, how do we make sure that where there are risks, we are upskilling and reskilling that workforce for future and new technologies. And that's our real focus is. In our new strategy, just to say this, for the first time we have put a public target on upskilling and reskilling of the workforce. So 40,000 people we are committing to upscale and rescale. And that's actually not just to meet AI, but to meet all technological change that's coming.
Michael, just got about 30 seconds. I'm just curious about what's Ireland's relationship with China, and what do you think it is going forward, just quickly?
Yeah, so with China, our relationship has been the same, and the same with the European Union. I suppose it's de-risk but don't decouple. We see opportunity, but we also understand that we need to do that balance between de-risk and decoupling, and we will continue to do that.
Is China being more aggressive, though, in reaching out to a country like your own?
I can't say it is. I think we have offices in China. We have offices all across Asia. So I think it's no different today than it was this time 6 months ago.
Trying to just get an idea, right, as we look at geopolitics and new relationships being formed, whether or not, China is certainly, there's been reporting that as the U.S. backs off, China looking to kind of step in, but not necessarily anything different.
Not evident at this juncture. Yeah.
Be well, be well. We know you travel a lot, so stay safe. Michael Lowen, Chief Executive Officer of IDA Ireland, joining us here in our Bloomberg Interactive Brokers studio. When we come back, a light topic, nuclear diplomacy and the reality of Iran's nuclear strategy. That in Business Week Daily continues.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a mixed Fed Wednesday with the Dow, the S&P both lower, NASDAQ higher. This Bloomberg Business Flash brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of title fraud. That's HometitleLock.com/Bloomberg. A rally in stocks fizzled out after Fed Chair Jay Powell warned that tariff-driven economic uncertainty and inflation risk continue to complicate the central bank's bid to ease monetary policy in earnest. We had the S&P 500 index ending the day lower, little change, down today by 1 point. That was a drop of under 0.1%. The Dow was down 44, a drop there of 0.1%. NASDAQ eked out a gain of 0.1%. The 10-year 4.38% with a 2-year yielding 3.93%. Spot gold down $19 the ounce, down 0.6%, 33.68. And West Texas Intermediate crude oil today was higher. WTI up 0.3%, 75.09 a barrel on West Texas Intermediate crude. A jury has found Karen Reed not guilty of second-degree murder in the death of her Boston police officer boyfriend in a polarizing and highly watched case. The same jury found her guilty of a lesser charge of drunken driving. Recapping, S&P down a point, ending the day below 6,000 at 59.80. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, as Kate Sullivan told us earlier this hour, Bloomberg News White House correspondent, the president's latest meeting to discuss the conflict in the Middle East is ongoing right now. Earlier, the president remained coy about whether the U.S. plans to join Israel's offensive aimed at destroying Iran's nuclear enrichment program. What exactly is that nuclear enrichment program? What exactly is Iran's strategy? Is it for weapons or is it for energy? Is it even close to having a nuclear weapon? These are all questions that we talked about in preparation for this segment today. We've got a great voice on this. Heather Williams is the director of the Project on Nuclear Issues and a senior fellow in the Defense and Security Department at the Center for Strategic and International Studies. She's also an associate fellow with the Project on Managing the Atom in the Belfer Center for Science and International Affairs at the Harvard Kennedy School. She joins us this afternoon from Boston. It's good to have you with us, Heather. Thanks for taking the time. I think a place we want to start is just getting an understanding of exactly what the capabilities Iran has right now when it comes to nuclear energy and weapons. What do they have?
Yeah, well, thanks so much, Carol and Tim, for inviting me on. So before we talk about what they have right now, I want to just very quickly say what they had a week ago, because there's a big difference between then and now. A week ago, Iran had a nuclear enterprise involving 30 different facilities spread out across the country. It was enriching to 60% its uranium, which is well above the amount that you need for civilian purposes. It also had some ballistic missile capabilities. And so this was a really concerning program. And the day before the Israeli strikes, the International Atomic Energy Agency actually found that Iran was in breach of its non-proliferation obligations for the first time since 2005. So there was this really expansive program. Where that program stands now is a very different picture. One of the biggest enrichment facilities, Natanz, has essentially been destroyed. And that is partially because of the power being cut, the targeting of the structure itself. But there's one big piece of Iran's nuclear program that remains, and that is the Fordo enrichment facility, which is buried really deep underneath a mountain. And Israel has had a few strikes on Fordo, but that facility still remains. But for the most part, a lot of Iran's other nuclear facilities and capabilities have been significantly impacted by the Israeli strikes.
So how long does it take to kind of rebuild all of this, if that is ultimately Iran's plan?
Yeah, it's an unsatisfying answer. We don't know because it really depends on the extent of the damage, but it also really depends on what President Trump is going to decide probably in the next days or weeks, because that Fordo facility is going to be really crucial if Iran does want to rebuild or race to having a nuclear weapon. in the near future, because that's where a lot of the higher enrichment was happening. It's a place where Iran's stockpile could be transported to. And so if that facility endures and Iran continues to use it, in that case, some estimates had said that Iran was just weeks away from having a nuclear weapon. Now, if that facility is destroyed, that will probably set Iran back by a significant amount of time. But the answer to that question, we just don't know. But we probably will know a lot more in the next few days, assuming that President Trump makes a decision.
Do you think Fordo can be destroyed without using the GBU-57?
It would be really, really difficult. It would require sustained Israeli strikes using their own bunker-busting bombs, which are a lot smaller than the GBU-57. And even then, it's not clear that those sustained strikes would get the job done. Another option would be an Israeli sabotage mission, such as cutting the power to Fordo, or some sort of commando mission on the ground, such as getting folks into Fordo to blow it up from inside. That might be one option for probably having the higher likelihood of success of destroying Fordo. But for airstrikes, it's really hard for the Israelis to do this without U.S. support. I do think it's important to point out, though, that the U.S. strikes on Fordo, if they do come to fruition, this might not be a one-and-done mission. It would be difficult, I think, for the U.S. to be able to take out all of Fordo with one of these bombs. And the reason for that is Fordo is buried so deep. Also, we don't know a lot about the extent of the Fordo facility. There could be additional tunnels even further underground. Some suspect that there are facilities buried up to half a mile into that mountain. And so the GBU-57 is probably the best bet for airstrikes and taking out that facility, but it might require multiple strikes.
How do you feel, forgive me, and this is with all due respect, but there's been so much debate about, does Iran have weapons? Do they not have weapons? I feel like it's gone back and forth. So how do we trust the intel? Or how do you determine that you can trust the intel that you've got?
I love this question. It's such an important question because there is all this confusion about the intel right now, right? Tulsi Gabbard says one thing, the president says another thing, the CIA says one thing, Central Command says another thing. And I actually think this confusion is really understandable. And a big reason for that is how you define a nuclear weapon. And I promise I'm not going to get academic about this, but it is the difference between if Iran is pursuing weaponization technologies. So for example, triggering devices, if you want an implosion device, what do you do with all that highly enriched uranium? It's not just going to sit there. You have to figure out how to convert it into a nuclear weapon versus a nuclear weapons program, which requires the highly enriched uranium, a means of delivery, along with that weaponization technology. And so if we're talking about that weaponization technology, I think those in the intel community who said they don't see evidence of that, that seems to be pretty consistent. However, if you count a nuclear weapons program as enriching uranium well beyond civilian purposes, having secretive nuclear facilities, talking about wiping your neighbor off the face of the earth, then that also points towards a nuclear weapons program. And so I think that there's a lot less daylight on the intel than sometimes comes across. It does just require this kind of wonky, more nuanced understanding of what actually goes into making a nuclear weapon.
Heather, I have no idea if this is in your purview, but I mean, do you think that there is a world where Iran says, okay, I'm out. We don't need nuclear weapons, just quickly?
It's hard to envision that world under the current regime. They have staked a lot on this nuclear program. I don't see many face-saving off-ramps ahead for them. And they can make a pretty strong case and have international support for saying that they have the right to a civilian enrichment program. But at the same time, I don't know how the international community can ever trust them again not to pursue a nuclear weapon.
And so you do wonder, does the U.S. take the step of potentially using the GBU-57, which would be seen as a pretty strong move. And then in the long term, Iran still continues to build up its nuclear facilities for weapons.
Yeah, this is the massive bunker buster bomb that we've been referring to over the last couple of days that can only be delivered by the B-2 Spirit aircraft that the U.S. has.
Right? This is probably some of the conversations the president is currently having, perhaps. Heather Williams, thank you so much. This is what we were hoping to do for the Bloomberg audience, and you did it so well. Thank you, thank you. Director of the Project on Nuclear Issues and Senior Fellow for Defense and Security at the Center for Strategic and International Studies there in Boston. When we come back, some stocks on the move on what is a busy Wednesday again. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, folks, as Tim mentioned, little movements in the equity trade today, but that doesn't mean there weren't some stocks on the move. I'm Carol Massar, along with Tim Stenovec. Let's take a look at some stocks on the move on this Wednesday. Bloomberg News cross-asset reporter Denitsa Sikova in the house with us. We're going to start with ticker CRCL. We're talking about Circle.
We're talking about Circle. Obviously, one of the biggest IPOs we've seen in quite some time. The stock is up about 500% since the IPO. Just incredible.
How come we're not getting a piece of that?
It's too late, maybe.
It is too late.
Today, another 34%. Jeez. This time it's coming off legislation. The U.S. Senate passed stablecoin legislation setting up regulatory rules for cryptocurrencies pegged to dollar. So the rule is that dollar-pegged stablecoins have to hold dollar-for-dollar reserves in short-term treasuries, in short-term government debt. So there are some clear winners. Circle is up 34%. Coinbase was up about 16%, but if we look at MasterCard and Visa, they were actually down about 5%. So clearly big moves in the cryptocurrency industry. Coinbase is obviously moving because they have a revenue sharing agreement with Circle, but we had some report that larger multinational merchants are exploring ways to bypass traditional credit card fees. So very interesting story. I actually have no idea how this is going to
Okay,
work.
I understood if we could do it on blockchain, like, right? I just go and make my payments on blockchain, but do I need a stable coin, I guess, to do that? on
Listen, do the
blockchain?
people who are
hey,
pushing
crypto, Hey, crypto dude, you have a show.
I thought you were
every
going to call me
week.
Crypto Boy.
I do call you Crypto
So
Boy.
that's
I
good.
was trying to be respectful.
I got a promotion, I guess, because usually it's Crypto Boy coming from you. It's a
Crypto
$44 billion company now.
Yeah.
Incredible.
Up 34% today. You set up. When I heard you do this earlier today,
Yeah.
it was up 400%.
Yes.
Since the IPO.
And now it's
Now it's
540.
500%.
What's
That's
up with that?
crazy. Like every few hours, it's another 100%.
I'm getting flashbacks to 2021, Carol.
All right,
What's
let's go
happening?
to something I can maybe I can compute more clearly. Marvell Technology, it also rallied today.
Yeah, it's up 7%. That's much needed relief because unlike Circo, the company is actually down 30% year to date. So today we're seeing some good news. The pressure was coming after first quarter earnings that came just in line with analysts, which in the space of chips and AI is never enough. Analysts are now positive on the chip maker following the event they had focused on AI. And we saw so many price target raises today. We saw Melius, we saw Bank of America, we saw B. Riley, Cantor Fitzgerald, maybe like 5 or 6 names. And actually this stock doesn't have even one sell rating. So the one number people are very excited about is that their overall data center addressable market is going to increase to 94 billion, up from 75 billion. This target is for 2028. But that was one area that the earnings report kind of disappointed. So much needed relief on the stock for sure.
Okay, Marvell Technology, also Netflix, NFLX. What's going on with Netflix today?
That's a small move, but I think it's a very interesting trend. Netflix is up 38% year to date. Today, small gain adding to that. But what we're seeing is that the streamer is unveiling a deal enabling it to broadcast linear TV on its platform.
Wait, what?
Yes, it's a small French.
Did you hear about this, Carol?
Wait, what?
This is crazy if you've been paying attention to Netflix over the last 15 years.
Yes, it's
Denise,
fascinating. A
tell
streaming
us what's going on.
platform going back to linear TV. And it's very interesting because it's coming just a day after we had a report that the total market share of streaming has actually surpassed broadcasting cable combined. So it's going after French TV TF1.
That's over in France.
It's over in France, but it is part of a big trend. They've been having wrestling, they've been having live sports, live events. So it's a lot more than what Netflix was.
It's exactly right. I mean, I've been covering Netflix for a long time. And when I used to write about Netflix, that was like my beat. There were things that Netflix would never do.
Yeah.
It would never do live programming. It would never do advertising.
Oh.
It's doing all of those things now.
Okay. But it's basically taking their programming and adding it to Netflix offerings.
Exactly.
So content.
Yeah, I mean, to me, it sounds like they're becoming this super app when it comes to content.
Yeah.
They said years ago they want to become HBO before HBO becomes us.
Yeah.
They
Right?
surpassed that many years ago.
And it's interesting you're saying that because they were just commenting on Warner Bros. And Discovery's decision to split into two. And the Netflix co-chief executive was saying that there is a broader shakeout coming up. So clearly they're looking for in that space and the moves that are happening and are picking up some of the pieces.
It's a great way for growing too outside the United States, right? Picking up subscribers, other subscribers.
Yeah, I go to Barry Diller's comments that he made recently in promoting his new book. Netflix is taking over everything, is what he says. He said there's no stopping Netflix.
I feel like when we're going to go to watch something, like that's one of the first things we check out is Netflix, you know?
Yeah.
I don't know. Yeah. All right. That's a wrap. Good stuff. Thank you. Bloomberg News cross-asset reporter Danuta Sokova with our stock movers of the day. Check out our new Stock Movers podcast. It's not even that new anymore. It's kind of, we've had it around for a while. It's really gaining momentum, continuing to. 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcast. That's going to do it for today. Markets closed tomorrow.
Markets closed tomorrow. There is some breaking sports news. This is sort of like a shout out to Ari Agami, who's on vacation right now. He would have us do this headline. The Buss family is selling a majority of the Lakers to Mark Walter. ESPN reporting that Jeannie Buss will continue to serve as governor of the Lakers. ESPN reports. Once again, the Buss family in a deal to sell the majority of ownership of the Lakers.
Yeah,
that's a big deal.
TWG Global CEO Mark Walter. This is according to ESPN. Yeah. And courtesy of our beloved producer, Ari Agami.
I won't tell him you said that.
Origami. Hey, folks. What?
It's funny.
Oh my
I love
God.
it.
It's like being around my family. I mean, this is my family. Give me a hard time. Folks, have a good and safe day tomorrow. Do not go anywhere. We'll be back, though, with you on Friday. Check Bloomberg for all the latest. Balance of Power starts now.
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Tyler Kendall, I'm Joe Matthew. Tonight, the world waits for President Trump to decide whether to join Israel offensively against Iran.
I have ideas as to what to do, but I haven't made a final. I like to make the final decision 1 second before it's due, because things change. I mean, especially with war.
We'll discuss the impacts of potential U.S. involvement both at home and abroad with former Deputy National Security Advisor Megan O'Sullivan.
Plus, the conflict is sending oil surging with the threat of prices going even higher if Iran tries to block shipping through the crucial Strait of Hormuz. We have a look at how the industry is preparing with Mike Summers, President and CEO of the American Petroleum Institute.
And as Republican infighting intensifies over Medicaid cuts and the SALT cap deduction in the Senate's tax and spending bill, Democrats sharpen their attacks against it.
The Republicans have made clear they are willing to throw millions of Americans under the bus so they can help out a handful of their billionaire friends and those billionaire corporations. Democrats are here to fight back.
Still to come, our conversation with Democratic Senator Elizabeth Warren of Massachusetts.
And the Supreme Court